can only be 1-1. Good morning. Morning, Ace. It is 9:15, March 10th. We're going to be streaming trading, options, futures, stocks, looking at the technical analysis, looking at the overall market with SPY. We had jobs report this morning, which we're going to go over. To get some stuff set up here. Only be one. Okay, let's see here. A little Yazzie. Sharing the stream on Twitter. Thank you guys for doing that. I know a few of you have been diligently doing that. Even though you don't have many followers, still appreciate it. Look how quickly the SPY is giving up the bounce from that report. It's pre-market, so who knows, but still. Okay, I shared that on Twitter. Okay, got you guys on Discordian. There's our link for Discord. If you haven't joined, you should. And yeah, I'll read you guys some of the news this morning, some of the data. Let's see, where was it? Yeah, SVIB or whatever is halted. Oh, why didn't we get puts? It might come back, just bankrupt. I was told there'd be hot chicks. Morning, Indy. Good morning, Christopher. Good morning, Rims. Yeah. It's down to like, what, $30 or something? $33. It's all the strikes. Yeah, all the puts are in the money. Jeez. Let's see. U.S. says it is aware of reports of Iran-Saudi resuming diplomatic relations. Wells Fargo says SIVB is worst case. To us, this is part of the test that the largest banks, i.e. the ones that caused the global financial crisis, are today the more resilient portion of both the banking and financial systems. And then U.S. labor February non-farm payrolls was plus 311,000. Consensus was plus 225,000. So higher than expectations. U.S. Fed unemployment rate was 3.6. Consensus was 3.4. So a few more people are unemployed. U.S. Fed average hourly earnings was plus 24%, or plus 0.08% to 3309 over a year, plus 4.6%. U.S. February private sector payrolls plus 265,000, and government payrolls plus 46,000. After the data came out, U.S. short-term interest rates futures jump after jobs report as traders price in shallower Fed rate hike path. That little jump. U.S. Treasury 2-year, 10-year yield curve lessens inversion after U.S. jobs data. last at negative 94.91 basis points. Is it the 2 and the 10 that's like the most inverted it's ever been? I think so. Fed swaps downgrade odds of 50 basis point March rate hike to under 50%. So it was at like 70 something percent after Powell. And then yesterday it was actually dropping. And I think that was maybe because of that SIVB bank, and yeah, it was more dropping because of a recession, and thinking Powell is going to have to pivot for those reasons now. The dollar dropped because of that, but it's probably back up now. And then SIVB is halted. Fed now seen more likely to deliver 25 basis point rate hike this month than a 50 basis point hike based on Fed funds futures pricing. Those 25 basis point, I guess, higher percentage now. Wow. So now we're shifting from inflation, high inflation causing rate hikes to slower rate hikes because of the fear of recession. There's a 61.6% probability the Fed will raise its benchmark rate by 50 basis points in March 22, according to the CME FedWatch tool. Some loud yes. Redfin report: rents dropped to lowest level in a year. Yeah, I saw the Barry tweet about the next end round. Layoffs by U.S. companies over January and February touched the highest since 2009. Isn't that interesting? SVB Financials hired advisors to seek a sale. SVB Financial Group's attempt to raise capital fails. Yesterday's 8.1% decline in the S&P Regional Bank ETF was the largest daily decline since June 2020, which I think was like COVID, which is crazy. Yeah, the largest since the inception of the ETF was in June 2006. Ferrari replaces Tesla as Morgan Stanley's new top pick. Retail investors are retreating from their buy the dip strategy, according to Vanda Research. First Republic Bank sinks 25% pre-market. I was thinking I want to get some way out the money puts on Wells Fargo. Oh my gosh, dude. That is crazy. So just finding like, it'd have to be January's probably 20. I remember when I did this before when I was shorting the banks 2 years ago. It's like a year and a half ago. I was able to find some for a penny. They were so far out of the money, but I still had like almost a year of time. That I doubled my money on them because some of them went to 2 pennies. What was it? Deutsche Bank, I think oh, that one's held up nice actually. That's the one to go for. We'll have to look at this today. Look at the banks to short. Which one's gonna go BK next? That bet me on pretty flat. SPY is actually ending up flat here. It's down 20%, I guess. But flat from where it was, more or less. Had that little pump, but it's back to the lows of yesterday. It's crazy. There's really no relief there at all. So yeah, it seems like the floor is probably gonna break out today. And I need some more contracts. I got one more before bed last night, so I don't know, like here. I almost got one here, I was just too busy. I just like briefly looked at it. I hadn't seen the jobs report yet, but sold off since then. Yeah, because it was actually positive a little bit this morning. That was positive. Okay. Good luck, stay safe. ABX, same X pair. SVB, a Kramer inverse? I don't know, is it? No, I'm not bullish on SPY. Heard some companies buying GME at this price. Oh, really? Thanks for your likes, guys. Early morning pre-market bell likes do not go unrecognized or unloved. Nat gas has had a little rally. I'm gonna kind of keep buying nat gas. I'm up to 5 contracts though, which I'm pretty happy about. Last time it was at this price, I think it was only at like 3, maybe 4, and then it rallied another like 20%, 10%. So it's building a nice inverted head and shoulders. Let's see if it holds. Head, shoulder, shoulder. Need to keep showing support here. Same support is back here. Yeah. All right, 1 minute. Seconds. I'll be looking for some more cover calls in BBBY today. Floor broke out pre-market. Doesn't mean a whole lot. Hey, Jason. Let's get nuts. Thanks for donut, Jason. I appreciate it, man. Thank you. Very generous. Pre-market donut. What do you know? Let's get nuts. All right, ding, ding, ding. There we are. Hey, you with your leaf pear leaf tennis playing fruit. Birds. Oh, do they have earnings? They did. Beat sales. Okay. Beat revenue and sales by a lot. Buy's already coming down here. Oh, some of my calls sold on birds. Hey, what do you know? I think I might just add a short right here on SPY even. Get rid of these lines. All right, I grabbed one more short here. And see where we're at. Yeah, we're already below yesterday's low. Just like that. Start with those lines. Yesterday's low, pre-market low, pre-market high. See where we go. Wanna get out of town? Isn't so red. Holds one. We shall see. Looking at next week, $1.50 covered calls. See if I can sell 20 of these. And okay, SPY's bouncing a little bit here. Thanks for your likes, guys. We're at 14 likes. Jason, again, thank you for your early dono. Legend starting off strong. Birds up 18% on earnings. Silvergate's up 10%. Might be a good short entry on Silvergate. Because of the Soviets. Get him. This thing's already so low though. Phase is up 8%. No idea why. Morning, Brad. Bought some on Weeble. You doing some Silvergate dip buying again? Okay, let me get some. Well, I'm putting an order to close out the covered calls. Expire today. Unfortunate because since you don't get much, you're dealing with such low numbers because the price is so low. You know, you get like 6-7 cents to open it up, but then to close it, it's going to cost, of course, at least 1 cent. Unless you had to expire, which I don't think I want to do. All right, SPY's coming down there now. I'll put an order to close this. Buy new lows there. Whoa, BBY just flushed. Down to 118. I didn't get my cover calls out in time. 116 is that IPO high. Okay, put an order for 20. Happened so fast. Banks, I think, are just plummeting. Buy pop pre-market from the jobs report. But it quickly gave it up even before the market opened. When is Bobby free? Okay, let's see. So BBY broke the low, 1180. Mine's getting a little bounce here. GME's down 2%. Some of my options on birds got filled, I think. Let's see. What filled here? Oh, I was able to sell one call. What the heck? Okay. There's like banks getting halted to the downside right now. GNS is down 6.8%. It's probably just gonna feel the pull of the whole market right now. The reason I'm not as up on these Tesla plays, or if that's just from the extra day, maybe just the morning volatility widen the spreads. I think, yeah, that's probably what it is. GME puts up to 72%. I kind of want to get another short on MES. I just kind of pull the trigger early. Hold on. Yeah, this might be our crash. We might be finally getting it. Oh, we need a catalyst, SIVB or SVB, whatever. That's just dumping all banks right now. See what happens here at this low. And we hope that all large institutional call buyers going to flood into BBBY. It on late to the game retail. What? Yeah, it's gonna rally at some point. I mean, the whole market's getting dumped on right now. So while BBY I don't think really moves with the market much, this much selling pressure, I think it's seeing some of it. Yes, SPY can get halted. Has to actually dump though. You'll see it. You'll probably see it this year. Maybe not halted, but BBY just broke through that 1160. So yeah, 88's my next target on there. Alright, I shorted another MES. Oh, low, Bobby go. I don't know. One of those cover calls got filled. Oh, birds bounce back up. There you go. Let's fill some contracts here. Yeah, I mean 88's all-time low, so we'll see. See what happens at $1. If it gets down there. But I mean, the market as a whole right now is just selling everything, which probably isn't helping. Yeah, I mean, this, look at the SPY. I'm gonna wait to get more contracts. Or like we could get a bounce out of all of this, but it does seem like the market's definitely scared. Maybe some capitulation even getting going. So that's a nice level right there. 87.26. What contracts am I at? I'm at 4 on the MES. I just had to drink coffee. I know it is crazy. Like it happens. It happens fast. If you're not already positioned for it, you got to be ready to pull the trigger. Um, the banks. The banks. I mean, it started with. I mean, yeah. It's been. Why was it up that high? That's the reason. Like, why was it up here? This all pump was from Bostic. And then we had bearish Powell, banks going bankrupt. Yeah, that's the only catalyst that you really need. Biden's budget report thing that probably had a big effect on yesterday. It's just the fear and the contagion that could bring. You know, the tide goes out, so we find out who's been swimming naked, and the effect of one bank can have a ripple on a lot. 88's the low, so I don't know. We'll see what happens at $1 if it gets down there. Very weak SPY. BY is already down 6%. This is crazy. Thanks for your thumbs up, guys. I appreciate it. Pretty exciting morning so far. 19 likes. You guys are 19 legends in there. Hidden amongst the crowd. We got 113 on BBY. Down 8%. GME is down 3.5, so we're into the 16s. And I think we could get into the 15s. Tesla's only down 1.5 so far. SPY is still melting down. Morning, Donro. Flush to 80. I don't know why 80 is people's number. You'll get a pullback at some point, but yeah, we maybe dropped, you know, we've almost dropped 1%, so the pullback might not be that, well, might be pretty low by then. Guess which one I did. uh... So now we're BY is close to IPO price. There's actually IPO price on it. What did I actually IPO at? Here, $1. So about $1. Time traveled. Yep. Wells Fargo. Yeah, dude, look at these banks. That's crazy. Deutsche Bank. Look at that gap. Credit Suisse is still trading. Is just pinning to the floor. Evergrande's the only one that's up. Nice. $38, $387.26. This is kind of that big level from back here. I put in support from here, resistance from here, resistance from back here. This level's been tested a lot. Yeah, this is where we started the year at. Right here. We're getting there. Getting back all those ridiculous gains in January. Yeah, RIP banks. $1130 is the low on BBY so far. Like SPY's slowing down. Did kind of find that support just above my line there. GME's still in the 16s. I put a line here. This is earnings. They announced earnings March 21st, which is hilarious that they did it on March 21st. Might be a big rip on GME then. You're just seeing fear in banks because of SIVB. It's like a bank run. Where is Tesla still holding up? Pretty good, yeah. There the bag is. Yeah, short interest came out for BBY. It's actually, yeah, it's like 120 something percent on that report. In the room with us right now. I'd like my birds contracts to keep getting filled. Okay. ENS is down 11% today. How's that dip buy on Silvergate going? If I should keep these contracts or just get rid of them. That is interesting. BY is kind of bouncing seemingly with the market there. Bank doesn't go bankrupt. Buy bouncing up there to VWAP. Hold my contracts. Might add on bounces. We'll see. Buy's ripping up here a bit. Don't buy till 10 cents. Yikes. Okay, let me see if I can. Oh, they got rolled. Nice. So I rolled my 1.5 cash grid puts next week. Received $150 credit. I also got. Did that just fill? Yeah, I got 1.5 calls for next week. Covered calls. That was $120 in credit. So trying to profit some on this move down. At least mitigate some of the losses, bring cost basis down, etc., etc. Nothing on here filled yet. You just bought a SPY put right now? Teardrop downward? We'll see, yeah. That 1160 is the high on IPO day. Not sure those supports and resistances matter a whole lot from like 30 years ago. Yeah, you could do calls today. I mean, the bounce might be small, but you'll probably get some bounce. Go to 80 cents. I'm not sure. I don't know where people are getting this 80 cents from. Uh, like round numbers, dollar maybe. Um, I could see them trying to drop it below $1 just so it starts to fall out of compliance. Not sure if that'll be able to happen, but if they do, then all-time low is 88 cents. Not 80, but 88. They're getting a little pop on SI. Took 387, it's curling up a bit. Yeah, I mean the market's down what 0.70% at this point, so could end up being a big like 2-3% day still. You know, where we end up down here. But it is just slowing down from that first initial sell-off. And it kind of bounced on this level. This is a pretty big level it bounced on actually. So I might be grabbing shorts on bounces a bit, but after it's come down quite a bit, I'm a little more hesitant to keep adding into it, as you know, the more it goes down, the closer you're getting to the bottom, right? Or a rally. This VWAP's pretty low here on SPY. BY's bouncing up here a little bit. GME also 17 half puts in GME are In the money. I'm gonna leave it though. I think we're bearish into Opex, which is next Friday. And I think that's also quarterly, isn't it? The March Opex. GTII up 10%. That's a nice looking bull flag there. BBBY breaking up through VWAP now. I'd probably grab another short at like 392. And that pre-market high. What that's supposed to be? Yeah. It's so oversold on the hourly. Might get some just chop and consolidation today. Bed bugs and blue waffle. Interesting to see it move with the market though, seemingly. Not barcoding yet. Actually, look at this volume. We got good. Oh, yeah. That's good volume this morning, I think. Yeah, it's pretty good. So that we want to see volume start to pick up. Even if it's dropping, it's showing that you're getting buying pressure, getting a floor being established. It's not quite there yet, but if you look, it has slowly started picking up as we've dropped through that floor. You want to see it with price action stabilizing also, of course, but how high will we go today? I don't know. This is a pretty solid bounce so far, and kind of uncharacteristic for BBBY because it's not barcoding. Looks like it's kind of moving with the market. Buys moving up now pretty quick. Tesla's green. Yeah, we might just get a reverse. Bit of a bounce on everything. Thanks for your likes, guys. I appreciate it. Pretty big sell-off this morning with the banks pulling the whole market down. Got 29 likes. Well done. Still halted. Any news? Yeah. It could be a good short level. I'm going to be patient. But that is a level we have drawn there at 390. Where's that even from? Oh, yesterday's low. Be patient to get more. Because, yeah, I've got enough. And my cost base isn't great. 392,825. So a lot of stocks do, but there's lots that don't. Lots that move more with the Dow or NASDAQ. SPY is a good reference for the market overall. Stocks will outpace it though to the upside and the downside. That's kind of the reason not to own the SPY, but just buying the SPY is totally a good strategy too. It's very simple and works. But yeah, you're looking for ones that outpace SPY to the upside if you're going long, and outpace the downside if you're going short. SPY is the original meme stock, that's right. Okay. Yeah, that volume this morning is not bad. We've got 200,000 200,000 on the bid at $1 for BBBY. A little bit of bid support at 1170. SPY is kind of chilling out a bit. We might get a test of today's open still. Not convinced though. Not convinced yet. That gas is bouncing up a bit. The GME hasn't really had a big down day yet. We haven't had any 6-7% days down on it, which is kind of peculiar as well. Just a slow grind down. BTII up 7% still. Birds. Yeah, it bounced with the market. The whole market bounced there. So everything bounced. Even BBY bounced. Look at this. This is interesting. Yeah, this is weird. Hasn't started barcoding yet. Volume is a little bit better than yesterday. And we're seemingly moving somewhat with the SPY. Or it's just coincidence at this point, but I don't know. Okay, I got some cover calls for next week. $1.50. I got 60 of them. I'll wait, see where this bounce goes. Maybe I'll do some more cover call. Lunar's creeping up. Coincidence. Oh yeah, he tweeted again, RC. All those charts look the same. Once the volatility starts picking up, it pulls, has more weight. But yeah, we haven't. I don't know if this is with SPY or not, but I feel like I haven't seen this. I hope it's not, because I don't want to just move a SPY. I already have that. I already have GME. Thanks. I've got enough of that. Yeah, I did. Let's look at it. Let's see. He's just a massive troll. Does this mean I don't have to pay back Silicon Valley Bank? Just fully trolling. Looks like I'm sure it'll go back down. The last day of ETF FTD? Maybe. I don't track that very tight. Could be right though. GTII holding up pretty well. Sort of bull flag on that thing. It has made quite a rebound here. So is the market, I say. Could have exited. Could have exited the puts for next week on that drop this morning. Might have been smart. I'm gonna ride it now until next week. I don't think this will be over this week. Next week, I think we'll be mulling it over the weekend. We'll depends on where we close today, but I don't think this move is over today to the downside. I saw that picture you took of that owl. Owls can be creepy, man. Might be a good short here. Wait though, we've got MACD's bullish. We're over the 9. Over VWAP. Kind of rejecting this, but I feel like we might be able to get to open, or maybe even that little gap fill. Hells are a hoot. Tesla's up 1%. Well done, Tesla. Look at you, Tesla. Look at you go. Yeah, they still haven't turned on the barcode algo. Taking a red candle there. Oh, on GME. Weekly like this week? You dump them already? Yeah, I just have next week's. They're up 80% this morning, but I wait. I looked at selling, it was just too quick. Coming into Opex. I think now that GME's announced earnings, I think they have a green light to give it some big 8% days. Fine with a wick down to VWAP. I'll do some more cover calls in BBY. I have to do so many, so many shares, such a low share price. It kind of sucks for trading options because it's a lot more in fees and a lot more just getting in and out more difficult. Get it? I think it's a demise of my own shares. Yeah, yep. I know. I was gonna talk about that. So GME historically has had the best ops on Tuesdays. Not just any Tuesdays, but Tuesdays after our monthly options expiration. So the Opex for March is 17th, which is the third Friday of each month, is when you have your monthly options expiration. So this period is SLD, supplemental liquidity deposit, from what I think is Wednesday to Tuesday, Wednesday. Donald, correct me on that. But anyways, pops have historically been after Opex, the next week after Opex on GME, and specifically even Tuesdays, because that's T+2 from when it expires. That's when the market makers have to deliver the shares that were exercised on Friday. They have 2 days to deliver. And this is literally right when GME is having earnings. So could be fireworks. I don't think JPal's speaking today, no. AMC squeeze soon? I have no idea. Buys coming down again, back to VWAP. That might be the top there. Look at this though. BY is moving with the SPY. Huh. 250K sell? No, I didn't see it. Better not speak today. This one was end of day on the 15th to the 24th. So Wednesday to the next Friday. Okay. That's the SLD period. Yeah, so I'm thinking GME will probably come down before then. Typically, it comes down into Opex. I think the SPY also just during SLD. Maybe not Monday, Tuesday, I don't know, but once SLD starts, Wednesday, Thursday, Friday, I think next week should be red. And then potentially the week after, big rip. I don't know. I don't know how big though. We have no support in the options chain on GME. Dead. My hopes up. He is a stomach control. SPY, they're down through VWAP. We gotta wait and see what GME, once it's found its bottom. Geez, that might have been a good short up there. It's just so early still. I'm trying to be patient. Be patient. How many contracts? We got 4, not bad. I'll be patient. I call it crash into earnings. Yeah, we just gotta see, like, we might still be repeating last year on GME. It's just stretched out. Like, that's still a possibility. Just have to see this. I'm waiting for these big red days, hoping those come. And a solid support, and maybe RSI divergence to sprinkle on top. Then you go long like Donkey Kong. And BBY also has a lot of interesting catalysts coming up this month. Potential. I don't even know all of them, but by memory. Should bleed all next week, early the week after. Yeah, especially now with all this other stuff going on with the market. Bear flag outcome. This? Throw in a golden cross and you have a deal. I don't think you'd get a golden cross that quick on GME. See. Yeah, the golden cross will happen if we have a huge move. It will happen once that huge move is basically done. That might be signaling the top. It crossing. Unless it stays up there. 5 minute. This right here. This little bear flag. How low can you go? You go to 0, like any stock. I've got support right here drawn at 116, but we did break that this morning. See if it holds up there. It's testing it right now. After that, I mean, the next level is really all-time lows. The low after IPO, which was 88 cents. We're getting close to IPO prices. I think the IPO is about $1. And it died after. Yeah. Yeah, look at this BBY moving with the SPY. This is very unusual. And we're not barcoding. Some sort of different algo is turned on, which might be a good thing. Volume this morning is increasing also. The last 3 mornings we've been increasing on volume. Other than that morning. I think we're getting there. We're getting there on BBY. The more nervous you guys get, the closer we are. Tops is up 3%, 3.5%. That is neat. BuzzFeed's up 4%. SPY's coming down here. Might just be kind of a choppy day, or it might see some like serious down moves. Yeah, I'm gonna short another one here. Dang it, man. Gotten a higher fill. Oh well. I wasn't sure how much of a bounce we'd get. That if that's the whole bounce, that's pretty weak. I mean, considering the data that came out this morning was somewhat bullish, and this is all it gave us, and then it literally sold off before the market even opened. That was awful. Might want to get another one even. Wait, oh wait. Hold until pink shades. Then keep holding. Now BBY is not really moving with the market as much, holding that level so far. It starts barcoding also. Until your computer poops. See the earnings on Birdstone? Beat revenue. Beat sales. That's what's up. Oil's coming down. The oil's held up really well. Dollar's still dropping though. Might wait to go short. I want to see the dollar start to rally. Alt Alliance. Yeah. It's bouncing up here now. Yeah, I don't think we'll get much of a flush if the dollar's still dropping. This needs to start rallying, I think. Till then, it could just chop around or. Looks like a ball dropped on alt. I forget I can scale out. I should start scaling out and in more. Could have scaled out some here. I'm gonna do that. Get back down here. I might drop a contract or two in case we bounce. A little bounce and everything. Bed Bath kind of still looks like it's moving with the SPY actually. Interesting. SI up 5%. GTII holding up that 5%. Birds is holding up pretty well actually. Gruyere. Done well, huh? Almost doubled. October. The plane company, I think, yeah. News? How did they beat? Sales 199 beat estimate 199. UPS missed. I don't know why it's rallying. Yeah, I know. That's what I'm thinking. Maybe they flipped the algo to the SPY. We haven't seen barcoding yet this morning. Volume this hour is good. It's increasing from the last 3 days. Keeps increasing. Make the like on 1 minute. Okay. I don't look at like 1 minute for technical analysis. Buys coming down here a little bit more. Tesla's still holding on. Barely green. Graphene's up 1%. Yellen says, when banks experience financial losses, it is and should be a matter of concern. Most inflation we've seen reflects supply side issues. Mm-hmm. Mm-hmm. Anxiety. That's not good.
Very much. The stock is at 15-year highs right now, and a lot else is struggling. How are you guys doing that?
Well, we posted some very good results yesterday, and we've had our second most profitable year in our history. We're been building on a multi-year strategic approach, a plan that has been taking, a company that was well known for mall-based retail directed to kids and going through an accelerated digital transformation and elevating and integrating
beat EPS,
and
beat
expanding
revenue.
Our retail footprint into tourist and hospitality.
That's what's up.
And building out our e-commerce business with a complete omni-channel approach that's giving us a platform to drive business and recognize that our most powerful asset is the equity we have in this brand.
That's the theory. Stock market
and
crash
that we have an opportunity to monetize that equity. Along with that has been an expansion of the addressable market.
Well, with the stock market crashing, GME will
We've
also be crashing.
Risen to be, an iconic status at
Possible
this point as a brand.
Rips out of it,
40% of our sales and
everything's going to crash
gifting
first.
and collectibles going to teens and adults at this point.
Interesting. So that gifting and collectibles, is that the type of thing that you might like pick up in a fancy hotel lobby or something while you're traveling? Or, they've got now the new airport in New York has got like tons of fancy toys and stuff. Is that part of the new business approach?
Well, fancy might be, a relative term.
Sure.
We're a stuffed animal, and even though we consider ourselves premium, we wouldn't consider ourselves luxury. And we have addressable price points and very accessible price points, even for you can get at the birthday treat bear in our stores by paying your
the banks,
age,
SIVB is
on the month of your
making
birthday.
all the banks sell off.
We're accessible, but from the giftables and collectibles perspective,
that's pulling the whole market down.
One, we're multi-generational now. So people that played and had Build-A-Bears and made their furry friend when they were young, now there's a lot of nostalgia, and there's this emerging trend called kidulting, and Build-A-Bear is right in the fray on that.
What the heck? I've never heard of that.
And experience some things that they did. Perhaps this was driven by COVID, maybe not. Some things that they did when they were young. And we also
getting to move up here through VWAP.
Some best-in-class
gap fill
partnerships where we're able to mash up our brand with other very popular brands that the older consumer likes. and those are very collectible, things like Harry Potter or Pokemon, these evergreen types of products. And we launch new and exciting new
I gotta scale
brands
out.
all the
Scale
time
in.
in conjunction with
I've been scaling in. I
ours.
gotta remember to
And
drop some off
we
at Lowe's.
get a lot of traction, and that helps us be, top of mind for people. One of our most recent ones that we launched in something we call the Bear Cave is our Ted Lasso bear, which we recently brought out. I know,
Lasso.
right? You want one now, right? You didn't know you wanted to build a bear, but now you do.
I can hear the control room in the newsroom right now. That just got a reaction. The branding's a big part of it. It's kind of like, not to bring up another consumer brand, but I think about how Lego's partnered with popular franchises that have really drawn
just
people
waking
in.
up there on Spy.
Yeah, there is some similarities in our strategies, and Lego's a terrific company that resonates with multi-generations as well.
Right.
Lego
we
makes a
consider
killing.
ourselves a part of the makers movement, as I'm sure that they do. We were a creative, open-ended construct.
Yeah, maybe Tenzin. We'll see. 88's all-time low, so
adults that are
we'll see.
driving that makers movement of the millennials and Gen Xers, and Build-A-Bear was a place for them to explore and engage and empower themselves to do that. So, we believe that we were, clearly a pioneer in what is now called experiential retail. We really pushed the envelope on what plush toys could be. We are a reinventor of that. We are a disruptor of retail. And we see our next 25 years.
Thanks for your likes, guys. I appreciate it.
Our 25th anniversary.
All 36 of you.
A continued
Quite a morning
opportunity
so
to
far.
drive this brand in multiple revenue streams, including entertainment and outbound licensing. And we believe that opportunity is built on, again, not only the iconic status of the Build-A-Bear itself, but that experience that we provide, that engagement that we provide. We ultimately have a great relationship with our guests of all of these different ages. Lots of the addressable market being larger, but we also collect that data, and that's a part of our digital transformation. So we have first-party data, and the brand now garners up to and more than 10 billion impressions a year because of the PR power that the brand has, which is very helpful for us from a total brand asset perspective.
Okay. Building bears and building reputation with investors too, paying out a special dividend, as you mentioned, the profit too. So
everyone did
earnings
war
on the
what's
bottom line
happening.
Keeping shareholders very happy right now. Sharon, thanks for the rundown of the framework. We'll definitely be in touch and follow up this conversation. Appreciate it.
Yeah, thank you, and appreciation
moving up a little bit
for
here.
letting me take a chance to talk about this today, and that we're really proud of that record-breaking year, and also, with the guidance that we provided as well on continuing to expect to see another record-breaking year next year.
Okay, great stuff, and of course, the Ted Lasso bear, pretty good. Well, Sharon, real quick, actually, one thing that are you going to make pet toys? Can we go in and build something for our dog you can tear up?
Oh, you know what? That's a great idea. In fact, we have an outbound license relationship with one of the #1 pet toy manufacturers, and we had pet toys available at PetSmart for holiday, and they'll be available on a broader basis this year, and as well as pet.
Yeah, we'll see if it
clothing,
retests
so
this high from earlier.
Thanks a lot. Appreciate Sharon
I think
Price,
we
John, President
could
and
break
CEO at
to the upside.
BBBY, the
I don't see us
shares trading
maybe
at
moving past the
15-year
392,
highs
but
after a record-breaking quarter. Charmaster is standing by. Let's keep with the theme of stocks near the highs.
But little short squeeze rallies can come out of nowhere and be aggressive. So all of you, Mr. Invest, that buy the dip and pump it. BY is holding above that line we have there, that 116, that high from the IPO of Bed Bath & Beyond in 1992. And it looks like it's maybe got its barcode back on. Me's melting up a little bit. Be aggressive. Tesla's back to positive 1.5%. Don't want it to be a big red Friday. Markets don't like to do that. it doesn't show signs of conviction or strength, the next week is set up pretty ugly if that happens. Okay, so I have 40 cash secured puts for next Friday now at $1.50. Got these all rolled over this morning. And then I rolled over my closed my covered calls and opened new ones for $1.50 for next week. So 20 of those. I could do 4 more, I suppose, but fine with 20. And then on the long term, where I have majority of the BBBY, show you what we did. So this one, I already had the two straight cover calls for next week. And some of those, let's see, 30 of those. And I opened up 60 of the 1.5s for next week. So that's 9,000 shares worth. I have 16,000 on here, so it basically gives me the remainder that are naked or uncovered in case we get crazy move over the weekend from news. But I need to, while the momentum is down and TA wise doesn't seem like we're gonna rip yet, I need to be making some money on the downside for the big red Friday market. By the dump today. The banks from yesterday, SIVB. If you look at banks, the last couple days have been awful, and it's only gotten worse. I think SIVB is going to go bankrupt. So they have a big pull in the market. This is Wells Fargo. I mean, this is a huge move on Wells Fargo. The whole financial sector ETF had its biggest drop in the last couple days since COVID. So combine that with, of course, why were we up this high in the first place? Yeah. Powell being hawkish. Biden's budget report. Yeah, BY. Yeah, it looks like it's barcoding now. I still have my shorts. I've added a couple in here. I should have taken some off here. I forget to scale out, but I'm gonna try and remember to do that. If we come back down here and retest, I'll probably drop a couple shorts. If it keeps going, I'll stop. Or if it bounces, I'll stop, I guess. But I'll add to it. I don't know if I'll add to the shorts. Maybe. If we come up here, like, we fill this gap and come up to this little bounce from yesterday, 392, I'll add to some shorts. But I'm trading futures, so it's not, I don't have time to K or anything like that. It's basically like trading shares. I can, you know, a little more flexibility. Session is here. GME is getting to pull down a little bit from this. So I think my Tesla play was up, the most was like 130, 140%. Sold one at that point. I sold one at 100%. Hopefully I get max profit on this thing though. Got until next Friday. I need Tesla at 140. Needed to fill this gap here. I think it can do it. I need it below 13. I think it can do that too. Well, what's nice about spreads is I'm not trying to time it perfectly with my exit, because the short leg on it kind of mitigates that. It's fine if it happens slowly, it just has to happen before that time frame. Buys coming down here. Setting up an engulfing candle. Looks just more like some consolidation and chop. You know, overall greater downtrend. So potentially breaking this low today still. It is pretty oversold on the hourly, but doesn't mean it can't keep coming down. The volume this morning is massive. Look at that. Tons of selling this morning. Wow. That's crazy. Recession is, yeah, we're in a recession. First Republic Bank. Yeah, there's some that are halted still. Not just SIVB. BY broke that level.
That wouldn't be a totally destructive event. That's
Broke
what
that
makes
116.
a strong chart to me. Is that even when
113
like
is the low.
downside case still looks pretty reasonable.
Might not
within
hold
the
today
trend.
though.
How about for solar, Renita? That's the other one here this morning.
Highs
That's been
coming
at highs
down.
and it's holding on. As some of the other
They'll
green
just
energy
chop around
stocks
this
have
range.
faltered a little bit. For solar, for the most part, still looking pretty good.
Well, this one's trying to hold on a little bit, although today we saw it
Looked
down
like it
a
was
little bit,
2021.
likely on general market sentiment. But
That's a good
Citibank
point.
raised this price target to $220 from $75 a share and kept it at neutral. Now, hold on for a second.
So they're playing catch up.
Exactly. Now, while it sounds big, it's not, because this stock was upgraded by several other rating agencies after the Inflation Reduction Act came about. And this was months ago. And so
That's
since
why I
a
just
new
chopped around
analyst
this
took over
range now.
coverage at Citi, they raised the price target to akin to where its peers put it. And so this company, or this analyst, expects the company to see continued unprecedented growth. But sees that near-term uncertainty really hitting in from the U.S. residential sector, which makes sense because the U.S. residential solar sector, the U.S. residential sector itself is uncertain as well. And so the firm does prefer, though, geographically diverse names with European exposure when it comes to this sector, as well as utility and commercial scale versus residential exposure. So its top picks are things like Enphase Energy. It's looking at Skulls Technologies, and Citi's least preferred names are Generac and SunPower. But a few other analysts also raised the price target a little bit. These are rating agencies who had raised the price target into the triple digits months ago, but now they've boosted their price targets a little bit more. KeyBank had maintained an overweight rating, raised the price target to 227 from 201, and then Citigroup, as we know,
See if
raised
SPY
it to
breaks through
220,
support here.
maintaining it at neutral.
In their case, though, they're a little bit late to the game.
Late to the game, exactly.
Yeah. All right, so they kind of missed the boat there. All right, Kevin Green, how's it look to you? I mean, is this chart still have momentum?
It does have momentum here, Oliver, but one thing to note, we might see a little bit of a pullback here, and we're going to show you why. If you look at the chart, I have another regression line that is on there. We're going to look at point A here, and once again, that regression line, we are going
back
to
down here a
utilize
bit.
the start time of August of last year, pretty much that gap up from that earnings announcement here. And we can see that right now we are actually heading towards the upper end of that range, or that standard deviation range. And for this stock, we have seen this several different times where it comes back to the mean, even tests the mean, or even goes through it. So if you're looking at a potential reversal here, you could look at a pullback at $190.
That's interesting, Jim.
Potential support just based on this trend, but the long-term setup is still
Up on
bullish
carbs,
at this point in time. Another thing to just keep
minimal
in mind,
calories,
previous resistance becomes support.
eat protein from time to time.
At $180.50.
I'll have to
just
remember
keep that on your radar. It doesn't mean that that's going to be an immediate.
When you get to
area
daily
that you
oversold
potentially
territory
touch.
on
First
Bed Bath.
and foremost, going to look at that regression line.
Jeez, man,
It is
that's going to
also
be
an
tough.
area
The way
to
it's
just
melting down
keep
so
in mind
slowly.
here. And then last but not least,
You have to have some
point C
fast
is
days
showing
down.
volume. You want to have increasing volume as the price goes up. That shows conviction in the trade.
Hit 4,000
We've had that
shares
throughout
today.
the whole
Congratulations.
movement to the upside here, except for now. We're
I'm waiting for this RSI divergence that hopefully happens here. So I'm fine if the RSI gets oversold. I just don't want to get past this 1911 oversold.
Steam in the near term. potentially
Stay
going
above
back
that.
to that support level before trying to retest and move to the upside here.
Got it. All right. Nice chart.
Looking
Really
pretty
at the high
bearish,
end of
though.
that, channel upwards, so it's still looking
Increasing
pretty
volume
good,
is
but,
maybe a good
maybe
sign,
the
but
nosebleeds got to slow down
yeah,
a
there's
tiny
no
bit. Thanks for the look at the technicals, Kevin
no
Green.
sign of
Thanks for the
anything good yet
fundamentals.
to the
Really
upside.
young. We'll get an update on Silicon Valley Bank from Jenny after the break, and then it's time
Pretty
for market
oversold on
meetup.
the hourly.
The stocks have held on to the lows, but the Russell's still pretty close to them, so we're not.
When it broke that inverted head and shoulders, I thought it might come back down and test this, or potentially break it. That's when I had a choice to either hold on or cut losses and wait. I decided to hold because I'm waiting for momentum to the upside. It very well could have been that same price. So this is me rationalizing my hold. But that's why I'm aggressive with covered calls now. Going to 80 cents. Why 80 cents? Where does that number come from? Why not 50 cents or 25 cents or 67 cents or 92 cents? $127. 136 was kind of a big break. It's 127 the low from over there. Yeah. Read that. Yeah, it breaking the inverted head and shoulders was a good sign that this engulfing candle wasn't necessarily the bottom. Because a couple days after that, it looked like it still was, because we had good price action, then it came back down a little bit, it was making inverted head and shoulders, and then this day when it broke it, I'm like, okay. And then, yeah, of course, I guess breaking this low of 127 too. Another big break. Support. Okay, 2 cents. I have 88 on the chart, so why do you say 80? That's what I'm saying. Like, I hear 80 often from people, and I don't have any explanation.
Deutsche Bank echoing very similar sentiment today, saying, really, is this another mini wobble on the front or the start of something bigger? JP Morgan, however, actually thinks that the sell-off really is for the broader banks is overdone at this point. This was the most positive note I could find. This analyst pointed to the fact that larger banks do have more liquidity than SVB and are more diversified with their broader business models. So some optimism to leave you with, Oliver, although the situation right now not looking too good. And it does beg the big question of what does this mean for the other banks?
Yeah, well, so far nothing good, but nothing disastrous either just yet, it seems, for the main financials. For the S&P 500, a big sell-off, but overall for the market, still stable, 0.5%.
Forgot about covered calls on my E-Trade.
George Tillis and Nick Dirakis are with me. George is our senior markets correspondent. Nick's a financial risk management director at TD Ameritrade. Nick, how do you think about managing risk on a day that really doesn't have a lot of comparables other than, we don't want to say it, but you know when, GFC type bank style action, except at least it's not for, you know, the Wall Street firms. This is kind of the Main Street crisis we're getting in regional banks. What do you make of it?
Yeah, Oliver, I mean, this is a really great lesson, and I think, you know, diversification, it's a really great lesson in leverage. It's a really great lesson in...
So I like to be different. You're not different. You're saying the same thing everyone else says. A random arbitrary number in the penny range.
That JP Morgan note, because there's a whole wide range of impacts here, right? People that are levered up in you know, one or two of these names that are really getting hit the hardest. You know, that's you know, that's a sad situation, and you ultimately, you know, have to meet.
Okay, no reason for your 80.
Things like that happen. I think that's what you're seeing.
You've probably, you know what it is. You probably subliminally picked 80 cents because you've seen other people say that.
Right, you're seeing a lot of the, you know, the really high quality diversified banks down, you know, 10 to 15%, 30% in some cases over the last couple of days, internationally as well. Right? There's a pretty big spillover effect, even though we've really only seen one bank have to liquidate some of its portfolio. So I think it's a pretty massive spillover effect, and just a good reminder as well that information travels so quickly now. So I think all of that said, this can be a real buying opportunity for some higher quality financial names. One thing that we look at from a risk perspective across all sectors is kind of what is the funding, and I find myself always going back and talking about Target. I remember when Target evolved their business model all those years ago during the pandemic, and they set themselves up so well for in-person but also online sales. Right? You think about just expanding how your business operates, and for these really narrowly focused financial institutions, if they're only getting funds from startups, if they're only getting funds from from crypto exchanges, that's a very narrow and potentially risky source of funds. Versus take a JP Morgan or a Bank of America that has operations globally, and funding and revenue coming from all kinds of revenue streams, mortgages and credit cards, and the more broad, the more well you're able to handle any kind of one shock. So a really good lesson, just I think in general, an idiosyncratic risk of
Sure.
Individual stock risk, and the more narrow the funding and more narrow the focus of that company, the larger the potential risk when something goes wrong within that sector. So
Yeah.
fantastic lesson already, and it's going to be really interesting to see how this plays out over the next next couple of weeks as they talk further about sale.
To Nick's point, the idiosyncratic nature of where this began in the crypto and digital assets, George, it's now kind of spread, right, where Silvergate is like a pure crypto play, so they could kind of blame it all on that. Silicon Valley has some
Buys coming up here through
pure
the
crypto
WAP.
lender, and then all of a sudden you get First Republic Bank, which is like
What's up, Jan?
on every other corner in a lot of cities, and suddenly
Down
that was
4% is a
down
miracle.
45%. So how do we assess what is
I
related
like
to
Bobby.
the
I like
digital
Ricky Bobby.
asset economy and the problems there? And then
One
what
zero
is this
today.
thing kind of like building with interest rates and
But buying calls, guys, sell 'em.
Now that it's
Whoa,
sort of
SPY's ripping
breaking.
there.
That's the thing. All of this has been building. It's not necessarily something that's just come out of the last, few months or so. We know Silvergate's had problems
I'm thinking
for
we'll see what happens at $1.
just based on
Nice
the stock
even number.
trajectory, the FTX exposure
So far,
that they
the
have.
supports from the
And again,
90s haven't really done
idiosyncratic
much.
risk it has to crypto, but I think if you just consider what's happening here is
So,
the cost of money. The cost
now
of
we'll just
money
maybe
has
look
been
at even
incrementally
numbers.
increasing.
So
higher,
$1,
that's putting,
75
liquidity
cents.
pressures across the board. tightening
Maybe
credit
88 cents will have something
conditions,
because that is all-time
and
low.
creating problems in the financial sector, and of course, it's trickling down to the regular economy. And tighter financial conditions.
Maybe it doesn't go
make,
under $1. This might be the
liquidity,
low. Who knows?
Scarce, and that's again what we're actually
I'm not seeing any
seeing
signs of it
manifest
yet,
here.
but
it is, I think, going along with Nick, it is
the only thing I'm seeing that's
idiosyncratic,
maybe
mostly,
showing that's getting
very
to a low is the
specific and
increased
narrow,
volume.
Especially the Silicon Valley Bank, which
Got a
essentially has
$250,000 purchase
its
at
assets
$1
tied up
there.
in, illiquid venture capital equity that effectively won't go in the public markets because there's no appetite for that.
By
right now
wicking to that
because of the fact
kind of
that
level we have
interest
drawn
rates
from
have been
before,
rising and
390,
financial
53.
conditions are tighter. So I
If it
think
breaks
this is an
that, fills this
opportunistic,
gap.
Environment for potentially some of the
Pin
larger
the ribbon
money
upon your
center banks.
chest,
Even
Mr.
JP
Invest.
Morgan was trading, is actually trading higher right now. I think that the market is telling us that this is not necessarily going to spill over into the major money center banks, but maybe more focal into some of these smaller regional banks, or again,
Okay, there's a break
asset-specific
on it.
banks like,
SPY's
Silvergate and
getting
of course,
close to open.
Silicon Valley Bank.
Is that any better
Open up right
necessarily,
here.
George? I mean,
Gap
I
fills
guess
to
the reach of the big banks is
391.37.
broader, but I mean, these are not really supposed to be risk points.
GME is
right?
not
You're
really getting a
supposed to
move
be
with
able to go
it.
to a regional bank
It's just the
and
banks
deal
maybe
and not
moving
have
up.
Any worries?
Tesla's up 2%.
Yeah, well, as it comes down to the portfolio, the assets
They
on
have
the
some nice
portfolio,
shorting opportunities,
regional
I think,
banks
up
typically
here.
have a lot of commercial loans, maybe auto loans, and again, these are a little bit more risky on a weighted capital basis, and that's why they're selling off faster. The other thing is they're
Tesla
more
also is
sensitive
kind of
to
bouncing
interest
off
rate
that 50,
sensitivity,
which
especially the inversion of the 2s and
ugly.
10s, which, by the way, if you look at the 2-year yield, it's collapsed. It's
yeah.
down about 50
Yeah.
basis points in the last few
That's
days.
why the
So
market's
Yeah, if you're gonna get
It's
calls,
lagging,
that's true. Get them.
Yeah.
yeah,
They're
the
still
2s
so
and
expensive
10s
though. The
lagging,
IV
that's helping
on Leaps
the
is just
financial,
crazy. It's in the 200%
situation
still.
better. But the challenge
In
is right now
January,
is
yeah,
the
200%.
Fed can't do anything
IV
to bail
is
these
wild.
banks out outside of a direct bailout or balance sheet.
I forgot to 2025, and it's still
because of the fact that they're
174%.
dealing with inflation. So that's where the challenge lies here, and that's why there's still risks across the board that you have to consider.
All right, well, FRC's now shaved off a lot of those losses, lower just by 15%. Market's trying to come back. I got to think it's got a lot to do with that rally in bonds you just mentioned.
Maybe diluted.
2-year coming in, 50 bips, no longer an option according to Fed funds futures. So the market will, of course, take that as its morphine. Nothing else matters.
Okay, sold some more covered calls.
Your local bank can blow up, and there could be a run on it. But as long as the Fed doesn't hike anymore, okay, buy some tech. I'll see you this afternoon. Trading 360 with Nicole Petalides is up next.
Okay, I sold the 1.5 cover calls. For some reason, they filled. But a $2 January 2024 call is less likely to expire worthless. And 150. Eyes ripping up here. Gap almost filled. Alright, SPY filled that gap. Tesla's up 2.5. Alright, Jan, have a good time, buddy. Ops is up 9%. Gap filled, now we're getting a red candle. So pre-market high I've got marked up there. Look at that, just that move and SPY came out of oversold in the hourly. Yeah, I mean, this is a big level if this breaks, so far it's showing some support there. But that level we hit this morning was pretty big. I probably should have closed some shorts there. Yeah, it's all preference. Probably if you're new to it, I would paper trade it for one. Just to figure out kind of how you like to do it. Monthlies is probably the better one to do because you're going to have more liquidity on monthly contracts, and typically the premium's a little bit higher. So you're looking at the third Friday of each month is the monthly expiration. So it's next Friday for March, and then for April it'll be 21st. And then as far as a strike, lots of different strategies for that. So the safest way to do it would be to sell covered calls above your cost basis. So if you bought Bed Bath at anything under $1.50, just sell at least $1.50 covered calls. If you bought it like $2 is your average and you want to still play it safe, then sell over $2 strike. And to do this, you might have to go out further. So the further out in time you go, the more premium you'll receive. I'm doing it a little more risky. I'm basically selling them about at my cost basis, maybe under on some of them, and I'm just doing it weekly. And I'll probably keep doing it. Yeah, I'm doing it basically at my cost basis. So. Oh man, sorry to hear that, Furs. Yeah, I got some margin calls, but they haven't liquidated me. I think because I keep selling covered calls, I'm like just hanging out. right on the edge. Sure thing, Tasty. Yeah, I mean you're capping your gains with covered calls. However, you can always roll it, like you can move it up, especially with how high the IV is.
Of noise out there right now about SVB, but RBC Capital said there seems to be this
might be a good short. I'm going to be patient though. It did fill that gap though.
And their view is that what was
it's got momentum to the upside. I think that's even a high on the day. Yeah. So high on the day from that gap fill.
A painful vortex of a lack of
we'll see if it makes it up to
along with a healthy dose of misinformation and questions over its deposit flows. Truist Securities downgraded shares to hold from buy, slashing their price target to $100 a share, saying there are too many risks now surrounding the stock to be able to recommend for anyone to buy at these levels. Deutsche Bank also echoed very similar sentiment, saying is this another mini wobble on the front or the start of something bigger? They said it's tough to tell, but they would be stunned if there weren't many more casualties of this boom and bust cycle. JP Morgan, however, the most optimistic of what I could see this morning, saying that they think the sell-off for larger banks at this point is overdone, making a really good point, I thought, highlighting the fact that large banks have much more liquidity than these smaller banks and are more diversified with broader business models. They have a ton more capital and are typically just
trying to get a job with Fidelity
than some of these smaller companies. So
doing what?
Perhaps a sigh of relief for the other names, but this name is still clearly in some major turmoil today.
Yeah, without a doubt, this will be an ongoing story. And then let's take a look here at DocuSign this morning. This one dropping after its quarterly report.
Yeah, and this name is a bit confusing because we're seeing shares sell off. Another name that is in absolute turmoil today, down almost 20% in reaction to its fourth quarter report, where it actually posted better than expected results. We saw the fourth quarter adjusted earnings come in around 65 cents per share. This exceeded forecasts on revenue of about $659 million. Also beating estimates, calling for around $641 million. Now, guidance was also in line with expectations. They're now projecting revenue to fall between $639 and $643 million, ahead of consensus of around $640 million. It does seem like the analysts are underwhelmed right now with its prospects for profitability in the new year. We're seeing analysts really say that right now any sort of optimism around the company for an improvement right now was not enough, given the fact they did lay off 10% of their workforce last month, which followed layoffs of about 9% of their staff in September. So they've had two pretty significant rounds of layoffs in the last several months. RBC Capital said for this reason the near-term outlook does still remain challenging.
See if SPY is kind of building a bull flag up here.
Actually raising their price target, which surprised me.
If it holds this as support, this 390, 53 area,
53 with a sector
could see
perform rating.
Pretty good rally, probably past this level even.
Reduce their price targets. JP Morgan downgrading shares, lowering its price target to $48. Piper Sandler, also another name that is reducing its price target to $60 a share with a neutral rating. So all in all, I'm seeing in general neutral ratings today.
Put a stop limit on my futures. I'm getting close to
in this name, but it does seem like right now
close to break even on, unfortunately. Should have dumped some this morning.
Is why we're seeing this degree of selling off today, Nicole.
All right. Thank you so much, Jenny Horn, for all of that. Really important stories today. Jenny Horn, markets correspondent.
I'll probably get stopped out because this looks like it's going to keep going.
The news shaping the markets. For that, we welcome in Joe Brusuelas, Chief Economist, RSM. Thank you so much for being with us. There is so much to discuss here. Let's start with the jobs report. More jobs created than anticipated. What did you make of it? What stood out to you?
Well, the thing that stood out is that we're just simply in an economy that's overheated. The jobs market is red hot. And when you take a look at the underlying tone, we got 166 million people working in the economy. The prime age employment rate went back to a pre-pandemic high. This is a labor market that's fully recovered and has continued to expand. My sense here is that Federal Reserve is probably leaning towards a 50 basis point hike at its March 23 policy meeting. And this represents a rapid shift in sentiment just from Monday. And this is despite the sell-off that we're seeing in financial markets over the past couple days around the potential unrealized losses in the banking sector. So
Let's
this is a
talk
really
about-
difficult.
Carvana? Let's see.
Let's talk, and I agree with you. There's a lot to break
Ooh,
down
down
here.
7%.
As far as the Fed funds futures and the
Bouncing on
anticipation,
that
right?
support
It was
there
to
from the other day.
20% something for a 50 basis point hike. Then Powell spoke and it went up to 72% likelihood we
No,
would get 50
it's not looking
basis
as good.
points. But
We'll
now
see, though.
has
It did
dropped
bounce on
back
the
down to
support,
about 50%.
but it broke that
likelihood
50 moving
we'll
average,
get
which is what I
50
wanted it to
basis
hold to
points.
repeat.
Let me ask your opinion.
Beat some kind of.
The 50 basis points
no, it wasn't
seemed
repeating.
like
That
a
was
good
something else.
possibility.
But yeah, I wanted to hold
But
that 50,
with
which
what's
it
going
didn't.
on with SIVB, the concern, is there contagion or is it contained? Do we have any sort of crisis? Will we get somewhat of a mixed bag?
Kind of lost.
Are we back to
Lost
25
the ground that
basis points maybe?
would have kept
So
it
we didn't
bullish.
change our call. We're still at 25 basis points, and I'm waiting to see
It's
the
bouncing
February
here, though.
CPI report in particular.
You could wait
service
for to
sector
see if it fully
inflation
breaks there if you
and
want to stomach
core
that, or
services, that's core services ex
cut out,
housing.
but
If that
it's kind of at a
continues to
low, so
increase,
it's
we're gonna
possible
get a
it comes
50
back
basis
up from
point
here.
hike on the back of the
Not
jobs.
sure it's going to go
Despite the turmoil we're seeing in
grind
the
back up
markets.
that 50, though.
With respect to your question, markets are functioning.
All the
You
momentum's
know
down
what?
on it.
When I see this, is I see the markets acting as it should. We have balance sheet analytics, price discovery, and then a potential private capital situation.
I did some cash
It's
grid puts on
unfortunate
Carvana
that
on the.
particular company
Yeah,
wasn't
see,
able to
it's
raise
bouncing at that
capital
level.
overnight, and they're having to
On the
go through
paper
a
account.
potential sell situation. That's how this is supposed to work. You know what I like the most here in this unfortunate situation? Government's not stepping in to bail them out. This is how market
here it is.
capitalism
They're down.
works.
Right, and look, this is not a kind of bank that has branches. It's more
But
for
I've got until
startups, and it's
April.
a different kind of bank.
Opex, so
that being said,
got time.
within the jobs report, let's talk about the breakdown. I mean, we still saw ads to leisure and hospitality and retail and healthcare.
SPY's moving up here.
Unemployment
Probably
rate,
going to get stopped out.
3.6%. The revision I thought was interesting. That 517,000 in January, there was a lot of thought there would be a big revision. They only took off 13,000, so it's still above 500,000 in January.
Report on
In
Turco.
my preview, I said it would take them a
No
number
risk,
of
all
months. It
reward.
usually takes 2 to 6 months for them to fix a huge seasonal
Right.
Yeah, it's a
adjustment
bull
like
flag
that.
there on SPY.
And we just saw the first step. There'll be a couple more. That will
Okay.
come down. But here's the thing. Even let's say it comes down to around 400,000, it's still too hot.
Thanks, Jason.
Right.
Right, just still too hot. So that's the major
Let's
takeaway.
get nuts.
Moreover, inside the report, right? I know we've all seen these layoffs.
Thanks,
in
homie.
tech
Appreciate
and
it,
other
man.
places. Median duration of unemployment only 8.3 weeks. People are getting jobs real quick.
Breaking
especially
out
if they've
the
got
upside
good
there.
skills.
Jan Hatzius over at Goldman Sachs, we all know him well from The Economist there. He was actually anticipating 4 hikes, 25 basis points each,
Right.
and a soft landing.
Well,
What do you think of that?
Jan and I would probably agree to disagree on that. We had a 65%
volume this morning on
probability
SPY
of
is
a hard
crazy.
landing this year. It's starting in the third quarter of the year. We think that that's likely to occur, especially if the Fed engages in another supersized
down
hike
another
or two.
15%.
Hey, one of the things that's out there in front of the market, Nicole, that maybe some of the trading community doesn't understand or just hasn't had time to look at.
Those
After we get
Turco's
that March
filled that
23
gap.
rate hike,
Lots
the
more gaps
next
down
one's
here.
going to be on May 3rd. That will come before the April unemployment rate,
And I've
which
got a
means
MACD
they hike by 50
crossover
basis
today.
points. There's not much to deter them from doing so again.
Seems like
that's
that's
going to
probably
add an
gonna get
additional
filled.
element of risk into the overall investment community, and I think it's something we need to begin talking about.
So what else am I missing? What else are you focusing on here?
Let's get
Well,
nuts.
clearly inflation. All right.
Yeah.
Service sector inflation has yet to abate. It's not even peaked
No,
yet,
that's-
even
that's
though
this.
overall inflation has. Remember, the
Got so much
reason why the
background audio
Fed
there.
looks at super core or services ex housing is it represents
This is
over
up
half
2
of all
1/4.
consumer spending. 70% of this economy is based on consumption, and those prices continue
I haven't
to
gotten
go
stopped
up.
out yet.
This is
That is
intuitive.
neat.
If you go to an airport, if you go to a restaurant,
Maybe a false
Right.
or
breakout.
you go to anything that involves transportation,
That gas maybe
you
double
really
bottoming
will
here.
see an overheated economy. And I know, and I empathize with down market households that are running out of steam here.
Yeah,
But
and-
nevertheless, it's still going elsewhere.
Okay. Joe Brusuelas, it's great to have you on the show. So glad you're here to break this all down for us. Joe Brusuelas, Chief Economist at RSM. Thank you. Plenty more to come right here on Trading 360. Our 360 Spotlight looks at the gap after after its earnings. Our disruptor, Zimmer Biomet.
So you can
George
see
Stillis
kind
will
of
tell us why
BBY
it
started
might
to kind of
offer
build a
stability
floor
in
and consolidate
today's
there.
market. In our 360 round, looking at
This
mega cap
this
tech,
dip here,
why it could be a safety play
depending
in
on how low it goes, I
2023.
guess, but
up next, the big three stocks
our
leading
rally
trades. Ben Lichtenstein
out of
goes to
here will
technical.
probably be
Scott
pretty
Nations
fast
takes us to
and
the
probably
trades
back
for
up into
Deere,
this range,
Tesla, and General
this
Motors.
150
Next,
range.
here on Trading 360.
First. I'd say that's probably the first stop. Or it just blows through it, but if it's not on any news and it's just from, I don't know, technicals, whatever. The bouncing. I could see that. Because this is accelerated after it's broken that low. One hopes. What's the dollar doing? There we go, dollar starting to rally. So yeah, this might be the end of the pump on SPY. Oil's coming up though too. Household net worth rose 2% in the fourth quarter of 2022. The median starting price for newly approved drug nearly tripled to $7,000 per patient monthly in 2022 from $2,600 in 2011. Ten-year yield is at 3.69%. 30-year yield is at 3.69%. Which would you pick? SVB Financial pulls capital raise, explores alternatives including possible sale. It's still halted. Yeah. Before the pandemic, about a third of first-time homeowners relied on a gift or loan from families or friends for at least part of their down payment. That has increased about 40%. SPY is kind of breaking the support on that bull flag. Dollar's starting to move up. Could add to a short here. I won't want to bring my cost basis down at all. Average gas prices in the US are 79 cents lower than they were a year ago. Barring another spike, this year-over-year decline should be an important factor in pushing down the March US inflation number. Biden says February jobs report shows economy is moving in the right direction. Okay, SPY did break the bull flag there.
Right around the 50-day moving average, holding up above the 200-day moving average. RSI not really providing a lean one way or the other.
All right, Jim.
Yeah, I mean, year to date, the stock's coming under pressure a bit, down 4%.
I'm talking about deer.
Still holding above that longer dated and still holding near the upper extreme of this range right now. So, again, I think if we were to get some weakness here, selling through 360, we could retest this lower extreme of this range. We're in 280 here, going back to June. But as of right now, holding its own for sure up at the top here.
So holding its own at the top there, some potential for the downside. If it were to break down, it has a big leg down, it seems. I mean, I like when you say when in doubt, zoom out. Watching 380. We're at 409 today. But Scott, you're really on the bullish camp. In fact,
Are you
you
still
said
long on
this
Silvergate?
was your most bullish name in the S&P 500.
Yeah, absolutely. And let's, I'm not much of a technician. That's Ben's purview. But let's look at that chart again and look at the fact that when it had that big gap higher on wonderful earnings and wonderful forward guidance, the market tried to test that again. It tried to come back and fill that gap, and it kind of got there, but without very much conviction. And so I love the fact that people were buying there. They thought this is a great name, a great opportunity to take advantage of inflation, and so they actually were buying in that range. And so I love the fact that it didn't get really weak when it tried to fill that gap.
Right, okay. Understood. How about we take a look at Tesla, obviously a name that's always in the headlines.
Right.
Some love it, some don't. Right now, 176. Where do you think this is heading?
Well, I respect it. I don't love it, and I don't hate it, but I respect it. The problem, I think, for Tesla, and we've all talked about the fact that Elon Musk seems to be wildly we'll say distracted. How's that? I think the big problem for Tesla, the company, is that it seems that they have to cut prices in order to maintain market share or to maintain growth expectations. That's going to hurt margins, which is going to hurt profitability. And the forward PE is already above 43. So I'm dubious about Tesla's prospects. That said, I don't want to short this stock because I've seen what happens to shorts in Tesla. So the way to take advantage of my fairly pessimistic view is to buy a put spread in Tesla. And so I can buy the April 150, 170 put spread. I could buy that for $7 when I put this trade together earlier. The interesting thing, Nicole, is this April expiration catches the next earnings announcement for Tesla, catches it by 2 days.
I'm moving back up.
So this is an opportunity to define your
right
risk,
back in its bull flag range.
make
See
a
if it breaks out here.
downside bet on Tesla, but do so with a pretty good risk reward because we're only paying $7 for a $20 wide spread.
Huh. And so when you have that earnings in there too, which can give you some volatility.
There's
and
a
put you
pop on
right
SPY.
into the money. Ben, your thoughts?
Oh.
Nicole, the recent run-up we saw to 220 was a
So
key
should
area
consider
testing
financial
the
advice?
October highs. It failed. Tesla,
I
well-defined
don't know.
trend up in terms of what we had seen into February, but since it's been kind of leaking lower, not only leaking lower, but potentially invalidating that trend to the upside. Let's just begin first and foremost with the January lows down around 101. Scott mentioned those that have paid a heavy price for shorting Tesla.
I don't think
but
so.
I'm wondering, is that going to start to change? Because we actually
They are
topped
telling
out
you
here
trades, that's
around this
true.
200,
They have a
220
disclaimer at the
area.
show,
Here
I
you
think,
can
saying
see multiple
not
areas of
financial advice.
consolidation on the way up, Nicole. But look what, as I mentioned, starting to happen. We're leaking
Oh, yeah, they
lower,
give you
taking
specific
out this
strikes.
170
They
area
give you all
right
trades.
now, or into
This is
it.
put on
So
by
let's see if we
TD
see further
Ameritrade, so
weakness here at that point. We didn't validate the working
they want
assumption
you to
that we're
trade.
trending higher.
They make money when you
Definitely
trade.
flags are flying in this one in
And
terms of
I'm
some of the
stopped
recent
out.
weaknesses move off that 195 level. Taking a step back, looking at the daily time frame, you can see what I'm talking
Taking
about.
those
The move
profits
we
this
just looked
morning,
at
but
from The January
Oh,
low is
well.
up to 220, but look, the longer-term trend environment's obviously to the
That
downside.
was a
You can see
pretty
that
big
October high that I mentioned up
support
around
to
this
break through
220
this
area.
morning.
So let's keep an eye on that. And in this instance, what I went ahead and did was just looked at some of these areas of consolidation that formed. So you had a well-defined trend environment to the downside, 1, 2, 3, 4, 5
Five's
into
now
the January
green.
lows, and then look what happened. We started
Gringo.
to rally up, so it gets a little messy there, and that's when I kind of again grab that fat crayon and zoom out a little bit and just sort of draw this as one larger area of consolidation, which I think if we start to see some weakness here back to the 160, we'll sort of solidify that and could open up a door for a retest of the lower extreme of the year low prints that we saw down around that 100 level. Let's take a look at where things stand in terms of the 50-day moving average.
Yeah,
the
with the
200, it's
futures,
kind
I
of
usually
pitched
always
between,
try and
working its way back to the 50 here, struggling at the
have my
200.
stop loss
Again, that
just one
October
tick
high,
into
they all
profit,
both coincide with
just
each
to basically
other,
pay for
still
the
year to date up
position, I guess.
43%. RSI, though, has been coming off somewhat supportive of this move lower here. Let's keep an eye on this one next week to see if it gives way with that 50-day. It could build momentum.
Sometimes
lower
I've done
if
it.
does.
Yeah,
Not in
and
profit.
so what's interesting is as you
But
see,
typically
sell-off in
I'm
this
managing it
comeback,
myself, so I don't
Scott,
usually
you
have stop
noted
losses.
that you respect Tesla, so you don't love it. In fact, you are, while some people are back.
But yeah, I still believe in the downside, but
name,
I don't feel like riding this up, so that's why I did the stop loss.
No, I don't. I think the company's going to have to grow up a little bit, mature a little bit, in order to get those sorts of valuations. And everybody is
A little
now
move
ha-
up
now
to
has
that
their
low
sights on
VWAP
Tesla.
on BBY
And
with some
I
volume.
don't care if it's Mercedes or it's BMW or Porsche.
Yeah, the bid
or
support is
downscale
starting to fill up in
automakers.
this
They all understand
116,
what Tesla's
115,
about.
114, 113.
And
Got a
like
lot of
they
bid
say in
support
sports,
there.
the other side has coaches too, and the other automakers have executives too. And
27
they're
million?
gonna have EVs
What's 27
too.
million?
And so Tesla had the space
big
to
order?
itself
No.
for a long time. That's not going to happen anymore.
Right, understood. And just staying in the realm of autos, we've heard from General Motors. In fact, they offered a voluntary buyout to many employees recently. Your thoughts here on GM?
I think GM is a long-term buy.
There-
It seems a little messy right now,
BBY
and I
popped up to
understand why.
VWAP.
But the forward PE is 6. And this is one of those situations, we look back 20 or 30 years, and we think, wow, I wish I had bought some of those really cheap stocks that ended up doing pretty well.
Market cap's 136
and I
million.
think that's where GM is right now. In 30 years, people are going to look back and say, boy, I could have bought GM for
FDIC
forward PE
and
of
Fed
6, and I didn't
regulators
do
at
it.
Silicon Valley
So
Bank.
this is a long-term buy.
That was quick.
I think some of the other makers are shinier names, but GM is super cheap. It does have interesting offerings in the EV space. I think it's going to do well in the EV space. And the interesting thing is that the company is not really contracting. Analysts expect that over the next 2 years, both revenue and EPS are going to grow by 10%. So you're going to get some reasonable growth at a very good price.
So thinking this is a super cheap stock, I mean, really looking at this one as the buy. Ben, what are you thinking about GM? Take a look at this chart.
GM off the highs from the year around 43, back to the middle of the range that we've been in basically since July, and similar situation in terms of Deere, right? Not a lot of conviction on this hourly time frame. You can see pretty well-defined range, so 43 is your upper extreme, your lower extreme 30. That's that July low, the lows from last summer that I mentioned. So in this instance, I just went ahead and kind of identified that we've got just that, a range, right? Not a lot of conviction, no well-defined trend, but you can see we're kind of hanging out in the middle, so pivotal in terms of this area that's been forming since the summer of
melting up
last
here
year. But let's
more.
take a step back because, again, in this instance, much like Deere, when in doubt, zoom out, and you're going to see a very well-defined, hold on one second, well-defined trend to the downside here. In this instance, 67 is your top left corner, the highs that we saw in the beginning of last year, and then conviction to the downside and more sideways, rotational overlapping, and again, running into some resistance around the August, September highs from last year. As I mentioned before, keep an eye on the July lows if we continue to see some weakness here. But this is what I went ahead and just drew some larger areas consolidation so we can see this one that's very mature, and you can, again, establish that because of the fact that it goes all the way back to April. But look, from 67
rallying, SPY's
down to
rallying a
lows
bit.
here around 30. This is what concerns me a little bit in terms of that bullish narrative Scott was just talking about. Again, through the middle of this range opens up a door for a retest of the lower extreme, and that would be in line with this weakness we've been seeing in terms of the longer term. But Let's check in on the 50-day, the 200-day moving average, because you can see we're still holding above or teetering right around them. And RSI kind of limited in terms of participation to the downside relative, or I should say price relative to what we're seeing in RSI. So price not really joining in, but at a pivotal area, something to watch in terms of that middle of the range that we've been forming. Again, a well-defined and extremely mature range that we've been forming.
All right, thank you for that, Ben. As you took a look at the long term there. Final thoughts here, Scott Nations. Ben and I are going to be talking about these markets all day long. I'd love to know what your thoughts are as you digest the jobs report, the SIVB story. Regional banks are moving lower. We have the Fed coming up. We'll have the inflation prints next week. There's a lot going on in our world. What are you thinking?
There is a lot going on. I do think that it's a bit of a mistake to try and figure out or prognosticate about what the Federal Reserve is going to do, because there are some cross currents here.
Support from back here.
Inflation is still a problem, and people who are trying to look past inflation, I think, are cherry-picking data. And I also think that some of the banking problems that we have are very isolated so far. It's tough to understand how that's going to cause contagion. It's really, really, really messy for a couple of banks in Northern California, but I think that still the
RLX
theme of
is
the
up
day
11%.
remains inflation, and all you have to do is look at the out-of-control job situation.
Breaking that high now.
Out-of-control job situation on the upside is bad for the economy, but if you look at that, the inflation remains the theme of the day.
I see. All right. We see the VIX up about 2.5% today. Okay. Scott Nations, we love having you on the show. Thank you. Scott Nations, President, Nations Indexes, and of course our own Ben Lichtenstein doing so great on those charts for us, giving us all the details on those three names. Big three. Thank you.
The gringo.
Coming up next, we're going to spotlight the Gap. Had its quarterly numbers. We will catch up with CFRA and find out what they are thinking. Right.
I broke that high. Next level up would be 393.79. Oh, green. That would be the pre-market high. Might start adding into shorts up here. Very, very interested in doing that. Just like that, market's green, as happy as can be. Well, that scary sell-off this morning, no big deal. That SPY melt up. Resistance here on GME. Yeah, maybe. Yeah, kind of the support from back here. Buy's still melting up. Yeah, JP Morgan was saying some pretty bullish stuff.
Here, Nicole, a very rare sell rating, and sometimes this could be a little bit disastrous if it goes away from you here, but they are taking the chance. They do believe that this stock is going to be down here because of some of the factors that we just listed.
Yeah, thank you for that. I mean, certainly big news because so many people hold Apple, whether it's in an index or an IRA
All right,
or
it's
something
getting up
like
to that level.
Sell on Apple. Thank you, Kevin Green. Appreciate it. And we'll talk more, by the way, about mega cap tech stocks later in our show and our panel. Right now, it's time to spotlight the gap. Zach Waring's with us, equity analyst at CFRA, to tell us all about this one, lifting the stock.
IP is increasing on them.
To a sell?
I don't know what calls you're talking about, but
okay. I'd like to hear more about this. In the meantime, we are seeing the stock right now to the downside. Your thoughts here?
Yeah, thanks for having me, Nicole. We upgraded
Tesla
the stock
3%.
basically just because of their inventory levels now. They're a little bit more manageable, we think. A little bit less promotional activity in 2023. But that's the main reason for the upgrade. Obviously, we're still negative on shares.
I saw, the first part that grabbed my attention was that you raised the price target $5.
1.3% on GME.
Why bother?
Everything's moving up.
So we actually kept the price target at $5. That is the price target, but that's based off of a 50-cent EPS for them in 2023. And we think they deserve around a 10 times multiple for their earnings per share. So it's a little bit below peers, but they don't operate as well as some of their peers, and that's kind of why we have their price target at $5.
So the inventory management seemed to be the bright spot for that. Is the one thing that you did like about what is going on there. Under the Gap name, we have Gap, we have Old Navy, you have Athleta, and Banana Republic. Tell me about each of those names, and are there strengths and pockets of strength that could help the Gap?
Sure. So, looking at this quarter and kind of that second half of 2022, Athleta was their strong growth brand, and the growth there has decelerated. And they made some changes to management in this earnings release. So it'll be interesting to see who they bring in to run the Athleta brand. Before turning neutral on this stock, we want to see Athleta, thrive. We want to see them return to 10 to 15% growth. Because their other brands they're more mature brands in the U.S. You're not going to get a lot of growth out of them. Most of the time, you're going to see those two brands, Old Navy and Gap.
I think she's at the stock exchange.
GDP, or somewhere around GDP growth. So, investors got excited about Athleta in 2021 and 2022, and now you're seeing that.
She's either in New York or Chicago, probably.
What happened to the management? I mean, I thought there was a CEO role change, and there was some excitement there. What is your thoughts when it comes to management of this company?
Yeah, so they have a interim CEO right now, and they're also looking for a new CEO
there is a baby
for the
gap.
Athleta brand, and also a new COO. So they've got a lot going on in terms of management. It'll be interesting to see over the next few months if they can kind of figure that out and get.
Thank you guys for your likes today. Lots of fun.
And when we look at
Appreciate it. We got 44 likes. Well done.
The Gap and Kanye West late last year officially ended their partnership. Did that matter? Are there any other stars or things that we need to know about?
GME just on a slow grind down.
Yeah, that was a big part of the fourth quarter and third quarter decline. Obviously, they had a bunch of inventory that remained under that brand that they had to get rid of. So that hurt. That should relieve some of the inventory pressures. Like I said, I think their inventory is in a pretty good place. It's still a little bit elevated. But we're not concerned about it anymore like we were, a couple of months ago.
Right. Look, worse than expected.
So this just looks like a bounce back up to that prior support.
What you said compared to their peers. Tell me about the peer group.
I think I'm gonna add a short
what kind
here.
of companies are doing well? Are some of these retailers going to do well? Are consumers going to spend and be very selective where they spend? What names do you like?
Yeah, so we like a couple of names in retail space. I cover Columbia. I like Columbia. They've done well to manage inventories. Their management execution is much better. They had, revenues grow in Q4, unlike Gap, and they had, pretty strong operating margin. Gap had negative operating margin in the quarter. And obviously a big miss, 30% or 30-cent miss on EPS is pretty big for this company. So, we like Columbia. There's not a ton of names in retail that we love right now. They enjoyed a pretty strong rally at the end of, Q4 and into Q1 now. And so we think a lot of names are pretty, fairly valued at this level.
Yeah, I mean, Columbia Sportswear right now, COLM, is trading around $87. What kind of rating do you have on that, and what's your target?
Yeah, we have a buy rating on Columbia, and we've got a price target above, 100 or above. So we think it can easily reach 100 from these levels. They consistently execute. They've managed inventories well over the past 6 months, while other retailers didn't. And they've got outlet malls where they can kind of offload some of their older inventories. And they can use their outlet malls to get rid of that old inventory. So, we like Columbia. We think they're fairly valued. There's probably some room to the upside from here.
All right, good. My husband had 2 Columbia jackets in the closet yesterday. It sort of took me back even, because I just wasn't even expecting to see that. All right, the name lives on, the old school. Columbia Sportswear. Zach Waring, it's wonderful to see you. Thank you very much. Love having you on the show. Equity analyst at CFRA. Thank you. Coming up next, Disruptors, Zimmer Biomet. ZBH gets an upgrade over at Piper Sandler. It's up about 1%
now it's engulfing
right now.
again.
George Sillis has all the details for us next.
Federal Reserve is unlikely to be able to bring down inflation without having to raise interest rates considerably higher, causing a recession, according to a research paper with former Fed Governor Frederick Mishkin. I'm waiting a bit on my short. Might just be consolidating before more highs, really. Not engulfing. See another resistance up here that I think we might hit. The RLX is grinding up well. Tops. I don't remember where I was in on this thing. Unit's kind of breaking the lows, breaking that bull flag. SPY's coming down a bit here. Oil's been rallying. That's probably helped the market. The dollar has been too, though. Commodity price changes over the last year. Let's see this. Sugar is up 11%. US CPI is up 6.4%. Gold is down 8%. Soybeans down 10%. Copper down 13%. Gasoline down 17%. Corn down 19%. This is just from beginning of year, I think, right? Commodity prices changes over the last year. Or is this year to date? Or is this year over year? Corn's down 19%, heating oil down 19%, coffee down 22%, silver down 23%, crude down 25%, zinc down 26%, cotton 30% down, wheat 36% down, nat gas down 45%, lumber down 61%. Does he know about Bobby? Westinghouse subscription, yeah. Kind of, yeah, maybe. They call it Westinghouse. There was a lot of like subscription-based CD, like mail you CDs. Remember WoW, Columbia House. A little type check type, audio test, type check, Yaz. I do keep you guys on your toes. Make sure your audio's on point. Maybe that was a good place to start scaling into a short. Yep, 686. Old wheat ETF. SPY's coming down here a bit. Check. Ops is up 14%. Things starting to rip. Chart still looks nice. I think I got enough somewhere around here on that bull flag. Can't remember. Geez, that was a good entry on SPY potentially. I don't have to be so decisive with my entries if I'm doing a lot of them, like 6 or 7. 8 or 10, kind of just sprinkle it. Sprinkle. Big yeses, I'm like trying to time it perfectly. Yeah, SPY's coming back down here. I wait. Wait. Zimmer.
They're in the 15% range, which gives you an idea the company has pricing
pretty
power,
big
but
red
they
candle
also
there on
have
SPY.
expense management, and that's what Wall Street wants to see in this market environment.
Drops
And this is a value-based
390,
company, not necessarily a
26.
growth-based company. And overall, it's quite a good performer on a relative basis to some of its respective peers.
Right. Thank you for all of that. George Silas, love having you on the show, giving us all the details on the disruptors each day. George Silas,
Okay, Nicole.
thank you. Coming up next, our panel will take a look at all things mega cap tech, Meta, Google, all these names that grab your attention. In the meantime, tech overall is down about 2% this week. Coming up next.
Let's walk through charts, one of the most commonly used features on thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select time frame to adjust time intervals or to favorite a time frame. Select style to change the appearance of the chart. You can add drawings by selecting Drawings, Drawing Tools, and then Type of Drawing. For symbol comparisons, select Studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to thinkorswim, head to the Education Center on tdameritrade.com.
When traders tell us how to make thinkorswim even better, we listen. Because platforms this innovative aren't just made for traders, they're made by them. thinkorswim Trading from TD Ameritrade.
It's a 13-hour flight. That's not a weekend trip.
15 minutes to wait.
Wow, I gotta take off. Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Hey, thanks.
We'll see ya. Ah, they're getting so smart.
Choose the app that fits your investing style.
Yeah, I don't see that W either. I don't know what W means anyways. Got whomped by the rebellion. They're all concerned that they have exposure to SVB. No one really knows.
Loving what they saw in tech in 2023, but a recent pullback has sort of reared its head. We've seen tech this week down about 2%. Joining me right now, Quint Tatro, Managing Director at Joule Financial, and Jeremy Bryan, Senior Portfolio Manager at Gradient Investments. Thank you both for being with us. Quint, you favor Meta and Google over Apple and Amazon, but you did talk about some of the recent calls that we've been seeing on Apple. Tell me the big picture here.
Well, the big picture, Nicole, is these stocks are going to be trading in line with where we think interest rates are going. And obviously, things were going great until we had Jerome Powell on the Hill and talking tough, and then everything related to technology backed off. But so there's going to be sympathy across the board. There's going to be pin action. These stocks are going to be heavily correlated. But our note this morning is more in reference to really dialing into the stocks that we think are undervalued and more attractive. And you called it. I mean, we think both Google or Alphabet and Meta trading at roughly 15 times forward, relatively no debt at all, and unbelievable cash balances are more attractive than Apple, trading 23 times and growing earnings only at 9%, and Amazon having earnings contraction and still trading 35 times forward earnings. So we're kind of taking a scalpel here and picking our spots and favoring some of those names over others.
Right, understood. And Jeremy, you called this group somewhat of a safety play, and I know NVIDIA was one of your favorites. Tell me a little bit about the big picture on tech and why you think some of these names really are somewhat of a safety.
Yeah, it's actually, on a relative safety call, it's going back to, again, prior to 2022, when they had a really dismal time. People kind of flocked to these things when they couldn't feel like they could invest in other stuff. because you get the the consistent, durable growth story from those stocks. And that's why I think that this could be a redo of that, is that we've been looking for durable growth stories within our portfolios across the landscape, because that's the kinds of things, especially as cyclicality has really kind of run pretty aggressively. I mean, if you look at industrials, they've run quite a bit, and these stocks have languished a little bit behind in that regard. So we think that there'll be a retrenchment towards these names that just have really good secular long-term growth stories that are more durable from a perspective of that compared to your cyclicals. Certainly we're seeing this in financials over the last couple of days. I think this is where people will go when they want to continue to have equity exposure, but don't want to take the cyclicality risk going forward as much.
I see.
I'm going to take that short.
So, Quinn, just a quick thought on Apple. You mentioned the Goldman upgrade. We had Dan Ives on, who had a 190 target.
The back to the low,
but
slow
today,
VWAP.
of course, we have a sell rating, a rare sell rating that has come out on Apple with a $120 price target over at Lightshed Partners. What did you think of that, Quinn?
Yeah, it makes sense. I mean, I'm not a fundamental fan of Apple, but Jeremy's right. I mean, don't make any mistake. This is probably the number one safety stock in the market, and was deemed that way by Buffett and Munger. I mean, it's their largest holding, and when times are tough, people are going to flock to this name. So, I mean, you have to give the respect to Apple, but as far as upside from here, when you're faced with buying an Apple, again, trading at these valuations with heavy
that one-day
debt,
candle,
as opposed to buying a Google or an Alphabet at a very modest valuation, no debt, unbelievable cash flow, I'm going to err on the side of valuation.
Yeah, you said Alphabet more attractive at this point. Jeremy, tell me about some of the names that you do like. I saw NVIDIA, I saw Accenture, I saw Broadcom.
Yeah. I mean, really kind of the tying bind across all those names is, again, we think they're durable growth stories. If you think about Accenture and Broadcom, they tend to weather storms pretty well. Their margins don't tend to have massive levels of fluctuation up or down. They kind of just block and tackle. That's what we really like right now, is we like the block and tacklers, if you will. And, from an NVIDIA side, it's much more a call on saying, if you want to play secular trends in semis and you're okay with the cyclicality, it's probably where you're going to go. Just from a perspective of they continually gain share with the higher higher margin, higher product, and where the puck is going, for lack of a better term, kind of process in the semi space. And so that's why we think that one is still intriguing at these levels, and we still own it. But really kind of flocking towards those Accentures, Broadcoms, and I would agree with on Google as well with regard to, we think the valuation is actually pretty attractive there, and we don't think the AI story is over by any stretch. So it's not one I mentioned, but I completely agree that that's one that's a value opportunity as well.
Right, and with markets under pressure here, Quinn, I mean, this is, when you look at the S&P at least, the worst week of the year, the worst week since September. On these kinds of pullbacks, do you say buy? I mean, where do you think we are in 6 months, 12 months?
Well, in 6 months or 12 months, I think we're higher. But, Nicole, there's an old adage, markets never bottom on a Friday. Even though this was a good bounce off the opening lows, I'm not so sure what the news flow is going to be over the weekend regarding this potential contagion. And that could take the market as a whole down further next week. So I think you dollar cost out. If you have cash and you're on the sidelines and you're looking for places to put it to work, I like Jeremy's durable growth or durable story.
That's called a hedge, Gene.
Terminology, I'm going to use that. I think you start dollar cost averaging into some of these names here, and you not try to time it exactly. But yeah, in a year from now, I think these stocks are higher.
Yeah. All right, I'm going to thank you both right there. We have some breaking news on Silicon Valley Bank. Thank you both, Jeremy Bryan and Quint Tatro. Good to see you both.
Thank you.
And just an update on Silicon Valley. Now, it has been closed by California regulators. We know that the stock yesterday had closed $255, had been selling off. It was down over 60% today. I saw it 39 and change. And so the FDIC will pay the insured deposits by Monday, so that it will be on a timely basis, but obviously contagion or contained will continue to be the question today. Thank you for being with me. I'm I'm Nicole Petalides. I will see you at 2 p.m. Eastern Time. Fast
Wow.
Money is next.
You don't usually hear them talk about news on this channel. Could have been given to me. That's interesting. It looks like it wants to keep going down. If I left my shorts here, didn't let it get stopped out. Back profitable. My entry here. Now I just need to sit on my hands for a bit. Maybe go long if we come back down here again. Yep, SPY now below VWAP. Might be getting that bearish MACD crossover. The borrow fee. BBBY's max pain is still $1.50. Borrow fee is 118% on iBorrow, which hasn't been updated since 2 days ago. So, been out of shares since Wednesday. That is neat. Cashback scams? What are cashback scams? If you guys don't want to take so much pains, I'll cover calls on it. What? Forgot I had this call vertical I opened on BBY. Call debit spread.
Welcome to the March roller coaster, Tom.
Yeah, it's definitely been a roller coaster, not only in the equity market, some of the news that we've gotten, but then on the Treasury side, on the dollar side, we're seeing the dollar crater also. But one bright spot, Kevin, has been the services side, right? Travel, leisure, people are going on flights, they're paying astronomical airfares at this point.
Gift cards
and we got an upgrade today on UAL. They also upgraded Alaska Air, but then maybe hit Southwest. Let's bring in Jenny Horn, markets correspondent here on the network, to help us break this down. Jenny, what are you seeing? Because every plane's full, prices are double what they were in 2019. And man, the aggravation continues for the airlines.
I know. I think I still am upset over the price I paid to get to Florida over the holiday season because it was ridiculous, and we're paying it unfortunately as consumers. But that demand is there, and this was also a segment of today's jobs report that has been continued strength with leisure and hospitality adding 105.
Yeah, short shares not updating means they're
6 month
out.
average. That was also something to look forward to. But
yeah,
in terms of United Airlines today, we did see a Barclays analyst upgrade the shares to overweight from equal weight with a raised price target to $80 a share, up from $52. This implies about 53% upside from its current price. So some pretty big expectations from this analyst today that did see right now airlines benefiting from a strong spring season. The firm said it's swapping its safe airline recommendations from Southwest to Alaska Air and taking on more leverage risk with United while stepping back from the increasingly complex Allegiant. On the other hand, they did downgrade Southwest today to equal weight with a reduced price target to $38 per share, down from $42, and then raised their price targets on Delta as well as American, both while maintaining a strong conviction in those names. So it does seem like on a year-to-date basis, we are seeing some airlines that are the winners, some are the losers. Right now, United is the clear winner with shares still up about 38% year-to-date, up a whopping 66% from its low. And we saw today's, it was initially a little bit higher on the day. It's not been able to hold on to that gain, but only down about 1% for the week. So actually outperforming the overall market. The other airlines, some do look promising. Not all look as promising though. American's still up about 25% year to date. Delta's up about 15%, whereas Southwest, which has dealt with its own scheduling, holiday woes, to put it lightly, is down about 2.5% for the year. So United does still look from a price perspective like the clear winner of the bunch.
Jenny, here's what's different about this upgrade in United Airlines. A lot of times we see, and Tom and I point out on this show, how analysts move up their price target to play catch up with a rallying stock or a stock that's selling off. They move their price targets around. But this price target from $52 to $80, that's aspirational, Jenny, because the stock's trading just below $52. So this is an aggressive price target hike and an upgrade here by Barclays.
Yeah, that's a really good point, Kevin. And I always hate when you see that an analyst will upgrade shares and then lower its price target. It's like, where's your commitment here? So I respect the fact that they're taking on definitely a more bullish take here with an $80 price target, especially for a stock that has been able to outperform the overall market year to date. I mean, we're only down about 5% from their yearly high. So this analyst sees not only us recovering that, but also then, even improving further from there. And this was not the only positive news we did get from the analyst community in United this week. We actually saw Exane BNP analysts double upgrade shares with a price target of $70, which is no $80 price target clearly, but also still implies a good deal of upside from just shy of $52 where we're currently trading. So the street really likes this name. Hasn't necessarily been their best week, but I think a lot of that can be attributed to the overall market weakness.
Yeah, these fares have not come down. They continue to be elevated. Jenny, I might have to actually switch to the big yellow bus in the sky soon if these ticket prices don't come down.
No way. No way.
I won't go Spirit ever. I won't go Spirit. Your favorite, Jenny. I know.
I like Spirit.
Okay, I know you do. All right, thanks to Jenny Horn, markets correspondent here, helping us break down some of the upgrades and downgrades in the airline sector. But now let's bring in Joe Mazzola, Director of Trading and Education at Charles Schwab. Joe, I wanted to get your take here. You know, I see that headline number on the jobs data up at 311,000, and then I start getting scared a little bit. Kevin mentioned some of the interior numbers within this report, which were, you know, starting to get positive. We had jobless claims above 200,000 yesterday. So that's a forward-looking, you know, jobs data point here that we should probably start to focus on a little bit. But you can't ignore, you know, the bear in the room here, and that's the financials and some of the turmoil there that's causing a little bit of contagion, right?
Yeah. I looked at the BKX before I got on here, and it had a $20 range just from last Friday. That is incredible volatility, worst we've seen really in 3 years. In terms of the banking sector, look,
they've gotten rid of the stop loss,
right? I mean, you know, the Fed.
Just the bulls on SPY scare me.
I think the Fed wanted to cause some stress, not necessarily stress in the overall financial world, but at least a little bit in terms of lending stress, right? Make it a little bit harder for people to get loans. Make it a little bit harder for all that money to come make its way through the system. And look,
this amount of momentum, I don't know if this is going to hold. I don't know if we're going to bounce on this.
Banks don't just do well because interest rates go up. I think that's a misnomer. If interest rates go up, but yet the yield curve inverts, and you know, we had an inversion of 100 points, 100 basis points earlier in the week. That's not good for banks because remember, they're borrowing short term and lending long term. And if they're actually doing that at a negative, at an inverted yield curve, that really cuts into their profitability, and that's showing today. Now, you know, you guys talked a little bit earlier about the idiosyncratic risk of SVB, right? You know, I do think that's fair. I think it's a fair point. But one of the things that we've seen,
36%.
You know, all of us guys in our multi-years of experience in this industry, is it doesn't have to be a canary in the coal mine, but it could be at least something that shows that there is some stress in the financial sector that's bleeding into other names and, you know, could cause a little bit of additional downside there.
Yeah, definitely sending some shockwaves through the overall market, Kev. You know, this is a good base for, you know, how the economy is doing. We typically look at the financials
we suck again.
first, but is this just maybe a mishedge by this one specialty regional bank out there? The FDIC has taken it over. They're going to open branches next Monday now.
Keychron, super heavy, full metal.
Should
Mine's too loud, man. I don't like how
look
loud
at
it
this
is.
and focus on it to look for other maybe cracks within the financial
It's
industry?
hard to get a mechanical keyboard that quiet though. Like you change out the little rubber things,
and mishedging
they still are pretty
some
loud.
of the products that they have on their balance sheet.
Still very loud.
Yeah, Tom, I mean, I'm not a banking analyst or a banking expert, but I read the note by Morgan Stanley this morning. They came out and said, current pressures facing SIVB are highly idiosyncratic and should not be viewed as a read across other banks. So there's the Morgan Stanley. Goldman Sachs came out and said, use this as an opportunity to buy the banks. So a lot of people are coming out talking about not necessarily the regional banks, but the big banks that are selling off along with this. So, you know, see this as an opportunity for some people. This may be a time to look at banks that, you know, Bank of America was right at book value for a while today. So, you know, these are names that are getting awfully inexpensive. That doesn't mean they can't go down. They absolutely can go down with more issues. But that breaking news that Nicole Petalides put on right at the end of her show was, it sounds like there's quick resolution to a lot of this problem there at SIVB. So I think things are resolving quickly. Sounds like the FDIC moved in almost last night. They were on site. So yes, uncertainty though leads to what we're seeing here. Remember, Tom, we talked about last week, the VIX felt low at 19.
Yeah.
Well, it was.
Yeah, yesterday morning it got below 19, so we're seeing that VIX pop.
Bouncing
I
a
believe
little
it's
bit.
25
BBBY
now
getting a
at
little
those
bouncy.
levels. So not surprising, we're seeing some, some buyers come out in the S&P 500 options that out of the money calls and puts, bringing that uncertainty index back above the 25 level. But Joe, the roller coaster that we've seen,
order
and
there.
expectations of a 50 basis point hike this week. They were in the low
BY is
20s
moving up
earlier
a bit
in the week.
with
They
some
got
volume.
up to 70. I saw 75 according to CME FedWatch tool yesterday. Back above 55 right now after hitting about 25, 27 earlier percent on probabilities. Will this roller coaster continue even into those CPI numbers, PPI
BY
numbers
murder.
next week?
Shut up. Don't say it.
Sure. I mean, you talk about roller coaster week. How about a roller coaster day? I mean, it's crazy enough. You said 25% probability of 50
So that get a solid gold keyboard. Probably be a better investment.
On my screen right here. So you got to remember how this thing's priced, right? It's basically priced off the options
it's
that
getting
are trading on those probabilities. So as those
getting
are
a little
moving
poppy.
around,
Got
markets
some
are moving
volume.
today, guys. I mean, I don't know
Break
about
above
you,
VWAP
but
on it.
I'm a little tired this early in the morning with all this activity. But the markets are moving and the probabilities are moving. Why? Because, like we said, part of what we're seeing now has to do with the lag effect of all the interest rate hikes that we've seen over the past year. 450 basis points since last March. Those are generational type moves.
Right.
And it takes time for them to make their way into the system. It seems like now we're starting to see that a little bit, and that's why you're starting to see the probabilities of these rate hikes.
It's not gone. I mean, you've got volume. You've got a break of VWAP.
When the SBB
Not bad.
news was really front.
2.5 million volume right there.
Not anymore, but at least that was the first things we were hearing about.
1.7 million on that 1 minute.
Those probabilities were around 20-25%.
Right.
They've since have moved back up because of the fact that as you guys had mentioned, it looks like it could be more idiosyncratic. The problem is whether or not it's idiosyncratic, the fear spreads, right? It doesn't mean that it's a contagion, but fear spreads. That level of comfort changes throughout the whole sector. And like I said, when I was looking at the BKX earlier this morning, the index on the banks, a 20-point range in 1 week alone. That shows volatility for sure.
Yeah, and Joe, real quick here on interest rates right now. Everybody's piling into treasuries. Yields are getting whacked pretty hard. The 2-year, hit over 5% earlier in the week. Hit down to 4.6% earlier in the session. 10 years getting hit a little bit. So do you see that safety play being part
finding
of the
a floor
cause
here.
that, hey,
I don't
you
think
know
I'm gonna
what,
go long,
this
though.
might take a couple
maybe I
weeks
should.
to kind of, meld out of this market
Jeez, look at these hourly candles.
just due to the
Huge
uncertainty
bodies.
in the financial sector.
Well, think about it this way: if you were to tell me that the 2-year went from 4.6 to 5 in 1 day, on the upside, we'd be looking at a market that was probably down 2 or 3 handles. We're looking at it the other way, and we're kind of looking at it as that's a good thing. It's volatility is volatility, right? Up or down, volatility is volatility. And to see rates move that quickly shows that there is a lot of concern in the fixed income market as probability of recessions are increasing. That's what this is really about, at least in my opinion, is that shows that the moves of the Fed are making their way through the economy. Probability of recession is increasing, and as you mentioned, there's a bit of flight to quality as people are starting to scoop up some bonds.
Wait, is this EU close? This is literally right at Euro close, not right at it.
And we've got those data points next week, which should easily turn this market around if maybe CPI and PPI comes in a little bit softer than expected. More data points for the Fed to watch. All right,
It's
guys,
showing
let's take
support
a
here
quick
on SPY
break.
so
When we
far.
come back, we're going to continue this financial
could
discussion.
go long for
we're going to talk about JP Morgan Chase,
bounce.
which is down so far this week, but it's rebounded pretty strongly in today's session.
$10 in
Maybe
BBY?
picking up some of those funds that
Some
came
point,
out
probably.
of SIVB over the last couple days. Fast Market's coming right
You're
back.
patient enough. Sold for 5. After retail buying activity hit a historic peak in February, net purchase activity dropped below $1 billion per day in early March. Look at that MACD. It wants to flip bullish so bad. Even with down 3.5%, it's trying to be bullish. Morningstar short percentage updated 126% short interest on BBY. Not sure about SPY if it's gonna flush here or get a rally. It looks like it might flush though. Set up a little bear flag. Huh. Sorting at the lows. Sketchy. BBBY is moving up here a bit. That gas is coming down. By bear flagging.
Feeling some of the pain from the inverted yield curve, and I think that is something that you have to kind of keep in mind. As I mentioned earlier, just because rates go up doesn't mean that that's always great for banks. Now, like I said, J.P. Morgan has definitely more of a diversified revenue stream, but let's think about some of some things that have happened last year in terms of a deal. Deals are down. You're not seeing much on the investment bank side. You're not seeing a ton on the trading side. And so some of those revenue streams have come down a little bit, and profitability's been hurt a little bit. I think the stock has reflected that in that it hasn't, up until last week.
Sold my last covered calls and still bounce.
It gave all that away this week and then some, and it's basically down to kind of unchanged for the year. So, is this, like I said, is this just an SVB story?
I've got 130 covered calls for next week.
Idiosyncratic risk. Absolutely. But in
Oh,
terms
it's pretty good
of
premium.
what that can do to the
$770.
overall, bank valuations and fear within investors, I think that has spread a little bit, and that's what we've seen this week.
And Joe, you got an example trade for us here in JP Morgan. It's up 2%, so it's outperforming, maybe taking advantage of maybe some of its competitors in the regional bank side where they want to go to these, big major players in the space. What's your example trade here?
Yeah, it's something that I don't know if I brought to you guys before, a little broken wing butterfly. Looking at the March 31st expiration, just a couple weeks out. 3
An
weeks
assortment,
out.
1.5 and 2. Most are at 1.5. We got 30 at 2,
kind of bounce that we've seen
100 at
today,
1.5.
Off the lows that we've seen, and looking for maybe a return to that 128 strike. And remember, anytime
And the
that
other
you have a
count, they're at
butterfly
1.5.
or any type of condor where you have a short strike and a long strike, you want to move to that short strike. And in this example, I'm looking at buying the 134 strike, selling the 128.
Yeah.
And then
I think we could have a move up there by
reducing
next
some of
Friday,
that
but
downside risk by buying the 125 put. So basically, you have $6
probably pretty
width
safe.
on the upside, and then $3 width on
Unless
the
there's crazy
downside.
news.
That's why it is what we call a
I
broken
need to-
wing, where this thing
I need to
maxes
cover
out
some
is
of
at
my
that
losses here
128 level, which was
with
the low of
the.
the day today.
I have some shares on
When I
margin
look at
and
this
stuff.
from a technical standpoint, what's interesting is this
Play
stock
it
had
safer.
been consolidating within kind of a bit of a longer term uptrend really before this week. And this week we saw our biggest red weekly candle, so basically a bearish candle since last September. We broke the 20-day, we broke the 50-day,
SPY looks like
we
it
broke
might
the 100-day
break down to the
moving
lows
averages
here.
all this week alone. We rallied back up
Isn't
towards
it
that
halted?
100-day moving average, which is around 134.70 today.
Halted.
Couldn't hold that.
You're gonna get-
and
you're gonna
even
get some
though,
big
you look at
bounces
some
on it,
indicators
probably.
that are showing that there's some oversold levels, whether that be the
Soon it
RSI.
resumes, I mean.
Things can stay oversold for a while.
Shorts
That
closing,
momentum
people
and
buying the dip.
Investor sentiment is changing.
Just look at SI.
And it seems, at least in the
Yes.
financial sector for this
SPY's
week, and
coming
maybe
down
for a carry forward for a little bit,
SI's
that
had some
could be the case.
big
Yeah,
rallies.
let's break this example trade down here. It's a slightly bearish take here on JP Morgan, buying
So, yeah, on a big rally, you could
March
short it.
31st weekly cycle, buying one of the 134 strike puts, selling two of the 128 strike puts, buying one of the 125 strike puts, paying roughly about $1.35 debit. We've got that example, the risk profile of that example. It takes your break even down to
I want to go short
132.65.
here. It's
So
at the
anything
lows,
below
but I
that
think this is
will
going to
be
just fall
profitable
through.
at the apex, as Joe mentioned, at or near that 128 strike.
Didn't
Now,
follow my
Kev,
rule of listening to
on this
myself.
type of trade, it's a bearish sentiment, but by doing the unbalanced or broken wing butterfly here, you're actually paying less and
Make a
maybe
call
buying a
or
directional
short on
vertical. I
SPB?
know it's trading closer to 155
write a call?
now because the market has kind of pulled back here a little bit. But if you're paying 135, that's your
Well, it's
risk
halted
on
right now,
this
so you can't do
particular
anything.
trade. Kevin, your thoughts?
Yeah, the meat of this trade is the 134, 128 put vertical, right? And then against that, you sell the 128, 125 put vertical, whereas 128's your target, but if you go through that towards 125, you still are insulated from that butterfly going down to zero. Why? Because you've got a $4 vertical and a $6 vertical and a $3 vertical. So Joe's locked in a bearish scenario, some profits on the downside. Obviously, this peaks out at that 128. Always the short strike on a butterfly is where you're looking. That's where that peak is, guys. But sure, this is a bearish play, short about 13 deltas and collecting just a tad bit of theta. That number will pick up as you get closer and closer to 128.
Yeah, and yeah, go ahead, Joe.
I was going to say the other thing is, too, it's short a little bit of vol, which I'm actually okay with, kind of given the fact that you've seen the vol spike in the last couple of days. I think it's probably around the 60th percentile, so I don't mind being a little bit short of vol.
Sucks, it's so many
especially if we kind of grind
contracts
down towards that 128
to close
strike.
it.
That's going to help this position.
The $100
Yeah,
to close these.
3 weeks in that
at the
position.
minimum.
And below that 125, because it's not an equidistance type of butterfly, you're still going to remain profitable and a more than double on that below 125 too. So I think that's a key point when you're doing trades like this, where you get in at a lower cost entry point, lower risk.
It's still trading on Robinhood? I
but
don't think so.
You don't profit as much if it goes below that 125.
It's probably going to keep
All right,
falling,
great
but you're going to
stuff,
see
as
just
always, from
volatility.
Joe
It's going to have big
Mazzola, Director
bounces.
of Trading and Education
IV
at
is going to be
Charles
insane on the
Schwab. Let's
options.
break down
So
markets and that example trade there in JP Morgan.
It probably will
A
keep
tough
falling.
day
And
for the financials
the news I've
across
heard
the
is they're
board.
getting liquidated.
Coming up after the break, Kevin and I are going to be joined by Megan Brantley from Likefolio
Oh.
for a discussion on Uber, which is up about 27% so far this year, despite the drop this week in shares. Stick around. Fast Markets coming right back.
Yeah, it might not even come back. Might not even come back on. Has been closed by regulators. There you go. Yeah. Silicon Valley Bank has been closed by regulators, which are now in charge of the bank's deposits, according to a release sent out by Federal Deposit. Yeah, I guess we heard that on here. So it's now FDIC is taking care of it and paying people out. So you're probably not going to get this thing resumed, I would imagine. That happens so fast. I don't think there'll be any liquidity on the market for it if it's halted on all the exchanges. Other than Robinhood. That's because Robinhood's fake. It's just numbers on a screen. Yeah, here comes the spy. They're trading their own exchange. It's all just internalized. I did it. I shorted at the low. A schmuck. Wasted that whole move. Squandered away. Oh, it's bouncing. That's an engulfing candle to the upside. I don't like my short. I flipped it to long. Don't follow me. BY is holding up nice here above VWAP. Setting up its own little barcoding bull flag. It was like just this morning SIVB was saying, don't panic, it's fine. Wasn't it them? Funny. Now they're shut down already by regulators. What the heck, man? They seem to work awful fast when it comes to that. Yeah, we've been dealing with FTDs and internalization for years. And individuals, trades, never getting to lit markets. 95% are dark pooled. SPY is moving up here now. See how high it goes. Move back up to here, it'd be perfect. I'd flip back short. BBBY hanging out kind of at the top there. Buffoon.
And Uber is that one that's in both categories, but it looks like both categories are a little negative, Megan.
The big
so
candle on
am I
SPY,
looking
man.
at this data right? It seems okay, but
Ow.
not great.
Oh, BBY popped up.
Yeah, you know,
Nat
you're
gas
exactly
just
right. And that's kind of
flushed
how
down.
we look at Uber. I think it's nice to see Uber's happiness high and stable, especially versus its competitors. You know, it's doing a better job just across the board in keeping consumers happy, which is good. But that growth is slowing down, and that may be unexpected because we did see you know, some pretty nice numbers in Q4.
There's an Uber ad?
And now we're
That's
starting to
sick.
see that drop off. You know, one thing, I guess one positive piece of data that we are seeing is something more related to its active drivers. So people, you know, maybe there's a higher availability of rides. This is partially contributing to its happiness score, but also we see inflation really weighing on consumers. And one effect that that's having is it's pushing them into this concept of side hustles. That's a new trend that we're tracking. And we've seen people who are talking about, you know, picking up, you know, an extra job or finding ways to make extra money, like for example, driving for Uber. You know, those mentions are at all-time high. So I think that Uber has a nice, you know, supply of drivers. And so now riders are happy because rides are available, but that growth is slowing down just a bit. So this for us is just a little bit of a red flag of, okay, Uber had some nice momentum this year, and it certainly had a nice fourth quarter, but maybe the first quarter could fall in a little bit below expectations. So we're being a little bit more careful here. We actually have Uber more in a neutral range for us.
So you've got it in the neutral range. We had earnings
Watch this line
a few
went
weeks
back.
ago.
See this red line showing where the price
Initially
is?
fell, then came
I have
back.
to mark it myself.
But
It's
Megan,
annoying.
when you guys, you know, compile
does on
your
the
data
app,
for
not on the
Uber, you know, this is
desktop.
ingrained in everybody that, you know, does something. I live in a big city,
I don't
so
wanna
we
get
use
another
an Uber all
contract
the
here.
time. But
While I wait for the
long
momentum,
term, do you look at this
got a
as
good amount of
something where,
nat
you
gas.
know, it's not going to go away, and they're, you know, on their way to, you know, expanding their business and maybe tightening it up. And if they get, you know, driverless cars, that'll actually really help. Maybe that's years down the road. But longer term, is your data pretty positive for Uber?
Yeah, so longer term, I think happiness is probably the most important metric for us, and Uber's happiness looks pretty stable and it's higher versus other peers. So I think that that's really good. And again, the fact that it has more than one service on its app, that you can do more than one thing, you can do more than just ride with Uber, you can have other things delivered. And I think that if Uber maintains and executes on this long-term vision, and especially if it gets, you know, driverless cars and things like that in place, I think that that is a game changer for Uber long term. So it's definitely possible, but short term, you know, there could be a few bumps in the road.
Close
You know,
out
perhaps this first quarter might come in a little bit weaker, but long term, this is still a name that we watch and we like just because of that, you know, big picture vision that Uber has versus some of its other peers.
Yeah, you make a great point. The chart over the last year has been a roller coaster, so maybe you have to have that long-term vision. All right, thanks to Megan Brantley, Vice President of Research
Thanks,
at
guys.
Lightfoot. Thanks, Megan. Appreciate all the data that you bring us here on a daily basis. All right, Kev, let's get into this. They're thinking about spinning off their freight business. That's come down the pipeline. New York City lowering the cost for a lot of the food delivery drivers there, so that's positive. How do you want to look at this from an example trade?
Maybe.
Yeah,
I remember that actually that Friday. That was crazy. I couldn't believe they let it run on a Friday.
$300, $400, $500 name.
Pressure on the market
This is a
makers
name
for
that you could
the
actually
options.
do a covered call strategy and without a lot
At this point, though, let's see.
capital outlay, right?
Yeah, they're fine.
And again,
We've been in a
doesn't have
reverse
dividend,
gamma
so
squeeze.
you could do the cash secure put.
Getting over $1.50 would
exercise time,
definitely be good,
I
but
just did a
being above
call
$1, like,
strategy
that's
where you buy the underlying, you
not a whole lot of
sell
options
the out
there.
of the money call against it, and then you continually if you want to be a long-term shareholder for Uber, you continually extend duration on that short call and chip away at that net debit and simultaneously chip away at that break even, Tom. So in this case, buying the underlying, selling out of the money call. This time I went 14 days out and just wait on, use theta to chip away, enhance your overall returns on this trade, Tom.
Yeah, and we've got the risk profile up on it now. For every 100 shares of stock that you buy in Uber, selling one of the March 24th weeklies that expire in 14 days, 35 strike call and out of the money call. You're paying roughly about a 31.50 debit. It's actually trading closer to 31.20 now, Kev, because stocks are weakening as we speak. But if you pay 31.50 debit, you're buying the shares at a discount because you're selling that out of the money call. And Kevin, we usually talk about covered call positions, trying to gather some yield on a potential dividend that a company pays. This example, I like that you brought this because you're not getting that dividend yield because they don't pay a dividend. But at the same time, you're still creating yield by selling that out of the money call. You mentioned that we can adjust or roll the short option as we get closer to expiration if the market's open and liquidity is provided, and you chip away at that break even. You're buying the shares at a discount, and every time you collect a credit on any adjustment or roll, that actually lowers that break-even point. So it's a longer duration trade.
Yeah, BBY is flirting with that high. Little peak from earlier today.
Data that they gave us where they like it long term. But a good look at a covered call in typically a stock that we don't look at covered calls in if you want to be a shareholder. Your risk is what you pay for this covered call.
I kept my longs.
So you've got about $3,150 in
Well, we've had a
risk.
pretty
Keep
big
that in mind.
sell-off, so we
Some assignment
could
risk,
have
which
some
would
relief
take
bounce
away your
on a
stock
Friday
if the stock goes
from
above
yesterday.
the 35 strike.
There's a
at
little high
expiration. So
wick on
good look at that example
BBBY.
trade covered call. All right, Kev, after this break, we're going to dive into
Getting
another
closer
stock
to the
that
open
got
on
an
it.
analyst downgrade, and this is Caterpillar. Stock's been doing well, just hit all-time highs earlier this year. So
There was a Friday where
somebody
BBY,
thinking
had
maybe it's
a
topping out
rally
here.
started, which
that's
was
coming up next here on Fast Market.
pretty unusual. This little head and shoulders building. Okay, I got out of the long. That's fine. Made back my loss from somewhere here. This one that I went short on. Could re-short here. On either leveraging an ETF, leverage ETFs. Longer term? No, not for long term. They have decay. For long term, you just do normal ETFs, non-levered. I kind of rejecting the VWAP break. Oh, look at that candle. Pretty big moves today on SPY, really. I mean, we've traded in a range, but it's made up good ground in a short amount of time, both to the up and the down. TQQQ, yeah, I think that's levered. Decay, there's like management fees and stuff decaying over time, right? This one, I don't know, you have to look this up if it has decay. Head and shoulders on SPY. Yeah, that's what I was looking at. Might be a little head and shoulders here. January 9th, Feb 3rd. Box D, 41%. Holding up nice. Although that would have been a hard buy. Short there would have been nice. And G is still kind of making an inverted head and shoulders. Like to see it hold at least this level for that to confirm. If it breaks below here, I'm in trouble. Consolidation at this level would be nice. Then some more ups. To 40% per year. There you go.
Information, and we got that today. We had the jobs report, the wages component, not only in addition to the non-farm payrolls, and they kind of balanced each other out in some ways. And so it seems like investors waiting for more information, now they got it, and they're trying to figure out exactly what to do with it. So that's why I think we should be watching this market into the end of the day, because we could see some more intraday volatility considering the news stories that are circulating today, but I think where we close is really going to be key.
Yeah, definitely where we close is going to be key. Russell down 7.4% this week, below its 50, 200, and 100-day moving averages. S&P 500 below all three of those averages also. So a terrible week here for equities. But Ben, look at the yields today, getting crushed as people are buying, going into the safety play here at Treasuries, right?
Yeah, well, with everything that's been going on with the regional banks, we saw quite the move in rates and interesting situation playing out in Treasuries. It's not normal for us to see indices lower with yields lower, but that is what's playing out. And it's almost like, well, not only did we see expectations for the Fed in terms of that March meeting, 50 back down to 25 basis points as far as what we're looking for in terms of a hike, but also we saw a bit of a safe haven tendency, I think, which hasn't really played out for a while, where we see investors and traders flock to bonds, right? And ultimately that, and played out today, it seemed like, so that was driving yields down a bit as well. They buy the futures to avoid some of that volatility on days like this, and there has been a fair amount of volatility. I mean, even look at the VIX, Tom, back up to the, up and through the 20 level this week with conviction after touching down 18, 19. So it really speaks to what we're seeing in terms of investors being on edge, a market that's hypersensitive, headline driven, and there's so much speculation out there right now.
Yeah, VIX up over 8.5% today, up 18% yesterday. So definitely the uncertainty index playing out in today's and this week's market. All right, thanks to Ben Lichtenstein, host of the Future Show here on the network, bringing in the market update. But now let's bring in George Tillis, senior markets correspondent. We're talking Caterpillar, George. UBS downgraded the stock. They only cut the price target
out the highs
really
here.
small, down to 225 from 230. But this is almost like
today,
an exhaustion trade,
though,
because if you look at Caterpillar over a 3-year chart, it's up
11:30 hours lower, but
130%.
12:30 is
so
bigger.
maybe some profit taken here.
That $1 million or $2 million.
Maybe so. I mean, if you just look at the price action since late September, early October, the stock was trading around like $150. I mean, stock has been on a tear, and this is the reason being is Caterpillar, which is
an inverted hammer or a normal hammer on the daily would be nice and bullish.
They've got 13% market share,
especially with the
in the total
MACD
world.
crossover.
So the U.S. dollar, which retreated back in late September, early October, helped the heavy machinery company, as well as the fact that they actually sell their equipment into the energy space as well. But if you look at UBS's call, and I think you bring up a good point.
I think I rolled them all already.
Tom, but the call really from a price target is only down $5 from 230 to 225. But they actually rated it as a sell.
Yeah, this might be the bottom right here. It's 1130.
Looking at a situation where there may be a downshift in cyclical growth, which has really been a huge catalyst for Caterpillar.
A hammer candle would be
in the last year or so, and in fact in the last 3 years.
And then this would also set up our RSI divergence if Monday is any bit higher than today's close.
Obviously has been a really great trade, especially in the last 6
back
months
up to
or so,
1.5.
which might have been played out.
Very easy.
We talked about General Electric, which has really been on a tear.
That's
move. Another stock that from the industrial space might be a little bit richly priced right now. But I think if you consider the earnings power for Caterpillar, and I think this is one of the reasons why the target price is only reduced by $5, the company's EBITDA on a forward basis is about 17%. And if you look at its forward multiple, around 15 times earnings, it's trading less than 1 times its EBITDA growth. So maybe the EBITDA expectations for Caterpillar, which is also
I don't know if we get a rally today, but
expecting about 8.5% forward.
so far
sales
today's
growth.
looking
That's
like a
about
bottom
10%
on
lower
BBBY,
than what the company generated in 2022,
which is playing
That's
out just how we wanted
conservative.
with the
And maybe
RSI
EBITDA
divergence.
numbers or the internal profitability
We'll
numbers
see
for
how tomorrow
Caterpillar
closes. That
seem to
be
be a little
confirmed,
bit more
but
aggressive versus the sales, which is more in line to reality.
You know, George and Tom, it's interesting what traders notice. The first thing that jumped out at me was only $5 on the price target downgrade. That's the first thing I noticed when I read about this today. But George,
done this before. We haven't seen a hammer. We
US
haven't
economy.
broken the low.
And the one note that I read really talked
We've
about
not broken
their
this
backlog,
low.
which swelled during 2022.
Got a bullish MACD
and some of that
crossover.
growth in their backlog
And we have to close
is
the day. We have
starting
to see what happens by end of day. But
taper off.
this is,
In terms of their
this is a
new
good sign
orders coming in.
so far.
Is that something that should be alarming for if you're a Caterpillar stockholder? I mean, they have a good size, healthy backlog, but the fact that it's slowed down in its growth could be a red flag, George.
George?
It could be, and it's a good point to bring up because if you think about larger capital asset projects or allocation projects, once they're agreed upon, they take time to manifest, and that's manifested into a large backlog. But then you have to think about what's next down the road. And, for all intents and purposes, we have to think about the cyclical nature of the business, the macro concerns, economic concerns. So capital projects might be coming
That's
up
a good
back a little bit, and
rotation
therefore the
into
backlog
safety.
is not going to increase as
Winning
much
Caterpillar.
as it has in the last year. But there are some pros.
yeah.
So there's some cons, but there are some pros. You have to
Geez,
think about the
it's even gonna
re-onshoring
sell
of
off from the banks.
manufacturing in the United States. I think that's a major catalyst for all industrial companies. And the other thing is clean energy minerals, minerals and mining. That's another catalyst for the company as well. But I think you have to consider, is it fairly valued? These are questions you have to ask. Fairly valued relative to the expectations going forward? Again, I can't answer that specifically. Some of the analysts think it seems to be fully priced, but looking at the sales growth relative to the earnings growth, the earnings growth looks a little lofty in my view, and that might be why we're seeing some pressure now in the last couple of weeks in Caterpillar. It's easy to see it this week because of the market, but again, it's a cyclical stock, and now we may be running into really economic headwinds now.
Yeah, they're calling it
with
cyclical.
interest rates and expectations of interest rates really sort of built in.
I suppose.
Yeah, slow down economic growth-wise.
It's got a dividend,
you
and
mentioned that the rare
does
minerals
have
that they're
growth.
mining. I was just in Australia, went by a new lithium mine. Caterpillar equipment everywhere out there, so definitely seeing some good business overseas also. All right, thanks to George Tillis, senior markets correspondent here.
All right, guys, thanks.
Yep, thanks, George.
It's coming
helping
down
us
a little
break
bit
down,
more
the
here.
backdrop here
I've
on
actually been
Caterpillar on
sprinkling
this
into some
downgrade.
shorts.
Kev,
Sprinkle.
The Infrastructure Investment Act that was in 2021 helped them out. The expansion globally as far as GDP growth, economies were pretty healthy here, but we're expecting
Dollar's
a slowdown.
not rallying, though.
Is that your thought
Need
here?
that to come up.
Why maybe this guy's kind of like not really? I don't really consider it a downgrade. Maybe it's just a consolidation phase.
Yeah, I mean, this is a cyclical name, and if you think, as this analyst does, that the cycle is peaking, right, and you look at the run that Caterpillar's having on, you're right, Tom. It's not a significant downgrade, but it's more caution than anything else. And,
I just look at iBorrow for everything, and no, there hasn't been. This hasn't had available shares since Wednesday.
Drop off its peak where it hit about 266. So a little caution here. Like I said, he only dropped the price tag by $5, but he did show that all these issues with the backlog slowing down and the potential for a slowdown in the economy and the cycle peaking all flash warning signals for this analyst, and he acted appropriately.
Yeah. Implied volatility on this name just off of 52-week lows that we've seen.
Maybe
there.
it's kind of at a support here.
The weakness about down nearly 9%
it's way oversold.
This week alone. But Kev, I wanted to
the gap will probably get filled, but maybe not before some
lower
bouncing and consolidation.
The strategy costs less when vol's lower, but then also maybe
unless if the market keeps going crazy, it seems like it
the analyst
got pulled with that.
So I looked at a 1 month wide
dividend though,
to the
so it's
downside.
ex-dividend.
April monthlies that
kind of a
expire in 42
post-dividend
days.
sell-off.
The 230 puts selling the March 17th monthlies that expire in 7 days. the 230 puts. You're paying roughly a debit. We've got 460 up here on the risk profile. Stock has come down a little bit, so it's about 480. But if you pay 460 debit on this, that's going to be your risk, what you pay. But look at those break evens, Kev.
Tesla's
Between
still
about
green.
Just above 221.
Rivian made the
downside,
flip,
all the way
down
up at
1.5.
240, where you can potentially remain profitable
I need
on
this
this
one
type of strategy. 1 month wide, Kevin, but it's setting up for some consolidation.
Riv
and
at
if implied
under
volatility
13.
rises, that could also expand the price of this
By next
calendar.
Friday.
Yeah, there's the kicker on this trade, Tom, right? If you look, you've got about 17.5 Vega for every spread you have on, which means a 1 point uptick in implied volatility means added theoretical P&L to this position. Now, those
Head and shoulders looks like it might be
those
playing
numbers,
out
but
here on
they're
SPY.
more
See if it breaks
guidelines
through
for
this
what can
this
happen
level.
in implied volatility.
Could get
But
pretty wild if we start
that's
to.
how you add Vega
Still-
to a position.
still early,
Tom.
it's only
You
1
bring
o'clock.
that long option further out on the calendar. If you wanted to go shorter, right, your premium would go down from where it's trading right now, about 480, but also that Vega would go down. So if you ever want to add Vega to a position, bring that long option out further on the calendar. That'll add that Vega, which with Caterpillar at low implied volatilities might be the right trade to do. We don't know until it plays out, but this is collecting a fair amount of theoretical theta, Tom. And like I said,
Easy
you've got
money.
that long Vega if you get a pop.
Yeah, so the short option, you've got some assignment risk on that. That's got 7 days till expiration, Kev. I just looked at if you were just to roll the near term, if you were, rolling the short option on the March 10th weekly options to the March 17th, that credit for a 1 week roll is trading around $3. So it has a potential to, if you adjust this trade, markets open, liquidity is provided. If you roll that short option repeatedly, the credits that you collect reduce your risk, increase potential profitability too, right, on something like that, Kev. But $3 potentially on every roll if the market or if the stock is at or near
Getting a little
that
flushy
230
maybe.
level. So it does have some potential to be relatively profitable compared to what you're paying.
Had a
Because
perfect
that
entry
debit
up
that you're
here.
paying about
Take
$460 per spread is your risk on
Ops,
that position.
12%
but
up, still
setting up for some
holding.
consolidation, maybe a grind lower. All right, that's going to do it for you and I here today, Kevin, on Fast Market. But stick around right here on the TD Ameritrade Network.
Teeter.
Next Gen Investing's coming up. Have a great weekend.
Teeter trading. SPY's getting down to the lows now. Yeah, today's volume seems like it's increasing from yesterday. Good afternoon, trader. Yeah, the last 2 days we've had increasing volume, which to me is a good sign of the bottom being built. Not crazy yet, but it has been increasing. So 47 million that day, 55 million yesterday. Today I think we're on pace to beat yesterday's. But just need maybe another volume spike here. And look at it, not really barcoding. We've abandoned the barcode again. If I was okay in the situation like now. I'm liking this hammer candle that's potentially being built. We'll see where we close today, but hammer and a bullish MACD crossover would both be good signs of a bottom. Look at that. So I think it does the barcode algo gets turned off, and then we get onto the SPY algo, and it moves with the SPY. That's what we were noticing this morning also. There's no barcode, and we were literally just following the SPY. Just drop and bounce, and then it turned off here, this barcode area. And then after this little rally here, let's see. Yeah, that rally was all on its own on BBBY. I started with that volume spike, but then it seems like here that SPY algo got turned back on with the SPY dropping. Bank run. Yeah. Something like that. A virtual bank run. Sorts, pulling your money out of bank stocks. SPY is now dropping more. Buys at a low here. Could drop off some shorts. Looks like it'll probably flush through, but let's see. Yeah, see, BBY is not barcoding now, and looks like it's trading with the SPY. Huh. Because it does, if you look it up, it does have some positive beta. They just flip it on and off just enough to show it. Closing one of my shorts.
Anything, kind of surprised to see the market mostly hanging in there. Down 1%, you could really felt like it could have been worse than that, but you see the Russell really outsized exposure to that regional banking sector of the
volatility upside. Look,
world.
BBY.
Quite a big margin.
Look at how it's moving with it now. What the heck?
Eyes on that throughout the show. If anything comes up, of course, we'll update. But
dude.
Unless nothing does, we're going to stick it to the micro.
Wow.
Yeah, there's still a ton of other individual names to get through, a ton of names on the move today, albeit mostly lower, but we will kick things off.
UVXY I've gotten burned by a lot. I don't trade that one really.
Chart and trade those
I'm just trading futures.
And our FOMO discussion today is naturally one of the big banks. We'll be looking at Bank of America. And actually, why several analysts do still see this as an area of opportunity for some of these bigger banks. Then we'll
is the overnight?
Apple
No,
being
overnight.
Today. Last but not least, we will look at Gap for our under 30 story. Gap lower in reaction to a disappointing fourth quarter.
S&P 500 dynamic overwrite.
The Apple downgrade is quite interesting as well. Seems to be going against the grain a little bit. A company that just seems so loved always.
That's it, Javier. Back to BBBY. Quit messing around with GME.
Excited to talk that. We'll talk some Gap, of course, as well.
Sell your last BY into
A
strength.
little bit more financials talk towards the middle part of the show. But let's start with upvote, downvote. Not endorsements, not recommendations.
GME should be a good buy. I think at like 15.5. A retest on that.
But I think names that
for the low should be good. If it holds.
Some pretty big, heavy.
It starts to show some strength there, then that's where I'd go long on GME. And I will. I'll probably get some leaps.
Again, not endorsements, not recommendations. On the move to the downside today is Oracle.
This will it'll probably take till next week to get there.
Oracle, objectively a pretty strong report. Now they did.
And maybe even go lower. It might break below and set up an RSI divergence like we did last year at the same time before earnings.
on the earnings call, though the
Should be
company
even better.
did give really strong fourth quarter earnings
You need to
guidance,
accelerate
coming in
this
ahead of
the
consensus.
speed to the downside, though, to do
revenue
that.
growth that's projected to climb between
So that might
15
accelerate
and
next week.
17%. That's in line with consensus. However, analysts really, I would say,
Oh,
were
SPXS,
focused
yeah.
on this revenue figure as we did see it slightly miss the mark, and we did still see its bottom line
BBBY is not
just
over yet?
slightly inch
Said it's
past
over.
expectations. Now, their adjusted earnings still rose on a year-over-year basis, and their largest segment, which is their cloud services and license support, rose
I don't know which I like out of
17%
those.
year-over-year. Now, their cloud license and on-premise license revenue
like
was
UVXY
flat
is, like,
from year-ago levels, while
manipulated
hardware
more for some
revenue
reason.
rose 2%, and the brightest
This one seems
spot
more
was
straightforward.
services revenue climbed about 74% on a year-over-year basis. Now, Larry Ellison, who is one of Oracle's founders and chairman, said that since June of last year,
So
when
if
they
we break this low, I'll probably
Cerner,
add to
that
those
business
shorts.
has increased
We
its
start to
healthcare contract by about
bounce, I'll
$5
get rid of
billion, and they do expect
rest of them.
actually the signing of new healthcare contracts to
You're low
accelerate
on that
now
gas.
over
Look
the
at
next
you.
several quarters.
I'm very interested, though, in how
Oracle's
BBY
board
is
also did
now,
hike their
how
quarterly
it's traded
dividend
today.
by 25% to 70 cents per share to be paid at the end of April. So
I don't have any
there was a
GME
lot
shares,
good in this
Bungie.
report, and I have to think that with some of the massive moves lower and some of the tech names we're
I
seeing
have covered
today,
calls
that's
on.
dragging on
Sorry,
what was,
sorry, you said
I
covered
would
calls.
say,
I do have
still
covered
a
calls,
pretty
yeah.
positive report from a name
I have
like
7
Oracle that's
covered
still
calls
up
for this next
about
week.
3% for the year, but down about 7.5% from its yearly high.
Yeah, Oracle's quietly
UVXY isn't
one of those
FTDs, that's
names
ridiculous.
That is a little
That should
bit
not
more
happen.
of a legacy name. I would say typically trades with a relatively suppressed implied volatility. You look at it now post earnings at about 29% implied volatility, with the overall market trading at about 25% implied volatility. It's not much of a premium. So you can almost think of this as in that same sort of basket of names like a Microsoft, or in many ways an IBM or an Apple in some capacity. But what makes it different than IBM in many ways is that it's seemingly been able to remain relevant. It's seemingly
I don't even know the next level if we break that. That's a big level.
From a long-term legacy player to
There's
still
nothing
a competitive company. We've seen
very
Microsoft,
strong
Apple,
below
of course,
that
do
for
that
ways.
to greater degrees of success. But pretty impressive company. As you said, the numbers weren't necessarily bad, but maybe not quite hitting that high watermark and high bar that the market had established for it. But I'm going to say upvote. A little bit of a downwards move here. Obviously, the overall market is a little bit weak today as well. But I want to talk about the fundamental, or the technicals rather. We got a special guest for Chartmaster, so I'm looking forward to that.
Yeah, now our next name, I have to say that when we were looking at United this morning, it was actually higher on the day. Now they've since given back some of those gains.
End of day,
and
BBY.
some shares are down
Right
just
where it's
over
at,
1.5%.
11.95.
But some positive news. Barclays did upgrade the stock to overweight from equal weight. They raised price target to a whopping $80 a share from $52. This implies about 53% upside from where it's currently trading, just shy of $52. The analyst said the airline should benefit from strong demand this spring and said they're swapping their safe airline recommendations from Southwest to Alaska Air and taking on more leverage risk with United while stepping back from an increasingly complex Allegiant. On the other
I've got
hand, they
these
did
covered
downgrade
calls on
Southwest
GME.
today to equal weight from overweight while
7.20
reducing its price target to
for
$38
next
from
Friday.
$42, while raising its price target on Delta to $48 with an overweight
Which
rating.
I'll close next
Also
week
raising American
once
to
they're up.
$15 with an underweight rating.
If they are
So
80-90%.
This just goes to show really
Or
the
just wait
collective
if it-
action we've
wait till
seen
Friday.
in airlines this year.
Closing
There
for a
have been
minimum and then
some clear winners, some clear losers. Southwest,
maybe
the
start
only name
scaling
that's
into
in the
leaps
red now
depending on
for
the
year,
price.
down about 2.5%, but United
Maybe some more
still
20s.
whopping 38% year to date and the best performer of the bunch, Alex.
Yeah,
Those aren't even
really
leaps, those are
impressive
January.
start to the year, and I think this is a quite interesting note, particularly for those who are trying to unpack the airlines as individual companies as opposed to a sector as a whole. Oftentimes we do look at it as a sort of tourism and travel is doing well, maybe oil prices are coming down, and we apply kind of macro analysis to this
Thanks for your
space.
thumbs
But I
up
think
today,
this,
guys.
particular
Killed
note
it.
does a good job
Well done,
of kind of
51
laying
of
out
you.
the differences
Well
between
done.
them, the different types of idiosyncratic risks that you're taking on with an investment in different ones.
I was looking kind of weak
ones that
here.
maybe
Not sure if
have
we're going
more
to get a
leverage,
bounce.
as they talk about
Or
versus
flush.
the complexity, and then of course they talk about some sort of their safer bets as well. But I'm going to say downvote. We talked about the airlines quite a bit. Certainly one that we'll have our eyes on. I'm sure it'll
We
come
do-
up again.
do start to
But
break.
again, I can't understate the impressive nature of
We'll
its
have to
start to the
add-
year, and it just
add to
continues
the
that
shorts.
even with a little bit of a pullback today. What really sticks out though on this list is the next one, and that's DocuSign. one of these moves is not like the other, and this is the one that really jumps off the page.
I know, could you tell I was excited to talk about it? I almost cut you off, because what in the world is going on with DocuSign today? Shares are down just shy of 20%, despite the fact that they posted better than expected quarterly results. I mean, it's wild to me. So this one took some digging to understand why we are seeing this degree of selling, because like I said, their fourth quarter adjusted earnings did top expectations, coming in around 65 cents per share on revenue that also beat expectations at around $659 million. Guidance was also in line with expectations. They're projecting revenue to fall between $639 and $643 million versus consensus at around $640 million.
Maybe a flush on a Friday with SPY.
This year strong as they really
pretty
reshaped
ugly, and they don't like
themselves
people to look ugly.
in their innovation roadmap as well as self-service capabilities. However,
thing,
from
Gene.
what I could tell from what the street is saying, they are
Glad to
pretty
hear it.
underwhelmed with their
Thanks,
prospects for profitability going forward. Really, we're seeing that the street is saying margins should have been improving more quickly for this company after they did announce reducing 10% of their workforce last month, which followed a 9% reduction in staff in September. They've had two pretty major rounds of layoffs just in the last several months, and the street feels as though this should be then translating into more positive results. So RBC Capital said the near-term outlook for this reason seems very challenging for this name. They trimmed their price target to, they actually raised their price target to $59 a share, but then they gave it a rating of sector perform. JP Morgan, though, did downgrade shares, lowering its price target, as well as Piper Sandler, which also cut its price target to $60 a share with a neutral rating. So it does seem like this path moving ahead seems rocky, despite the fact that guidance was in line. So the street's sort of having a mind of its own, but that's, I think, why we were seeing such a massive move today, Alex.
Yeah, and the JP Morgan analyst, Mark Murphy, his assessment of this landscape for DocuSign, I thought was kind of sobering, if you will, or at least, highly critical of sort of the stance that this company is in terms of its role in this space. And I'll read a couple points that really stuck out to me. You mentioned that they downgrade. They do bring it to underweight from neutral. They do cut the price target to 48, which is lower than the current share price is, even after this 20% correction in the shares. But they talked about that guidance being conservative, kind of giving themselves an easy bar to clear. Sometimes that's seen is, I guess, on a negative, because the company doesn't have the confidence to kind of present something that's a little bit more to shoot for. But what really stuck out to me, and these are all sort of reasons that this analyst sees the risk and reward, kind of the risk and reward of the current prices being tilted downwards, basically saying I see more risk than reward potential, is that the continued competitive presence of Adobe and the likelihood of emerging competition from Microsoft. This is what I've had in the back of my mind when it comes to this company since it's coming to the main stage, if you will, over the last few years. This is their core business. If Microsoft steps into this, it's just another thing Microsoft does. And so when it comes down to a technology that on the surface seems fairly easy to replicate, Jenny, it's not hard to keep away these big, massive competitors from just coming in and just seemingly just stealing your business and leaving you high and dry. And so I'm not saying that's going to happen to DocuSign by any stretch, but what I am saying is, what are they going to be able to do about the emergence of a Microsoft or that continued competition and presence of names like Adobe that just have so many other things going on that really do insulate them amongst that in competition. Gonna say downvote though, huge move. This is probably gonna come up again next week then just because of this, but sometimes I don't wanna say let the dust settle and avoid it, but sometimes you gotta let the market interpret this information, a lot of information, like a fire hose, drinking through a fire hose, and you gotta let it play out, and then we can come back and reassess next week.
Yeah, but I completely agree with you. I'd say their business model to me seems so narrow, which is, a huge concern in this market environment. Our next name, though, to end this group on a positive note is Ulta Beauty, which is hanging on for dear life on its near 1% gain on the back of its quarterly update, when they did pretty much deliver on all of their metrics in the fourth quarter. They posted better than expected revenue, coming up around $3.2 billion. This beat consensus estimates, also rose from a year ago on the fact that earnings also came in around $6.68 per share, also beating estimates pretty handily by over $1 per share there from what the street had been expecting at around $5.64 a share. Now they see now their 2023 revenue to fall between about 10.95 and 11.05 billion, well above consensus, which had called for $10 billion. And they expect their earnings to also come in well above what consensus had been expecting. So really, really
keeps me calm. Good. Glad to hear.
BMO also raising its price target to $510 a share. From the analyst coverage I could see today, Alex, no sells in this name. And that chart is just one that you don't see typically price action, especially in retail, that looks that strong.
If we could zoom that out to 5 years, that would be great. I think the numbers speak for themselves, but I want to look at this 5-year chart real quick, and I don't want to steal the technical picture from Ben when he joins us in the next segment. But I can't think of a more impressive chart over the last 5 years on an individual stock basis than this one. And I haven't gone through and looked at every single company, but we're effectively at all-time highs. And this isn't like the energy companies where they just cratered and then they're just getting back to where they were. It's like double where it was pre-pandemic, and it's still surging. So this is like the tech and energy charts put together with no down move in the last 3 years. It's just absolutely incredible.
It is, especially because I thought the trend was during the pandemic, no one was wearing makeup, but Ulta has made this shift now into skincare and some of these different beauty products, which has shown some incredible resiliency. A company that's been so well managed throughout what has been a very challenging retail environment. So we will be clearly diving more into the technicals on that name, as well as Oracle. Ben Lichtenstein will join us coming up next to discuss these technicals, look at some charts, as well as some example trades.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's
There's the flush. Jeez,
the
I'm
platform demo web.
getting tied up over here. I just went short again. Pretty big flush. Whew. There it is. We've been waiting for it. I had a good entry up here, but I didn't freaking take it. All right, we'll see if this holds or if this is just a false little flush. This is looking pretty legit though. Down over 1%. Told you. It's finally in the green. That's the problem with buying early in the morning. Your IV is much higher. You got day traders playing around with it up and down. Unless you're going to sell it in the first hour, you probably shouldn't buy it in the first hour or two. So unless if you bought almost ready to open, as you can see here, $387.26, which we kind of just flushed through. There's not a whole lot of big supports down here, so today could end up being a big day. I mean, it could come down a lot. I just need to not overtrade it. I just stuck into everything I had. Way better off today. Oh well. There's always a bounce. Always a bounce. You're always right, Mr. Invest. Why don't you tell me? $12.46. Oh, at the VWAP? That was a nice entry. That was a nice entry.
paused and regained composure, seen overlapping rotational trade, and then those areas where you see that vertical phase to the upside, and then you start to stack them up and you can determine trend. They sort of leave a footprint as they get established here, and so that's what I did with this chart. You can see we're looking at 60-minute candles. We'll work our way into the bigger picture here in just a second, but first and foremost, just look at these areas of consolidation, 3 of them that I went ahead and identified. You've got one right around this 460 level, right? We're talking about consolidation area that formed. We're talking into the beginning of January. Then we break out to the upside and we form one around 490. And then recently we've been kind of consolidating throughout the month of February around this 520 level. Now, here you can see again migration of value to the upside. So you see trend playing out as that's going on to the upside. But I wanted to show you, it was interesting because look at this area of 490 in terms of the retest of that area that we saw as far as earnings, because as these areas are forming to the upside, you want to constantly reference the one prior to the area you're currently forming. Right now, the bulls are looking for an area to form above this 520 range, this zone that we're in, but they don't want to go below 490. So you're constantly referencing the prior area relative to the one that you're currently forming.
Wait a minute, this is the first day of the year of trading.
Intraday hourly candle chart, look at a trend environment to the upside, and look at the daily. Here's the move we just looked at.
We're getting down to the high of the first day of the year.
Level up to 537, a small blip on the radar in terms of this bigger picture, well-defined trend going all the way back to what we're talking about the spring of 2020.
Yeah, Head and Shoulders ended up being right.
124, 125, and again up to that 537 level. And I went ahead and I did the same thing for this chart, just trying to identify some of these areas of consolidation that have formed. And look, there's a lot of them here, right? And a staircase type pattern playing out. We're talking 225, 275, 3.25, 385, 460. Remember, we were just talking about 520. So again, in this instance, that intraday, that hourly chart's just a fraction of what we're seeing here on the bigger picture, longer term, a very bold trend. Taking one more look at price activity in terms of this daily time.
It's moving with SPY, but it just doesn't have.
As far as, well, take a look, the 50-day, the 200-day
not having big flushes
average.
with it.
This is a stock, Alex, Jenny. I think when a lot of traders look at this chart, they're going to say, I wish my portfolio had other stocks in it that looked like this, right? Alta has been in an ultra trend environment to the upside. It's done very well, above the 50, above the 200-day moving average. RSI is kind of not really participating to the same extent as price to the upside right now, but look at the stock, up 11% year to date.
Easy puts.
So RSI diverging from some of the strong price activity right here, but we're
going to
sort of
right
ignore
now?
that for now because there's so much good, it seems like, to look for in Alta and Ben. It has been quite some time since we have seen such a defined stair-stepper pattern to the upside. I mean, I feel like all we talk about is names that have trended to the downside on a longer-term basis. So finally, we have some positivity here today. So Alex, when considering the fact that, like Ben said, 520 is an area of key breakout for the bulls to watch. We were above 530 today. Failed to hold there. So maybe walk us through today then a more neutral to bullish example trade, because we have to consider that we've given up some of those gains already on the day.
Yeah, certainly giving back some of the gains, but also you can't acknowledge or not acknowledge the fact that this stock's been just so impressive. And so at some point, if the overall market
getting
does
flushy
turn
here
down,
on the market,
it's shown its ability to be resilient, but is it going to be completely immune
BBBY
to
back down to
downwards
VWAP?
It's hard to say. And so I wanted to look at something that would give us a little bit of room in the event that this stock does
still
turn
green.
a little bit downwards,
okay.
But mostly
Green's
holds
down
on
2.5.
to it's really, really impressive performance. And before we get into the exact specifics of the
TSM has
trade,
held up
Jenny,
well.
I think
Very
that
well.
we have to assess this company with the fact that while it's selling consumer discretionary products, for many, this is a consumer staple. These are products they use on a daily basis, and they're not just simply trading down or replacing unless they absolutely have to. And the business model of a place like Ulta that sells both the lower price point and the higher price point is positioned to cater to whatever your needs may be. So we've joked about Starbucks being a consumer staple, even though it is oftentimes discretionary. I think it's safe to say that a lot of these products that are being sold at Ulta truly are staple-like in their resiliency and defensive nature. But the example trade, selling a put vertical below the market, April 510, 505, looking for $1.50. That'd be 30 cents on the dollar of risk. So $150 with $350 in risk. The break even would be 508.50. It is neutral to bullish, as you mentioned, Jenny. Elongated Z risk profile, where we start in the max profitability zone. looking for
Why
a
just
holding
selling?
on to this price action with a modest amount of downwards cushion. But most importantly, this is a risk-defined trade that would benefit from, again, just a sideways move. As Ben talked about, that stair-step pattern oftentimes does have that horizontal time frame. And if
Tried
we
to get
catch
another
it
nat
during
gas
that,
contract.
either
Didn't
vertical
get
to
filled.
the upside or
Nat gas starting to
horizontal
rally a little
to the
bit.
downside, both of those are max profitable for this type of a trade.
Jenny.
I think that's really well put, and I can honestly say this is a consumer staple for me because
Jenny.
I do have to purchase makeup whether I want to spend the money or not, which is unfortunate but a necessary evil. But our next name today now is Oracle, and talk about a name that is lacking that well-defined trend
You
as
don't
we've
wear
been sort of all
makeup.
over
Come
the
on.
place. And the year-to-date chart looks a lot different than the 5-year chart here, Ben, as I was looking more long-term, and things have not been able to catch up to where they were really pre-pandemic, but right around at this point are year-to-date lows.
Yeah, not seeing that same staircase type pattern when you look at the more granular intraday hourly time frame. We were kind of chopping into earnings, a bit of a breakout to the downside,
Tesla,
but when in doubt,
yeah.
zoom out. We'll do just that, and that's where you start to see the trend in terms of Oracle. But let's begin with this hourly time frame and that sideways consolidation that was forming, upper extreme around 91, lower extreme around 86, and then you can see that imbalance that the earnings, the news created, right? This is, again, a pretty good example of that horizontal phase balance overlapping rotational and value forming, and then you get that imbalance phase. This again was from the quarterly results, and you can see the breakdown. I guess I'm starting to wonder, will we form a balance area now on this time frame, the hourly around this 83, 84 area, because this is a key area. I'm going to show you why in a second when we look at the daily time frame, but in this instance, just kind of notice the high conviction trade to the downside and the fact that we really have yet to reject this lower level, right? We're starting to see overlapping, rotational, and more horizontal type price activity. But let's take a step back. I don't want to get too married to this hourly chart because there's just not a lot of information there. I mentioned when you zoom out a little bit, you're going to see a very well-defined trend play out. This chart goes all the way back to the beginning of October. High conviction trade to the upside, a couple periods of consolidation, but here you can see that range that we just identified and the pullback. Now this pullback was significant, 83, 84. I'm going to show you why, because when you look at that chart through the same lens that we did in terms of the 60-minute time frame and the other charts we've looked at, when you identify these areas of balance, 64, 76, and even within this area, see it played out a couple times, right? You get a breakout, sideways consolidation, but identifying these bigger areas, we had 80 which formed into the middle of December, beginning of January, and here you can see breaking out. Now constantly referencing the prior area relative to the one that you're forming, you're checking and always noting that 80 level. Look where we traded down to, didn't really break out below that. So this trend's still intact to the upside. And again, that $80 level being key right here at 83. Keep an eye on this. But one more step back. In fact, in this instance, we'll move from the 4-hour into the weekly time frame. Look at this. I mean, talk about a well-defined trend. We're going all the way back to 2004 there. And then let's just do the same thing in terms of identifying a couple of these key areas to watch. And this is a weekly time frame, so much longer term, bigger picture chart. But look at this. I mean, talk about a
Wiseman
staircase
Fed
type pattern.
pause
Every
possible
$10,
after SVB
sideways
failure.
consolidation, 10, 20, 30, 40, 50.
The market's not really
and then
thinking
look at this
that, I
now,
don't think.
balancing 106 down to 60. I mentioned that key
Silicon
area,
Valley Bank was the
84.
second
It's gonna be
largest
somewhat
bank
pivotal
failure in
terms of
U.S.
this larger
history.
degree range.
Only
Right
Washington
above
Mutual
84
was
opens up
bigger.
the door for a retest
Wow,
of
this happens
106,
so fast.
Below that, retest of 60, but the bulls are in charge here as long as we hold above 50.
Finance
I mean,
CEO
this
says
is a,
Binance
talk
does
about a
not have
well-defined
exposure to
trend here, and one that's
SVB.
done well for the longer-term bulls as well.
Yeah, Ben, I think that's a really good point because I was looking at year to date and I was like, what trend are we seeing? But you can definitely see when you zoom out, look at the broader picture, that this is still an uptrend.
Before the collapse of Silicon Valley Bank, the CEO sold $3.5 million worth of stock in the last 2 weeks.
Especially a name that's so well established like Oracle. But we will leave it there.
Silicon
Ben,
Valley
all of your
Bank has
technicals on this
collapsed, the
Friday.
largest
Our
bank
special chart master
since
for
2008.
Today. And Alex, when we look at trading Oracle,
I think
Ben
we're in
did
the crash,
mention that
guys.
84 level, which we are
That
now
very well could be the
down about
catalyst.
just over 3.5% on the day, and a lot of pessimism.
Silicon Valley was the
from the
16th
analyst community,
largest
so maybe
bank in the
taking
U.S.,
a more adverse approach
holding
here,
$210 billion in assets.
Yeah, and I think that last chart that Ben showed with that super long-term time horizon does a good job of illustrating kind of the unique aspect of the last few years for Oracle.
We'll see. We'll see what this turns into. 1.5% so far.
Been quite
Nothing
successful
too
and done
crazy.
quite well for investors. but it hasn't accelerated the same way that it did post-pandemic.
But
and it
the last
gave
3
back
days,
a lot of that. It's recovered some to start this year, and
paints
is
a
now giving
pretty,
back some.
pretty grim
of
picture.
that
Last
as
4
well.
days.
So the last few years have been almost abnormal.
This is literally
for
playing out
trading
just
in
like
this
back
game.
here,
Of
like
course,
we were
it's making
saying.
transitions and entering new
Not
high
quite
growth
the same. It's
areas.
actually
So
even
some of
worse
that is,
now, but
easy to be explained
moved
and,
down
and
after that
somewhat
little
expected,
bear market
possibly.
rally.
But let's just say that you're looking at that 84 kind of mark as a line in the
Much more
sand that
intraday
could
moves,
indicate
though.
whether this one retests towards its all-time highs or it does take a downwards move. Well, we're below 84 right now. If that's going to continue,
Sorting the
Ben
bounces.
provided a possible price target down near 60. But along the way, it's going to have to go through 75. And that's where I centered here for this example trade. If it's going to move lower, it may take a little bit of time for it to move lower. It isn't historically
Jimmy to the
as
moon.
volatile as other names. And so going out to
Not yet. It's
May
got to crash
expiration
first.
alongside of this put calendar, April, May, 75 put calendar for 50 cents. That'd be $50 in total risk.
I told you
on
Friday
this one if
crash.
these
Happy
options
midday.
expired worthless on this, and so.
Mr. Invest,
An
you're
interesting
just
risk profile.
full
We've looked at these countless
of
times.
wise
Jenny.
information.
Kind of
You
like a
should sell a
mountaintop
course.
peak, and it's going to be centered around that 75 mark to the downside. But a couple takeaways for this that I would like to stress is, one, this is easy to customize and change. If you have a different outlook, say you're bullish and you have a different price target to the upside,
Bed Bath
utilize
bouncing
a
on
call
BWAP.
calendar with the same
Not
or
fazed
different
by this sell-off in the
expirations
market.
depending on your time frame. That could be in store for that type of an outlook. For someone who's more or less bearish, maybe a different strike selection would better fit their particular outlook, and different expirations for different time horizons. This is one way to look at it, but it's more for illustration purposes here to show a thought, a line of thinking, and then a way to potentially benefit from that and put it into action. And so that's how I would look at this risk-defined trade, looking for a move to 75. Building on this weakness that's brewing now post-earnings.
Yeah, I think that's a really well put, and also a way to utilize some of the more bearish takes we've gotten from the street today. But also important to keep in mind for both of our example trades that multiple legs can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risks like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO, so we are naturally talking all things big banks. We'll be focused on Bank of America. Bank of America was down as much as 4% in this session today. Now has recovered some of those losses, down about 1.5%. We'll dive more into that story coming up next.
Yeah, SPY's pretty fleshy today. This line, this isn't much of a support. 383.36. That's not too much of one either, honestly. Really like the bottom of this range. Yep, that engulfing candle yesterday was a good indicator of what's to come. Inverted hammer started it. At that day, consolidation. Yep. Look at this volume these last couple days too. Today's volume's crazy. It's 130. We're almost to yesterday's volume, and yesterday was big volume. December. Oh yeah, we're into the high of January 1, January 3, the first day, trading day. We're lower than the high from January 3. Yeah, I mean 383, this might be a pretty big support. Where it's at now, I don't know. It hasn't affected everything yet though. Some stuff's still holding up. Yep, it's behind new lows, melting down.
Yield curve and the question of, what is this signaling? It's not normal to see that. Well, I think we're starting to get an idea of some of the risks that were out there. On the other side of the envelope, too,
yes, I've got a lot of shorts and puts.
There's been a lot of that talk around, the Fed's going to just keep increasing rates until they break
Mostly
something.
Short.
Well, maybe things are starting to break here a little bit. Is that stress on the system,
there.
at least on the outside parts of the system, is really starting to show itself here. Massive, massive moves. But like the name of this segment says, this is a developing story, and there's tons to unpack here, and it's hard to say where this story will ultimately go from here. But Kev, thanks for the update. Really good stuff. Look forward to hearing more soon. Senior Markets correspondent Kevin Green. Not far from this story is the rest of the banking sector, of course, but we're increasing the size here a little bit as we take a look at Bank of America. It's time for FOMO. Bring Jenny back in here for this conversation. This is a different bank. I mean, I don't know how to stress it. I'm not going to say that there aren't risks at financial institutions. It's impossible to know the degrees of those risks, but what I will say is Silicon Valley Bank and Bank of America are two very, very different institutions.
Yes, and I think that is the biggest takeaway of this day. This is not necessarily the canary in the coal mine for all of these massive institutions. So I'm here to bring some positivity because basically we just took out new intraday lows in the 4 major indices. We are seeing some collective weakness, even in a name like Bank of America that was at one point actually positive on the day, now lower. This name actually has had like several trading sessions packed into 1 at this point, given the volatility we are seeing with the banking sector today. There is no denying that banks do face some challenges ahead, as the Federal Reserve has remained pretty intent on continuing to raise rates to then crush inflation. But from what I could read from the street, there is still the unlikely case that we'll see the same effect or anywhere close to the effect on some of these massive companies like a Bank of America. We saw actually from an analyst that said they believe that this sell-off was overdone, as large banks have a lot more liquidity than smaller banks. This is JP Morgan. They said they are more diversified with broader business models. They have a lot of capital and are much better at managing risk than some of these smaller companies. SVB is unique in the fact that its client base is concentrated in industries that have been particularly impacted by a lot of these higher rates. But this actually gives the street a lot to be enthusiastic for regarding some of these other companies like a Bank of America. Larger banks, they said, are really subject to tighter regulations since the global financial crisis. So that actually bodes well for several of these names. Another name, JP Morgan, Citigroup, that this analyst also still sees as winners in the long term. Now, RBC echoed very similar sentiment. Actually, initially from this RBC report, it seemed pretty negative, but when you went into the
all these
weeds,
banks are terrified of a bank run.
Still the case for a lot of these companies. They said that essentially SVB did fund some longer dated fixed rate assets with variable fund rates with a rising interest rate environment, and their deposit and asset mix differs quite significantly from all of those of the 20 major banks. They still see opportunities, and they named several banks, but some of the biggest ones were JP Morgan, Bank of America, Fifth Third Bank Corp, US Bank Corp, PNC, and Key Corp. They highlighted that sell-offs typically provide investors opportunity to buy high-quality banks with strong, low-cost consumer deposit franchises, and now at a discount. That doesn't mean that large banks won't feel some of the pain, as we are seeing today with all banks in the red except for JP Morgan somehow still hanging on to its just over 1% gain, but they actually see this as an opportunity. So I thought this was a really interesting day to actually discuss Bank of America. Obviously depends on your conviction long-term or near-term in some of these names.
There you go, 3.5.
There is still the case to be made that this is maybe not as doomsday as some of the headlines will make you think.
10x over
I think
what
that
you
the
should be
logic
valued.
is sound. I think that there's a lot to talk about here, and quite frankly, we just don't have the time to get through all the details in some of this. But I don't think that it's a stretch to say that a name like Bank of America is better capitalized and less likely to have something like what just happened to Silicon Valley Bank happen to it. Doesn't mean that's impossible, and it doesn't mean that the fear and the desire for investors to pull their money out of a name like Bank of America or any of these big banks isn't real. And so
I don't have a setup for that.
Out really blends in here. So while
you guys can all give Ace
a long-term opportunity, may even present a short-term opportunity for bullish investors to scoop up some of these different banks when they're selling off. I think the fear of missing out right now in real time.
You legend.
The ego on you. Investors are looking at some of these companies, Jenny. And so I looked at something that's a little bit more bearish and looking for.
I have it for the members, not for you that gifted all of them. Thank you, Ace. That's awesome.
So what I looked at here was buying of a put vertical.
The ego on you.
Just going out to April. It's not looking for a huge move. In fact, it's basically to the point that I was looking for it to get to already. And so the strikes may have to be adjusted slightly to reflect
the ego on you.
I looked at buying a 32.
You guys are on a Discord. Let me know. I'll give you
That
the
would be 1/2 the width of the strikes.
membership badge,
along
of course with Ace.
And trading closer to 31. And so that was relatively close to the break-even point.
On you.
The idea behind the construction of this trade is to try to
at least it got some, and I can see who's actually in here. Crystalline, you're always lurking. Bipolar's lurking. Oh god, a bunch of lurkers got it. A bunch of the lurkers.
Time decay of a
That's
long,
good.
Put vertical.
I'm like, what is this thing?
Spread in general.
Thank you,
and
Ace.
also
Much
has a
appreciated.
risk-reward ratio that is relatively in line 1-to-1, for example, because we've talked about it. Directional outlooks oftentimes are a 50-50 proposition. The stock can go higher, it can go lower. And so if we have that risk and reward relatively
I'm a member.
we can feel comfortable
You're a member.
With that risk that
I'm
we're
a member.
to get an
We're all
adequate reward for
members.
something. We need to be right to actually realize that reward. So again, stock was a little bit higher at the time. Take that with a grain of salt. Imagine the stock was trading a little bit closer to 31. That was the setup for this. Same risk profile in terms of that elongated Z, but we start in the middle of it as opposed to in that max profit zone. And because it's a bearish trend,
I don't even know who this guy is.
Scenario, it's actually a move to the downside.
Yeah, and I do agree that FOMO feeling today is definitely
Did you
to
do
the
it
downside.
again?
Just perhaps maybe look at things more objectively. I think really there's a lot of negative
do it
headlines
twice?
today. It's important to get both sides of this story.
You
but
frigging
that is
legend,
it for our
man.
FOMO segment today. Now coming
You guys
up
can all
next, we
thank
will look
Ace.
at Apple.
The ego
Lower on the
on
day,
you.
shares are down about 1.6%.
GDM's an
after
OG. He'll be
getting a
stoked.
rare sell rating. We'll dive more into that
Those
story coming up next.
Convergy. Ryan got in here. Dink. Look at you, Dink. You got one.
The ego on you.
Now you can buy 5 shares of BBY since you've just saved $5 on a membership. That's how I look at it. Today indeed is a happy money day.
The ego on you.
Legit. Appreciate it, Ace. We're soulbound now. It's true. It's true. I was beginning to think I wouldn't see that GIF very much. And there we go. We just got a big dose of George. Spy's flushing here. Ooh. This is getting exciting. All these banks and all these institutions are coming out saying how they don't have exposure. They're scared, man. They're all starting to kick SVB, kick them while he's down. No, they sucked. We told them they sucked all along. Yeah, Binance says does not have exposure to Silicon Valley Bank and says funds are SAFU. What does SAFU stand for? So much green in the chat. That's right. Ace hooking up the chat heavy. Oh, UNG just flushed. Can you, can you manually pick those, or is it just random? That's the only choice. Scared to dip by this. Got 6 contracts now of nat gas, and it's just volatile. It's random, yeah. I was wondering if there's a way if you could pick it, but maybe not. I do want another contract though. Any sign of support on UNG, and that's gonna be nice. Be nice. You're giving Jason one? Oh man.
Services revenue. It's been really putting a lot of energy in the services area. It even boosted more of its services to the company, or to customers rather. But I got a question for you, Jenny. How
Wait,
long
aren't
has
green
it been
apples
since
poisonous?
You replaced your iPhone?
Are they trying to kill him?
Because apparently about
Little bitter?
25% of Apple's installed user base that has iPhones hasn't upgraded theirs in about 4 years. And that's one of the things
making
that
new
is
lows
kind
here.
of hitting at this company and keeping those iPhone sales stable. Could be stable
I know, I'm
in a
just
good way,
playing.
could be
I like to
stable
mess
in
with
a not
Jason.
so good way as well.
So Renita, I haven't upgraded. I think I have like a 12
Tesla's
I
now
haven't
red.
upgraded, but I have replaced my current iPhone. I do it once about not every 9 months. Somehow it ends up in bodies of water. I don't know how it happens, but I do pay some ridiculous fee to then be able to replace my phone for a very reasonable cost. So I am somehow giving Apple my money. It's just maybe
Apple
in a
carriers
different
still
way.
have to pay to get it replaced.
Probably, right.
He's at least
Honestly, that's
18
what
years
happens
old.
with mine too. I usually get some sort of irreparable thing that happens.
I think maybe, yeah,
and
yeah.
then I have to buy a new one because why buy the same one twice?
There, now
right?
Tesla's adding to the downward
And I am
pressure.
looking to upgrade, but with all of the production issues, I'll take my time and just keep utilizing my iPhone 12 because it does the job. Because, like Alex has said so many
Apple.
times, we're not seeing the same jumps from model to model at this point. It feels basically like the same iPhone, but we'll leave it there. Appreciate all of your thoughts on Apple adding to its sell ratings, which is unusual for this name, but important to keep in mind. Now, coming up next, it's time for Under 30. We'll be looking at Gap. Gap seeing some sizable selling after reporting a miss on its top and bottom line in its fourth quarter.
The ego on you. SPY back to oversold territory on the hourly. 383.36. We'll see if that kind of range. Kind of some of the highs from that consolidation before the end of the year. I'm just upset with myself for not adding shorts here. I could have just held even. This morning got me all hyped for a big dump. I added, what, a couple here. And then by that point, my cost basis was like here. That short closed me out. Didn't pull the trigger there. Oh well, where we are now. My first put ever today. Definitely lucky. You had a feeling it was heading down. Bearish news and recession fears. Yep, beginners oftentimes have luck in the market. Not to say you didn't play it right, but there's a reason for that, because they go with their conviction and their thoughts. They listen to themselves. They don't overthink it, and they keep it simple. Keep it stupid simple. So as you get more experience, you have to kind of get back to those thoughts and roots, which will help you with your trading. Keeping it simple, thinking like you did when you first started, not overthinking it. Holding through negative 80% is tough. Yes, sounds like you got a short dated option. You should definitely be paper trading these. And getting more time and getting closer to the money. If you have a, I mean, there's no way I can answer that for you since I don't know your financial situation or anything like that. Risk tolerance, etc. If you have short dated options and this is your first time or early in your options demise, you should just be happy with profits. So if it's short dated, you're not going to much of a bounce will really hurt your theta. Zero date. Yeah. I mean, the day's still pretty young. Like, we've got, what, an hour and 10 minutes? And it's not looking like capitulation yet, but this is what the beginning of that could look like. So we had the catalyst, the bank defaulted. We've got a lot of catalysts for this to just become a big day, like a 5% day. But you're fighting time decay. You're fighting that theta. I mean, right now you're not. You're probably just going up in value as it's dropping. But if you start to bounce and trade sideways at all, you're just going to be fighting it on a 0 day. Your first option is a 0 day put on the SPY. I don't want to say you belong here. You belong somewhere. Probably an institution somewhere. This is looks like the beginning of what could turn into something crazy. Tesla and like these other ones, these other more risk on will really have to start selling off. You're gonna see some capitulation. There's a little green candle. First buy out, first put. Yeah. Can't tell you when to sell it. Can't lose by making money though. Just want to use a Tropic Thunder. Wait, is it? That's from Tropic Thunder? Gee, if that doesn't go your way, it's gonna make your eyes rain. There's some good quotes in that movie. I don't remember that one though.
Or so percent.
George, as the stock approaches the single digits, it becomes increasingly difficult for investors to take positions that are looking for downwards moves. You know, buying puts, selling calls, selling stocks short outright, if there's even shares available to be borrowed. You're describing a lot of negativity in this name. Obviously, the price action, not only today, over the last few years,
I kind of remember it.
Backs up a lot of what you're describing. But in a market where investors are becoming increasingly selective in where their money goes, and they're considering all choices that they can, you know, they can go to Treasury bills and get like 4.5%, 5%, or they could potentially look for opportunities in names that are, you know, maybe under the weather, let's say, for potential recovery, and look for greater returns there. What would an investor, from your perspective,
makes my eyes rain,
need to see or be on the lookout for to see, that there's some good bones here in Gap? I mean, I think of the 1990s when I think of Gap. I don't think of 2023 when I think of these stores. So, you know, what is there? What is something that would be what Gap could do?
That could be reversal candle.
Or talk about that shows that they're actually turning the corner to the struggles being in the past, as opposed to this just being the tip of the iceberg.
Yeah. So right off the bat, I mean, it comes down to not necessarily just restructuring the whole business. I think it comes down to reducing operating expenses. They denoted that in their conference call because, look, you've got online sales were down 10%. Comp sales in total were down 5%. Both of those missed the estimates. Old Navy, which is the core brands, non-core brand, was down 6%. And the core brands were down about 4%. So just the sales growth and, of course, the operating leverage on a store per store basis is down. That's not a good sign, but it's not all bad because if you look at all the analysts, a lot of them have an equal weight rating on the stock with around
probably keep coming down.
The range between, let's say, $8 and $15. And the reason being is that the company is cash rich. They've got about $1.2 billion in cash and about $4.5 billion
Thank you,
in equity.
man.
And that's pretty good.
Gifted
And that's why the
10.
company
Holy
still pays
crap.
a dividend. So
here comes
they don't
George.
have a balance sheet issue. And that's
Who are these
silver
people
lining
in
for the
here?
company. The other thing is,
J2DP.
when you talk about
Aaron Croxton.
restructuring
Yeah,
the
we're looking at you,
business,
Aaron, and
we
Merrick.
talked,
Freaking
about
lurkers.
Bath and Body Works, which was spun off from Victoria's Secret. That was a huge
Oh my
move to that
gosh.
company's stock. And
Oh, wait.
so spinning off the Old Navy business, maybe the Athleta business, and even the Gap business into 3 different companies would create value.
The ego on
and I think
you.
that's why a lot of institutional investors continue to own the stock, because there's value to be made here in the company itself. It's
Gene,
just
you
not,
got one too. There you go.
being accretive right
Yeah, that's
now,
right,
or
Aaron. You better
manifesting
thank
in
him.
accretive earnings right now.
You too, Eli.
Because of the fact that
You
this
too,
company relies on
J2DP.
volume, not necessarily price. They're not
Eric.
selling high-priced items or luxury items or unique items.
Aaron, Matthew,
And so
George.
the volume's down. That's where we're
I see
seeing
you.
some operating leverage.
So does Ace.
Not
The
improving,
ego
actually getting
on you.
worse. And that's why we're seeing the stock lower.
Thank you, Ace.
Yeah, and George, we've been calling for this Old Navy spinoff for what feels like years now. So it seems like they need to execute or obviously change something, because this is
to get on it.
Like, yeah, no kidding. Like you said, it
The
has been a
ego on
slow
you.
and steady move lower. And like Alex said, we're almost at single digits. So
Right.
a little bit concerning for Gap, but we'll leave it there. Appreciate all of your insight all week long. George Tillis, Senior Markets Correspondent for the network. That also does it for Alex and myself for this
The
week of
ego
Next Gen
on you.
Investing. Coming up next, we have the watch list with Nicole Petalides.
The
the ego on you.
That's Ace right now. Yeah, welcome guys. Welcome to chat. Like your new little badge? Great, come on in. That's awesome. Thanks, Ace. Merrick, I know. Sure thing, Aaron. Sure thing, buddy. All hail Papa Ace. Dude, crazy, man. Well, I hope you at least had some puts or something. Something to fund this spree of memberships. The dollar been rallying yet? Yeah, now it's starting to rally. Yeah, right at that 1 o'clock. That was a good little indicator because this SPY stayed flat there till what, 115, but the dollar had already been rallying. Ace, what were you doing in Discord last night, actually? Might dump another short here. I don't know, it's kind of just consolidating. Yeah, I'm gonna dump another one. Down to 3 now, 3 out of 5. Might get at least 2 more. Oh wait. I'll wait, because I don't know if we're going to get a good enough entry. I got hammered. I know. Yeah, were you on like peyote or something? I don't know. I don't think they're involved, Silvergate, and I mean, they might have some connection that we don't know about. Not publicly, as far as I know. So you might want to dump your puts there, Gene. Or at least some of them, reduce some exposure. But then you have to be happy if it keeps going down more that you didn't get the very bottom.
Level of 28. For this lead story,
Mine, I'm shorting the futures, so I don't have time decay like options. So it moving up here, like, doesn't matter to me. If it comes back down here, it's the same value. For you, if it comes back up here and then it's back down here, by end of day, it's going to be worth 0 probably, or close to 0.
FDIC as
you're fighting
receiver.
time
Now,
decay.
the FDIC insures up to $250,000
Peyote
of
and tequila.
deposits, and so
Nice.
apparently they will begin giving those out starting Monday. However, there's no word of what's happening to deposits that exceed $250,000
I don't think so,
per
Jan.
accounts. Now, interesting to know as well that
I don't think so.
at the end of last year, SVB had assets topping $200 billion. And also, Bloomberg is reporting that as this story had folded on or had gone on, prominent VCs, including Peter Thiel's Founders Fund, it advised startups to start withdrawing their money from the bank. We also heard reports of some of the customers not able to actually withdraw funds from the bank, and some saying that the website wasn't working much. But it's really been in a huge downturn, a huge slide since this news
FDIC
happened,
should cover
and it's continuing to develop.
a lot of that, though.
That's absolutely
What do they
right.
cover up to, like,
Bernice
a
Young,
$250,000?
Thank you so much. We've seen these banks now. Names like First Republic, Signature Bank, PacWest.
Yeah,
Signature Bank's down
250,000
25%,
standard
PacWest
insurance.
Down 34%. Western Alliance is down
So,
about 40%.
if you have
and I'd like
more
to,
than that in a
bring
bank,
our
you
next
should
guest.
spread it
Jason
across different
Ray,
accounts,
founder
different banks.
Of Zenith Wealth Advisors is with us to take a look at this. I mean, when we've been talking about this market, we have now
There's
taken
other
a leg
banks.
to
You can
the
get more insurance on it,
downside.
but if you're just
And
doing
the
a standard
question, as I
individual
said,
account.
is it contagion or is it contained? And that's the concern.
I think it's hard to tell, Nicole, and thanks for having me. You know, we're seeing banks really seem to have mismanaged interest rate rises in their bank and credit exposure, and you know, this could be the start of a lot more trouble that comes down the road.
Well, that's the issue here, because while the FDIC will insure up to $250,000, on Monday they'll be paying that back to those who had that insured, those depositors. But the truth of the matter is, SVB is the kind of bank that people, venture capitalists, will help to start up these companies. They invest millions, not $250,000.
I mean, they both kind of followed SPY for a bit in the morning.
And the second point that I wanted to make
GME
is
and
that
BBBY.
this is the second largest bank failure after
then
Washington Mutual, which was over $300 billion.
GME is just stuck with the SPY, and BBY like gets turned on and off from following the SPY. It's really strange.
And really,
I think today is like the first day we've seen that, actually.
The VIX jumping to 28 now. And this big picture, because this is our lead story today and will be into the night, I'm sure.
Yeah, it's hard not to talk about it, you know, and I think as we look at the small cap index, as we look at the regional bank index, this is worrisome, you know, and I think as we see a hawkish Fed because the jobs market and labor market is strong, it seems like we need an accommodative monetary policy stance, but that's not what we're getting. So we could see more strain down the road, and the VIX hopefully shooting up.
There's some good options.
Well, what's interesting here is
that,
that, as you mentioned, the Fed, there
opportunities
was
that could have happened in that
going on,
move.
whether or not it was 25 basis points or 50 basis points, and after Powell spoke, the Fed funds futures jumped to over 70% from 20-something%, and since then had dropped down to about 50%, and now I'm sure it's becoming much and much more less likely that we will see 50 basis points. I mean, I think today's action really solidifies that 25 basis points rather than 50 basis points.
I don't know. You know, we saw a strong jobs report this morning, and I think as, you know, the Fed weighs its dual mandate of inflation and employment, you know, the employment market is still strong and tight. Unemployment only ticked up to 3.6%.
Yeah.
The economy added 311 jobs. You know, I think it's tough for them.
Show me
They're
the
in a tough
chart.
spot.
Yeah, without a doubt. So more jobs created than what was, you know, estimated, and what we saw for January, the revision for January,
this
still
option
left
tripled.
us at plus 500,000 jobs.
Yes.
So while it came down off the 517, still left us with an enormous, very tight labor market. In the meantime, with inflation being so hot, next week we'll have CPI and PPI. You'll be watching
exciting.
for that, right?
Yes, absolutely. You know, I think we're going to see a surprise again. I think investors are very excited about potentially the Fed becoming more accommodative, but every signal they've given us has been, you know, that they're going to be more hawkish. And I think as we see inflation come out, I think we'll see a continuation of the same from the Fed.
When you say the Fed will become more accommodative and people are hoping for that kind of pivot, when are you talking about?
You know, I think people are really hoping that the Fed will slow interest rate policy and rate hikes, potentially lower rates, you know, later this year. Jay Powell has come out and said that that's probably not in the cards. As they look at their dual mandate, that doesn't seem like an action that they want to take. And people continue to be disappointed. And I think it's brought some strain on the market and hurt liquidity. And as you can see in scenarios like this, where, you know, small cap index down, regional bank index down, a lack of liquidity in the market, I think that is all coming from, you know, the Fed policy and the stance that Powell has taken.
Yeah. I know that you're also here to talk about teams, diversity, equality, what makes a great team. And as I think about the folks that work at Silicon Valley Bank, they've been told now, stay home, and actually there's concern about the payroll at this point. You know,
Told to stay home.
At this point, these kinds of companies, everybody's trying to work and have diverse
If you guys want another play other than BBBY, Boyle, Boyle or UNG,
Yeah, I mean, we have both primary
might be at a
and
good,
secondary
good
evidence
buy.
that diverse management teams are going to outperform the
Boyle's
broader
going to
market.
have decay
Look at
because it's
books like
leveraged,
the XX
but
Edge talking about gender diversity. You just allocate to gender diverse teams.
yeah.
You know, you outperform the market by 46 basis
We'll see,
points
though,
again in
'cause
history. So
the only
that's
I'm
a
wondering
focus
on
in
it is
our
if
investment process, and I think it's
demand
one that,
destruction and
as
recession
alpha continues to move around in the
fears
market, gets more difficult as volatility increases.
bring the
That's a
price
way to
lower,
try to
but
generate alpha for your portfolios
I still
and
think it'll go
investments
up.
today.
Right. Tell me about environmental sustainability. Why is that important?
You know, well, we like right now the utility sector, right? And thinking about like Duke Energy is a holding that we like, right? They have a diverse management team, gender diverse team, great foundation that supports like their local environments, but also are powering renewable energy and integrating sustainability into their business model, which we think
Freaking
not only
A's
the
with the
diverse management
memberships,
team
man.
matters, but also the
Crazy.
integration of equitable business practices will help Duke Energy outperform over the long term.
As we talk about investing in bonds, I mean, we've certainly seen the yield curve, the inversion of the yield curve, in fact, over 100 basis points. Yields are coming down now with what's happening in the banking index. What are your thoughts for investors who still can get some very nice payouts for short-term bonds, for example, fixed income?
Yeah, it's hard to take duration, I think, in this market, right? You're getting paid to be short.
Yeah.
I think investors continue to be short and at least publicly traded fixed income, but trying to be opportunistic in private credit. You know, private credit yields are upwards 10, 12, 14%. You can limit volatility as the assets aren't marked quite as much, and I think it allows a great risk-adjusted return that limits volatility that we're seeing like the VIX today action to really smooth out investor portfolios over the short and long term.
You mentioned utilities, another sector that you think might be undervalued, consumer staples, which actually, when I checked earlier, it was consumer discretionary that was leading. But I mean, staples is usually a nice defensive play.
Absolutely. You know, staples we think is a great place to look, along with
Look at
industrials.
the
You know, I
not
think
Jerome
industrials
Powell.
have started to break out
The
against
inverse Kramer effect. Kramer, I think the fears are not
you know, we're
justified
seeing them up
SIVB, and it's a
year-to-date
very
still,
compelling
holding in there.
situation.
We have a couple of companies that we like. Visa is actually the largest holding in the industrials ETF, the iShares ETF.
Dude, Ace, did you do
along
it
with
again?
Northrop
Oh
Grumman
my
is up there.
gosh,
Both
man.
of those are companies that we feel have great, you know, tailwinds behind
TGIF.
them, are
Thank you,
integrating
Ace.
sustainability into their
Holy
business
crap.
models,
Ramos.
and have diverse leadership teams
Ramos
that we can
S, get
really
in
align our
here.
capital behind
You've just been
and
gifted
help
a
bring it up.
membership.
There's been a lot of concern about real estate, particularly commercial real estate. We talk a lot about REITs.
You're gonna have the
We're
whole
gonna be talking
chat,
about it
man.
more throughout this
You're
hour,
gonna run out of
but
people.
Thoughts there on that group?
Difficult. You know, financing
so
costs are up for real estate investors.
Yeah.
You know, I think real estate prices haven't seemed to reflect the rise in borrowing costs. So I think from a price standpoint, it could be a challenge asset class moving forward. But as you think about inflation and uncertainty around inflation and the way that assets are moving, real estate can be a great inflation hedge. So I think it's tough to make a decision and an allocation on real estate. I think it's important to have real estate in a diversified portfolio, but you know, it could be challenged, but it could be a tailwind at the same time, right?
Yeah.
This is Ace coming back from the
When
bars.
it comes to Silicon Valley Bank, and one of the reasons why venture capitalists work with companies so closely and they
On
put their money to
peyote
work,
and tequila.
it's hard to bring a company public. It is hard to borrow money. You know, you have a rate environment now that is on the rise, so a company would face higher costs if they were borrowing
Bonus
money.
by call.
Final thoughts here on what's
Oh, you
happening
did a
with
little,
Silicon
bounce
Valley
play,
Bank.
huh?
How
Not
this
bad.
could,
Sketchy.
you know, potentially, this
Sketchy.
is the
That's a big
largest
bounce.
fallout since the financial
Big bounce.
crisis. I was standing here in 2008 and 2009, and I can tell you,
Yeah, I should have sold more of my
I'm
shorts, I
very
guess.
uncomfortable today. I wish this day would be going differently. I love that we have jobs. I know the Fed's doing their job.
Chris,
The
that
truth
was
of the matter is, when you see stocks selling off like this,
Dude, where are they?
it's
Why does it just do one? Just
It
Ramos.
absolutely is. And, you know, it's not great to see a run on bank deposits, right? We saw that in depression.
Yeah.
We saw that in 2008, 2009, and we're seeing that today. So
Yeah.
there's a lot of parallels. I think there's a lot of reason for concern, and we'll be interested to see how this plays out over the next couple days.
Jason Ray, I'm so happy you were able to be here on such an important day to have your insight on this topic now that I'm sure we'll be talking about going
sure.
forward.
I don't know
Thank
why it
you
only
very
takes
much.
one.
Nice to have you on the show. Jason Ray, founder, Zenith Wealth Advisors. Later this hour, I'm joined by the CEO of Solo Brands.
It's just
surging
slow,
again
I
today,
think.
up about 30% this week. You have to hear all about this
Oh,
very
that's right. You have to enable
company.
gifting
The
of
latest
subs,
earnings
don't you? I
report,
think you're right.
and how higher
How do you even
prices,
do that?
higher rates have been impacting office buildings.
All right, I need to look that up. There's a lot of people that are missing it. Hold on. So it can still, they'll still come in. Okay, go to an eligible channel's live stream or premiere. Within the live chat, select allow gifts. I've looked at this before and I couldn't find it. Does it pop up in your chat? All right, if you're listening and you're a lurker, come to chat right now and do this because you probably just got a free membership. Let's see. So go to enable, go to the stream, go to within the live chat, select allow gifts or select the pinned membership gifting. Confirm you'd like to opt in by turning on the allow gifts on this channel. In the live chat, select allow gifts. Yeah, Christopher, yours is probably turned off. I still don't even know actually where to do that.
The ego on you.
There you go. Someone did it. Christopher did it. Christopher, you made it. Let's go. How did you do it? How did you do it? Cash 24/7. You have to enable gifting because Papa Ace has been gifting memberships, and if you enable it, you'll probably get it. Because I think there's like 9 to go or 8 to go. Only done 2, and the rest of you guys have it off. So just look up how to enable gifted memberships on YouTube. If you go to the live chat, select allow gifts, or select the pinned membership gifting. That's if I have it pinned, is that right? I don't have anything pinned though. Found it? We'll see if you found it. We'll tell you if you found it. You're trying to hit Chris the whole time and you just had it blocked. BBY versus left hidden 160. It actually at 113. But oh, you're saying right now 116. Touch the gift.
On you.
There you go, Cash. You did find it. That's an engulfing candle there. I might grab another short. I don't know. I'm scared. If BBBY closes up today enough, we'll get a bullish MACD. We'll get a hammer, which are both bullish. And depending on next week, Monday, if we get a higher close, I gotta add a short here. Just one. Then yeah, this could have been the bottom. Depends on how today closes and how Monday closes, I think. Touch it, do it, do it, do it. Touch it. Thank you, Ace. Christmas did come early. Oh, I need to add another one. Hold on. Yeah, I just added another one. Okay. Oh, I am back to my 5. Okay. So I dropped a couple off here and added them back here. The beauty of non-wash sales or any of that junk to have to mess with, or not worrying about day trading and PDT and all that mess. Thank you, Ace. Everyone tell Ace thank you in chat.
Taking a step back on the rate to which they are
He's for
raising
president.
interest rates, and they're trying to see how that's playing out. And
There's
I think
still
this
people
is
need to
a case
enable
of
though. I think we're
seeing
still
the
down like
impact of
7,
how fast we raise
6
interest
gifts
rates. I
maybe.
think SVB is a little bit more of a unique
gotta see how to
case,
actually do
given
it.
Their client base.
Yeah.
You know, I think
Because I don't think I have it enabled.
venture capitalists and startup tech companies for the past year and a half have had a lot of funding withdrawn or dried up, and so I've been relying on cash, and I've been drawing those down.
Ace is the
And of course,
place.
the big thing that stuck out with SVB was when they had to sell off some of their assets at losses in order to fund those withdrawals.
I don't even see
And so
where
the
to do it.
question
This is
has
weird.
now we brought focus on, you know, banks large and small. You know, their balance.
No, I
sheets,
didn't
are
play
they gonna
banks.
have
I'm
to
just
do
I'm
something
shorting the
the same?
futures.
I think it's more of a case of now we're going to see these net interest margins, you know, contract a little bit. You know, maybe banks are going to finally have to start paying some interest on their checking account to keep cash at the bank, you know, to prevent customers from withdrawing. So
There's a
I don't
freaking
know
bank
if it's
run
as much
going
of a
on.
concern
It's
of
crazy.
solvency across the board as it is, you know, the
That would
expenses
not
are
be
gonna
good for the
start
banks.
increasing, and maybe some
Or,
banks
I mean,
have
it
to
would
start
be good.
realizing some losses on their bond portfolio.
The ego on you.
There you go, Mohammed.
Right. So
There you go,
it's not
buzzing.
about the solvency of many of these banks, but instead how the financial
Mahmoud
balance of the
Hamid.
balancing of the books and how what they can
Come
do
to chat.
differently.
Report
I mean,
to
they're
chat.
not as highly leveraged
Buzz
as
and
you were
Buzzman,
during
report
the
to chat.
Financial crisis. You know, I wouldn't compare this to the financial crisis. Neither
Yeah,
did
Ruthless,
you.
get your
That's not
enable
now
the
is not then,
gifting.
and there's been a lot
I
of
forgot to do it.
parameters and
I'll show you
things
guys an
put in
example, but I
place
literally
for
can't
a
even find
day
it. I've
like
looked for it
this.
before and I couldn't.
That being said, I do want to get back to other areas of the market that you have been watching, even possible.
Oh, membership gifting. Oh, it's right there. Okay,
Begin
it's
with
super
the
easy.
healthcare sector, for example.
You actually click on the
Yeah,
gift
absolutely. So we really
as
like
if
the
you were
healthcare
going to do
sector
it.
right now, and you know, well, prior
Right,
to today,
so
you know, not knowing where the financials as a whole stand on the
click
year-to-date
here
returns,
as if you're
but
going to show
healthcare was
support,
probably the second worst
and then
performer
membership gifting.
behind utilities
Wait,
year to
no, is
date.
that
So
not
we
it?
see a lot of opportunities.
No,
to
that's
add some
what he
names there.
did.
What
Hold
we
on, let me
really like
see.
about the healthcare sector is there's a little bit of both worlds. On the more
No, that's how you
conservative
buy
side,
gifts.
you know, you see pharmaceuticals
Yeah,
that
that's how
have
you do it,
strong
and then
cash
gift
flows,
50 memberships. It'll
strong
work, I
dividend
swear.
yields, and have a really nice pipeline of drugs
Let's
to
see.
support that continued revenue.
Trick everyone into gifting memberships.
On the opposite side, the more growth-focused names that we really like, you know, these med
There you go,
tech
Ruthless.
companies,
Well
you know,
done.
these are companies that have high growth rates, should continue to do well
Place is
regardless
rocking, but it's
of how the
market
economy
crash.
is performing. And so we think, you know, there's
It
opportunities.
does feel like that.
presented us,
Coming
you
into
know,
a
at the
Friday
beginning of
too,
this
like
year, you know,
next
in the
week might
sell-off
be
to add
awful.
to both ends of the spectrum there.
When you talk about that, what do you mean? What do you mean when you see the growth
Artur Bazak,
options?
well done.
Because people are now looking more defensive. They're looking more for value.
Report to chat. Thank
are
Papa
there names
Ace.
in growth that on a pullback like today, for example, that you might start to dabble in?
I mean, I read the instructions.
Absolutely. We really like names like Danaher and Thermo Fisher.
From
you
me
know,
and
companies
Ace.
that
Thanks,
really
Aaron. I
move
appreciate
all
it, man.
around medical devices, implants, things along those lines that, you know, like I said, are going to be in demand regardless of how the economy is doing. So, you know, the pullbacks there is we're taking the opportunity.
Greetings
to
from
add
Poland. You're waking up all these zombie lurkers.
Tell me about aerospace and defense. I mean, you do have the war continuing with Ukraine and Russia.
Thanks again, Aaron.
It's been an ongoing story now for one
Next
year.
support on SPY. It's kind of a wishy-washy area of support from back here, really.
Funnel money into that area.
Well, I guess the high of that we haven't really hit.
Yeah.
So
we think,
383,
you know, the
36,
Ukraine
somewhere in this
Russia
range.
War, you know, is presenting an opportunity to have to
If you're looking on
rebuild
daily
stockpiles.
candles,
You know,
it
we've
looks
shipped
like
a
it's
lot of
there.
ammo and weapons and you know, military
Those, like this,
vehicles
I
over
see
to
like
Ukraine
383 maybe.
to support them there. And so I think there's a long
Kind of the top
runway
of the
there
range
for
we
the
consolidated
United
there
States
at the end of last year.
and its allies to rebuild
And
supplies.
I don't know where
you
exactly, but
unfortunately, war I don't think it's ever going to go away. So you know, to prepare for the next instance. Or
thank you,
the
Aaron.
next,
Appreciate it, man.
You know, conflict that we
Happy
face.
going for a
On
ride.
top of that, you know, there's a growing need to combat. You know,
Yeah, I
other
almost want to add more
countries
shorts. It's just
that
sketchy
are
how
starting
quick it
challenge
can
us
rip to
on
the
military
upside.
front. So be that building out our communications capabilities, our missile capabilities. I think there's a lot of opportunity to see demand for products across both the offensive
220.
and the defensive field of defense.
All right. Brian Jankowski, great to see you. Thank you so much.
Thanks for having me
Senior
on.
investment analyst at Fort Pitt Capital.
I
Thanks,
think we're still down some memberships.
Coming up next,
You guys haven't enabled them.
CEO
Do it.
Spotlight. I'm joined
Do
by
it,
the
do it.
CEO of Solo Brands, which is surging again today, up about 30%. We're happy to have them back. Can't wait to talk all about this company right after
Solo.
a quick break.
I know Solo. Just solo. Oh, never mind. I don't know that brand. Spy kind of hanging out down here now. Yeah, I think there's still some more gifted subs out there. If you guys haven't enabled gifting, come to chat and do it. You'll get a free membership. Courtesy of Papa Ace. The Godfather. Did that guy just call you the Godfather? Let's see it here. Oh, I like it, Jim. Post those in media, though. Keep General. General's kind of a mess when I'm not in there. You guys are crazy on gifts, but yeah, post anything on media, like your media. And Kramer and said Silicon Valley Bank was a buy last month at 2:30. They've been closed by California regulators. He's told us to sell BBY. I think we'll get it. I think we'll get it. Yeah, I could tweet the old Kramer. Tell him to keep pushing us to sell BBBY. Or sorry, yeah. Push us again. Yeah, I think there's a couple memberships left if you guys haven't. How do you do it? In the live chat. Maybe on the phone would be easier. The pin. I don't have a pinned membership gifting. I guess I could do that. Gifts on this channel. For one time. You want a wedge? You want to see some wedges? GME wedges? What sort of time frame are you looking at? Big daily ones? Like the big wedge? Yeah, Mohammed. It's your gift. There, Joshua did it. Touch his gift post. Oh. You actually just touched it. I thought that was a joke. So it actually shows it as a gift there. At the top, is that right? So you click one of these, and then maybe you can accept it. Click those, I think, and you can accept the gift. Use the word touch. Love it. Weekly, daily. Wait, weekly or daily? When you talk time frames, just talk the candle time frame. What the chart says doesn't matter. The chart time frame doesn't. Yeah, just click. That's probably how it is. It's not going to show up on mine, of course, but click the gift.
The ego on you.
There you go. That's Joshua Heaton. Welcome. That was Ace Ventura who gifted you that sub. He just found all that money in that briefcase. Might want to hold on to this one. I mean, what kind of wedge are we looking at here? Not like, maybe bring it down a little more. Yes. And then even that floor, but you don't want to see that wedge because we broke below that. Right now, that low. But like where this low is. So something like that. You want dates? 6/23, 6/30/2023. Yeah, SVB did collapse. They are closed. just so massive and sexy. Okay.
That's pretty nice. So you're not passing on the price hikes over to the consumers.
Yeah, Grant, click
You
on it.
mentioned
I
partnerships
think
with
there
the
might be one
likes
left. I don't know.
Dick's, Ace, Costco.
Picked up a lot of people,
Will you
Ace. That's
continue to
awesome.
work with some of these big box type of retailers? Are you looking to expand into more?
Buys coming down here more.
We like the ones that we have. We've been very selective, I would say, with the retail partners that we have. We like the ones we have.
That might be all. I'm not sure.
With our current partners. And then we're really leaning
could have
into
shorted
our
it.
international expansion, and that channel has been great for us. Last year was our first full year internationally in Canada and Europe with our direct-to-consumer sites, as well
I'd have
as
to make a
starting
new
to
low
lean
on
into
that.
partnerships internationally. So I think you'll see more of that. But with our existing retailers domestically, I think it's going to be going deeper with our current partners.
Tell us more about the products, because last time you and I spoke, you mentioned innovation and how important it is. Isle is paddle boards, right? Chubby's is apparel, because not everybody knows.
Thanks, Cash. Appreciate
the
it.
names. Solo stoves are very popular.
Well, it's a
and
good
the
thing that Ace
kayaks,
gave you
so
membership now.
kayaks. What
Gifted
have you
one.
been doing within these
There you go.
states, and which one of the group is most
Thanks, Ace. Leaving no man behind.
that you couldn't live
Well
without
done.
it? I'm sure you
Appreciate
couldn't
it,
live
buddy.
without all of them.
So Solo Stove
The
continues to
ego on
be
you.
our
There, we're good now.
foundational brand inside of
You nailed
our
it.
portfolio. And we've got to have Solo Stove cranking on all cylinders, and it's doing so. But all of the brands are important to us, and the innovation.
If I turn on members only, you'd still be able to chat.
Across all of the
You
brands.
get a badge in Discord.
The
You can
common
jump
denominator
on
across all these brands, you
specific
mentioned
private
paddleboards
channels on
and kayaks
Discord.
and apparel and,
So
and stoves
if you're
and
not on
fire
Discord, you
pits,
get on there
is that all
and let me
these
know.
products
Message
are
me and I'll give you the
focused, and
badge.
brands are focused around putting smiles on people's
One of
faces and
us.
helping them create
One of
great
us.
memories outdoors with friends and family. So that's the.
But yeah, I'm
common
wanting to do
Chubby's makes
more,
really fun apparel that
more
makes
for
you
members.
smile.
To
Or
talk to the
kayak,
members
a
and
collapsible, foldable kayak
see what you guys
that
think.
weighs 20 pounds and is about the size of a briefcase. And of course, the paddle boards. People are very familiar with stand-up paddleboarding. And then our marquee Solo Stove is our smokeless fire pit. This wood-burning fire pit, you can sit around it for hours, not smell like smoke. Really differentiated product, and something that every time somebody uses it, they seem to love.
Maybe that's what I've heard about is
Yeah,
that fire
I mean, you
pit.
talk about the fire pit.
Stock is at
you have the
17%
pizza
dividends
oven,
right now.
and,
Good stock, good money.
Last time you were on, I just, really
Should have reverse
admired
split.
the job and work that
Thanks.
you do, because you're in Texas, the beautiful state of Texas.
I don't know about that.
Doing really cool, fun, outdoorsy stuff that makes people smile, and I absolutely love that. In the meantime, as you continue to expand, you mentioned the international
Eyes bouncing up
exposure.
here.
Obviously, you're predominantly here
I
in
might
the
close
U.S.
these shorts.
What countries and at what pace do you see the most success for your company?
Yeah, year before last, in late fall, we launched in Canada and Europe.
Be patient. Mike and Nicole from
Germany and
Canada
the
here,
UK,
though.
although we are all
Could be-
over
could be
Europe
set up for
now.
move to
We
VWAP
then
before end of
launched
day.
Australia.
Let's see what Power Hour does.
We're very excited about that market. And this year, we haven't announced where, but we are going to be expanding additional international
I
markets.
closed out of those shorts.
In 2023.
Just
In
chopping
terms
around.
of the
We'll
pace,
see.
I think you can expect us to be looking at new markets, at least 1 to 2 new international
times the
markets
next
on an
day?
annual basis for the
Oh,
coming
it's going to 2x
couple,
next day.
2-3 years.
Sorry, you can't
We
get any
believe our
drops.
international business has
Oh,
potential to be
2x
the same
drops.
size collectively
Because
as
nobody knows.
our domestic business here in the U.S. And we're super excited about the early signs, the adoption, and the excitement that customers have for our brands in these international markets.
It's great to chat with you again. I wish you continued success. I don't see exposure in Latin America. I don't see exposure in Asia. You mentioned some European countries more than others. So we'll have to wait and see, John. That was a good tease. You got us. We're hooked
sure.
until next time.
BBY
Thank you for that.
broke off the upside on
Nice
that
to
barcode
see
there.
you. Congratulations
Of
to
VWAP.
you and the team. John Maris,
See.
CEO
Thank you so much.
of Solo Brands. Thanks. Still ahead in the second half of our show, we'll look at ways to invest in real estate.
Probably
Now, how does the shift to
probably grab a
impact office
couple
buildings?
shorts before 5
High housing
when
prices
futures market
impacting
closes.
Renters. That and much
Link in
more.
Discord.
Take a quick
Click the
look
link
here.
that's pinned,
Winners and losers
or
for
it's in the
S&P
description.
500. 3863 is the level on the S&P.
Buys rallying a bit there. Bit of rally. Wow, what a day. GM explores using ChatGPT in vehicles. What? What did you even do? It's almost as good as Mercedes with TikTok. Ask ChatGPT how to drive. How do I turn this GM vehicle on? Spy's just waking up there. I'll just drive drunken on peyote. Tesla's still green. What the heck? After all that. Last night. Terrible in my hand.
846. We saw the Dow down to 31,783. The NASDAQ bottomed out at 11,789. And the Russell leading the way down over 3%, down to 1756. You know, yields are coming off, which is interesting. We're seeing that traditional kind of safe haven type tendency with bonds, Treasury futures being bought up. We've got the US dollar, which is slightly lower here as well today. But investors, you know, market here, I've been saying for a while, is a reflection of one that's been waiting for more information. Today we got more information in terms of labor conditions here in the U.S. remaining strong, wages, not really necessarily a big concern. But now that we have this information, I think the market's trying to figure out what to do with it, in addition to some of the uncertainty that's tied to this bank story that's playing out. Ultimately, yeah, it's got the indices under pressure and weighing on sentiment, Nicole.
Yeah, and as you mentioned, we're seeing this market under pressure. I think it's notable to see the VIX go to 27, 28. We haven't been in that area for some time. I know we've been up to 80 something, but in the near term, we haven't been higher in that way. What else are you watching? I mean, we know that the dollar has come down. I thought that was an interesting point. But I do think it's somewhat reassuring that we're coming up off the lows, having worked here at the New York Stock Exchange during the financial crisis. And I don't think this is the financial crisis again. But it's nerve-wracking when you see these banks selling off so quickly.
Absolutely nerve-wracking, and that's what I'm watching, Nicole, into the closes. How does the market fare, right? Can we get a bounce, or do we close, near the lows of the day. That would give a sense in terms of investors' uncertainty as we head into the weekend. And then further out, I think it's important to just not get tunnel vision, right, as we head into the close today, because we've got a very busy week next week as we head into that blackout period where we're not going to be able to hear from Fed speakers, but we will get some more information in terms of CPI. We've got the PPI, retail sales, a couple companies' names to keep an eye on that are reporting quarterly results, consumer sentiment as well, in addition to some housing numbers, Nicole. So a busy week ahead. And then, again, all of this as investors, this market's been so headline driven, so high frequency data driven ultimately, is we're all trying to figure out what comes next in terms of that March Fed meeting in a week, a week from this upcoming Wednesday.
Where's DF?
Lots to keep an eye on here. Yeah, I think some of the focal points are to be forward in next week as well.
Yeah, I look forward to working together next week, Ben. We're going to be very busy. Thank you, Ben Lichtenstein. Good to see you. Thanks. All right, now let's turn our attention to real estate, and with a hand in banking and real estate overall. Al Lord is with us, founder and CEO of Lexford Capital Management. Al, we were just speaking, you're buying apartment buildings, you're working closely with banks, raising capital to buy these apartment buildings. How has the environment been for lending, for borrowing? I mean, there's no doubt the Southeast is hot.
Right, exactly. Well, the market is essentially shut. Banks are just out of the market. Commercial banks are out of the market. The only lender in both single-family homes but apartments is Fannie Mae and Freddie Mac, the FHA, and we borrow through them at very attractive rates. But they're doing 10-year fixed-rate financing, and so it's been a great world for years and years and years since
BBBY moving up through VWAP there.
To go down.
Yeah, but what I was going to ask you next is, as rates are on the rise,
breaking the barcode.
Today they're coming off because
moving with SPY now or what?
Sort of chaos a little bit today, controlled chaos, but chaos this afternoon, and we've seen them coming off the highs. But in a rising rate environment, it makes for a tight credit market, right?
Exactly, and so a lot of the banks that we're lending from in real estate on a floating rate basis
this is setting up that hammer.
Are on the sidelines.
Right.
And so
nice
those loans that were made
especially.
in the past, at when money was free, when literally SOFR was 0.01%, they're getting killed. And that's where the distress is coming in from. And that's when you're talking earlier in your earlier segments about the banking sector.
Yeah.
Well, you know what? We're in for some bad times here, because the Fed has orchestrated this to inflict pain, to reduce inflation, and that's killing the floating rate note market.
And that's the whole thing, because
a double top here maybe on the SPY.
I mean, some of this is
underneath that
occurring
resistance
because of the rate at which the Fed is raising those rates, right?
Right, exactly.
You missed
Banks weren't
it.
prepared for this.
Right.
I mean, fortunately, what we did and what some of the smart market players did is fix 10-year fixed rate money when rates were low. And so
is that
the reality is there's nothing
First
getting
Republic.
done.
Yeah.
There's so few sales.
Someone in chat
here
kept mentioning First
because
Republic.
If you can't get floating rate mortgages, and with rates rising, everyone wants to see where it's going to settle out, and the Fed just hasn't gotten control of this yet.
And when you're trying to get mortgages and such, when you're using Fannie Mae and Freddie Mac, I mean, it's my understanding when you start with these jumbo loans, you get a much better, more attractive rate. Because we often talk about how mortgage rates went from 3% to 6%
Yeah,
to
it is
7%,
bearish.
but that's not necessarily the case. I mean, you're getting better
Guys, leave Ace alone.
on the big buys, right?
Yeah, well, luckily. I mean,
Thank you, Ace. Appreciate it, man.
When we buy apartments, we're
go enable your
the
gifted
10-year
subs.
Treasury plus
click on the
160
on the
to
box.
185 over. And so
click
even when the 10-year goes to 4%,
click
we
accept.
can get 560 to 580. That's terrible compared to US gas. But it's still doable, and if you buy the right property, then you're fixing your largest borrowing cost.
So it seems to me you're in a good spot.
Yes.
You're in the Southeast. I said hot, not meaning temperature-wise, but in an area that is desired. People are heading south.
There's
they
5
like
memberships for the
so
taking.
I
You
think
just have to
that's it. The other part
click on it and allow
spot
gifting.
Is that
folks.
it's apartment
There you
buildings
go, man.
rather than office buildings.
There you go,
a lot
Mohammed.
of people are still clamoring, work from home, or have a
Bedford,
hybrid
Massachusetts.
model, right?
Exactly.
I mean, what would you say about office buildings
Intelligent
or other
Enterprise
types
Robotics.
of REITs? I mean, we have multifamily REITs, and you have all kinds of things. But when you look at the office building part
Automate
of it,
filing e-commerce
it's
orders? That's
problematic,
interesting.
right?
Yes, and I say thank God we didn't invest in office buildings. I mean, we're thankful we're in apartments.
The ego on you.
It's I mean, I owned office buildings a long time ago, but there's more pain to come from that sector. You know, obviously.
Dude, Ace, I think you just gifted like the entire
more than a third of those loans are
chat.
floating rate.
All these
Every
people
time
that just
Fed
lurk
raises rates,
anyways.
every time LIBOR and SOFR goes up,
Awesome, man.
they're
Thank
paying
you.
higher and
I
higher
appreciate
borrowing
it.
costs. That's a big problem. Work from home is a problem for office buildings.
Right, and so while rents have been on the rise, I
The
mean, that's
ego
good
on
news
you.
overall, but are you starting to see a peak in inflation? The prices of
Yeah, you can scroll up, or you can just click on at the top of the chat. It should show a little Ace Ventura with a gift with 5 on it.
Is inflation peaking or not really?
Click on that, click
No,
enable.
it's definitely peaking.
Yeah,
It's
okay.
definitely peaking.
So the
and
Fed's getting done what it needs to get. Well,
Yes.
we know housing was the first to really turn.
Yes.
You're down
no, it's-
180K
rents are
on this
definitely coming
stock?
Down. You know, I mean, fortunately, rents are still
You
going
might
to
have
be
to
up
enable
3 to
something else in
5%
your
this year.
browser or
And so
something on. I
Fed
don't know how it
wants
works
2%
internationally.
overall number. It's going to be hard to do. There's not enough supply of apartment buildings. There's not enough supply of housing either.
Right.
And so, as bad as things have been
just
for
in
the
general.
housing markets over the last 6 months, last month, the median price was up 1.3% year over year. It was down sequentially.
Yeah, it looks like it's
December to
maybe
January,
at some sort of bottom
housing
here.
prices are still high, and they're still high from pre-COVID levels.
I mean, just dig back. I mean, we love
Yeah.
when we get a guest like
Thank
you
you,
because
Ace.
you have a lifetime perspective.
I don't know who
on
this one's
what
for.
has
Is that for
happened.
Jan? His might not
What
even
would
work,
you
Ace.
say to Jay Powell at this point? I mean, for example, Jan Hatzius today, Goldman Sachs.
You have a lot of
economist,
shares of
was
this one?
saying 4 hikes, 25 basis points each.
Oh, AMC,
and a soft
BBBY.
landing. I mean, I guess if that were somewhat articulated and transparent,
You're trying to get your money back on AMC, APE, and
what would you
BBY.
say as the price per square
180K,
foot
yeah.
has
It stings.
soared, but at the same time,
Stings.
we have a banking squeeze and somewhat of a crisis happening, at least in one part of our banking system today.
Right. I mean,
Jan is broken.
personally, I'd say let's get this over
Probably.
with now. Hike rates 75 or 100 basis points at once and get the pain over with.
Just do it.
Rip the Band-Aid off, as they
If you
say.
guys did get on
Just
Discord and
this
you're a member
over with,
now,
because this is
message
painful.
me, DM me on
Nothing's
there, and
gonna
I'll get
happen
you
until the market
get you the badge so you
stabilizes.
can
Everyone's trying to
have it
figure
on
out
Discord.
where are rates going. No one's going to borrow if we think rates are going to keep going higher and higher. We want to get this over with.
Interesting.
It's
Interesting,
tough.
but I thought some of the
All right, 15 minutes
what's
to
happening
power hour.
today is because rates were on the rise in a way that had been somewhat unprecedented.
BBBY
75 basis
starting to
points,
wake up
75
there.
basis points, 50 basis. You know, after what was it, 4 hikes of 75, that was fast. But
True,
you're
yes.
suggesting faster, more and faster.
Well, you're exactly right, Nicole. I mean, that's
Who's
the
Discord?
issue. Some players were not, whether it's real estate guys or banks or a number of different investors. Some people weren't prepared for this, and they bet the wrong way.
He
If you
freaking
had
blew up
fixed
the
your rate,
chat.
if you had
dude.
done your due diligence and
I
said,
think
all
you
right,
gifted, like, every
I'm not
single
going to
person here.
ride the free money. I'm going to fix my rates
BBB.
now. This is the cost of taking floating rate debt, and the issue is inflation.
Yeah.
And I mean, there's a spending component to it, but the Fed, Jay Powell's been behind the curve. And that's the problem. And we're all paying for it.
Get them on the horn and tell them what you
Behind
really
the curve. They use lagging data.
Said, I know you had some recommendations for folks.
You didn't want to vulgar it.
Dividend-paying type of REITs. I
know
saw
it's coming.
Mid-America Apartment Community. You also had CPT on there. Tell me about these 2 names.
Yeah, so if you look at bigger picture, if you look at the research, REITs overall have outperformed the market, both in the 4 quarters before a recession, in the 4 quarters during a recession, the 4 quarters after a recession. And so everyone's about soft, hard,
I like
no landing,
REITs.
whatever.
Yeah.
Well, you know what? REITs have outperformed the market in all cases. And so you need to own REITs. And so if you're going to own REITs, then what do you want to own?
All right,
Right
BY.
now, you want to own apartments. You don't want to
Bumping up a
own
bit.
office buildings, as we were just talking about. Office has
1209 is
further
a
to
high
go.
on that candle.
There's not enough supply of housing. There's not enough supply of apartments. And so you want to own apartments in the right places.
Why isn't Bobby Barker?
And
Yeah, I'm
that's
going to go over it in the
Southeast.
recap
You
today,
have
TJ. It's
population growth,
been kind of interesting, though.
employment growth, you have
It's been
good
in and out of
landlord-friendly rules.
barcoding and following
so
SPY.
MAA and CPT are the two.
I mean, I
the two
don't have like
stocks that
answers
have
for it, but
the best demographics and the
yeah.
best growth prospects.
It's been
and
interesting.
They're both paying a dividend that's double the S&P right now.
Right. And
the volume
and
has picked
that's
up
always a
today
good
too,
thing.
which
People
has
love
helped get out of that,
dividend payers, and as you
I
said,
think, barcode
some of
algo.
these REITs can be somewhat
Not a whole lot, but
resistant, let's say, particularly over time.
yesterday was greater,
Just
and I think
the
today
final
might
thoughts
be
on
even better.
today's news
Higher.
here with Silicon Valley Bank, and of course, you have Yellen watching this, Janet Yellen watching this very closely. But it is taking down a lot of these names, Western Alliance, PacWest, Signature Bank, First Republic. I mean, these names are falling 20, 30, 40% today. Any final thoughts on your perspective?
Yeah, I think the market might just crash next week. I don't know.
I think a lot of things were put into place and a lot of stress tests were put into place for our big banks. But we did see reaction. We saw Goldman Sachs dropping 4%. We saw Bank of America dropping. They've come back since. But final thoughts on this kind of day?
Yeah, so it's not.
I know.
You said
yeah.
earlier, this is not
bank runs.
The great financial crisis
that
we had
a
long time ago. But there's more.
Yeah, TJ, click on the gifted subs at the top of the chat, and then allow gifting.
Is, and it's the
People
Fed is certainly to
up
blame,
here.
but also we're spending too much money in this country, and we also need to get. We don't have enough workers. I mean, the other part of this is
we're actually seeing bank runs. I mean, people were trying to get their money out of SVB yesterday,
all these
and they couldn't.
apartments that we own in
So
the South, we still can't
that
hire
has
enough workers.
that has an effect on
And
everybody.
So, all this stress that's in the
Yes,
market.
you maybe should pull your money out of the bank.
To fill our jobs.
Yeah. Well, I mean, you had a lot of fiscal stimulus and a lot of folks who maybe needed it, but then a lot who were getting
There you
nice
go.
handouts and didn't mind staying
Awesome.
at home a little longer.
DJ Ace gifted you a membership.
Yes,
so
we need them
you
back
thank
in the
him.
workforce.
He's
We need them back.
gone a bit crazy
And in
today.
the meantime, we're trying to shut it. The Fed's trying to shut it down.
All right, Spy's
Al,
ripping
what a
up
great
here.
Conversation. I'm so glad you were here on such a big day. But congratulations to you being in the right place.
It doesn't work. Yeah, you're gonna have
time
to change
with these,
some sort of settings on your browser or something,
Thank you very much for being
I don't know.
here.
Might have to run a
Al
VPN.
Lord,
I'm not
founder
sure.
and CEO of Lexard Capital Management.
Probably some permissions you'd have to enable.
Still ahead, we'll bring in our panel to discuss today's strong jobs report and what it means for the Fed, the economy, rate hikes, much more coming up.
Big pop. Dude, this volatility today is great. Whew. Look at that rip on SPY. Holy crap. We will use our imagination. Is GME getting a move from it? Not even. Tesla's up 1.2%. BBBY bounced, but didn't get the volume spike like we got back here. Seemed like it maybe got turned back on with the SPY. Circles USDC, the second largest stablecoin with 43 billion market cap, has an undisclosed part of its 9.8 billion cash reserves at the now collapsed Silicon Valley Bank. Yellen says the US banking system remains resilient. We'll see what transpires over the weekend. So basement sure wanted to rip anything off. Look at that move, almost all the way back up to VWAP. Got an RSI divergence there on the hourly. I want to get some shorts for over the weekend, but I'm also such a sell-off. It could have a big ridiculous bounce. There's GMEs that'll move from it. They'll pop up to go up.
Probably going to have to stay, monetary policy and rates are going to have to stay tighter than we thought well into the second half of 2023. And that is a significant reversal from where we were just a month ago in terms of market narrative.
Chris, what do you say? You said even a soft
Yeah, I
landing
think
is
they're used up,
possible.
Jan,
That
but
makes us
I
feel
think
a
you've
little
got a
better. Tell us about
problem
that idea.
on your end.
Yeah, I think I'll be a little ray of sunshine here on a cloudy day, but this is exactly the type of report that I think creates a narrative around a soft landing as possible. You look at a strong jobs number, but yet you see that wage number, that hourly wage number,
I think he's got to fix
coming
something
down
on
a
his
little
end.
bit. And so you're getting that right mix of things that help the Fed and things that help the market. And if we can keep getting this type of situational awareness from the marketplace, although we have a little bit of a contagion today with the SVB news, but we saw that initial drop in the markets. We saw the rebound as folks got to digest this information. I think that this is exactly the kind of news that we need to keep seeing if we want to avoid that substantial recessionary type environment later on in the year. Absolutely.
Right, right. And, you know, Stephen, as Chris mentions SVB and what's been going on in the banking sector, you know, does this affect what the Fed does for that March 22nd meeting? I mean, there was talk of 50 basis points. I know it shot up during Humphrey Hawkins' testimony, pulled back.
Humphrey Hawkins' testimony? I wish I heard that one.
And what do you think the Fed should be doing?
Awesome name.
Yeah, the Fed funds probability that we're seeing, it's like as you
I'm gonna
point
add
out,
at
has
least
come
one
back
short of
down,
you
and
up.
right now, the higher probability is towards a 25 basis point increase on March 22nd. I think what you're seeing going on today in the financial services sector, it's important. We've been talking to a lot of clients today. It's important to remember kind of isolate the idiosyncratic from the systemic. And a lot of what's been going, almost analogous to what you're seeing in the layoff sector. A lot of layoffs coming out of the tech sector, given the run up that we saw pre-pandemic, but yet economy-wide, systemic-wide, we're still seeing strong labor markets. So I think it's important to say what's going on in the financial services sector today, more idiosyncratic and not necessarily reflective of what may be more systemic, which is, as you pointed out earlier, we've seen significant
That hammer candle might be a reversal sign.
Capital ratios in the banking sector since the global financial crisis, and a lot of the idiosyncratic pressures that we're seeing today don't translate into the broader economy. And so I think it's more focused on inflation and wage pressures, which to the guest's point, today the wage pressures did reside a little bit, which is optimistic.
Right, and that has been the talk, that maybe we still could do this soft lending we see it's happening, but there is concern about
I can't
what's
believe
going
how
on in
fast
the
that'll
meantime.
happen with
I mean,
SVB. That was great. That was like 2 days.
I know that was something you were looking at, Chris, when we look at the money
Regulators were in
supply.
there, and
you know, there's fiscal stimulus,
they're
monetary
done. They're
stimulus,
closing.
and in some cases, and of course, Jay Powell, very hands off, doesn't want to say,
wild.
you know, he can't control what, you know, the government's doing in the meantime.
Yeah, what a ride with them, too. I mean, you talk about that 40% increase going back to the early COVID days, and now
Almost
you have
like
a
they knew.
negative M2 money supply.
Yeah, the
That would
CEO
have been
sold
thought
like
to be
$2
unheard
million
of
worth
going
of
back,
shares a
you
couple
know,
weeks
couple
ago.
of years ago. So we're living in all of these weird
Here's the
data
CEO.
points. You know, one other tangential example to that is when you look at the net jobs number.
Yeah, if calling
so we
participate in
have
the survey today.
311,000 on the headline. And then we look at
Nice, Dink.
data
Are you just
like
doing all this
hours
trading on
worked,
your small account?
and those hours worked have fallen by 0.1%. Now, as we talk about how money dances around and how it has velocity, those two things actually matter. Now, we tend to equate about every 0.1%
Thanks, Daisy. I
of
appreciate it.
those
Can't forget
hours
gift.
worked is
Well, at
roughly
least you got you
120,000
out
jobs.
from
So if you want
lurking
to look
and
at net productivity and the way money's sloshing
saying hi.
around, you could see a net
I think we're out of
productivity of,
gifted
let's just say,
memberships.
190,000 jobs added in this report. Now, it's not a one-to-one to the 225 or so that was expected, but you're starting to see some of this pull
trade on
apart
small
of how
account.
money is working throughout
So you have
the
to wait for it to
society,
settle then?
specifically as companies transfer it
Alright,
to
SPY's coming down a
their
little
workers
bit.
and then how workers spend it. So
Might
very,
not
very
even want to get
interesting
to
data, the way
VWAP.
that money is moving
Projecting
through
that
hours
50,
worked,
but
which I think is pretty cool.
Yeah, and
We'll see.
I think we've hit all the important points.
BBY,
I'd love to keep talking,
not
but
quite
we're out of time
hitting
right
resistance
now.
from
Chris
the
Schubach,
little high
CEO
of today.
Helios,
Up.
Stephen Colano, Integrated Partners. Thank you both. That's going to do it for us here on the watch list. I'm Nicole Pedalides. Thanks for being with me every single weekday, 11 a.m. and 2 p.m. Eastern Time. Have a beautiful, safe weekend. Keep it right here. Market on Close is next.
Oh, that's true. Nice. Hourly's giving us this engulfing candle. We do have that RSI divergence on the hourly. Hesitant to get short for the weekend. Even though it's such a bearish Friday. But it doesn't mean we'll gap down. We very well could stay flat or gap up and then sell off during the day. Jeez, Ace. Alright, go enable your gifts. Daisy Jane, click the little Ace Ventura and the gift of 5 at the top of the chat. Thank you, Ace Ventura, you sick, dirty Mexican. American dual citizenship, homie. There you go, you did it. Well done. Today is Christmas. It's probably some permission settings on your browser or something, Jan, or just your territory doesn't allow certain, I don't know, permissions. Gotta be. Your streams because I can work and get my stuff done, but the market opens at 9:30, which is nice. Good to hear, Jan. Thank Papa Ace, man. Jeez, man. Tao made it. Just in the nick. Did it.
The ego on you.
Yeah, that's if you're buying your
The ego
own.
on you.
So you literally, let me see if I can show you. You actually just click the top, I believe. It doesn't show for me either. But you just click on this, I think. Yeah, and then you should be able to accept it. Or allow gifting. Should be at the top of the chat. Ace Ventura literally just raining Christmas gifts on all of chat. Alright, SPY's coming down a bit. Kind of rejected that 50 moving average. That hammer candle. Guess that would have been the sign. Now power hour actually. So it might be some volatility. Maybe it's on PC. I don't know. I feel like a lot of people are on PC. Yeah, if you went on a VPN, it probably could work. Thanks, Daisy. Good to hear. A Jan hammer candle. Just a normal hammer candle. Talking about all of January being a hammer. Monthly. I don't know what you're talking about. Jim, you still haven't enabled gifting? Click the 3 bars. Yeah, there's like 3 buttons. I clicked that on mine, it doesn't show it, but that's just mine. On the chat, so here's the chat. You might have to click up here and then enable gifting, or click here and enable gifting. Why YouTube? Why you have to enable this? I don't understand. Probably like a browser permission thing, or I don't know, Google Play services, or I don't even know why it does it. I'm trying to give you membership, man. Accept your membership, Jim. Papa Ace has gifted you the privilege of being a member. I'll accept it with dignity and respect.
Tuesday we saw that the 50 bips getting priced
in
in the
honor,
market had a bit of a different
gratitude
impact than what we would see throughout 2022, and something surprisingly hawkish or hot for inflation. Was the main
click on
story.
the little
Instead of getting
little Ace
interest
Ventura
rates
gift
higher on the
in
long
chat.
Treasury yields and tech stocks
It says
doing
5
the worst,
gifts. Click on that.
we
You
got
have to
bond
enable
yields
gifting.
actually contained lower around 4%.
If that doesn't work, then click on the 3 dots.
Long Treasury
and
yields,
enable it in there.
very limited in their upside. Ultimately, we saw them turn downward.
Did it? Yeah, we'll see about that.
And now we have a response in banks, financials, and a more cyclical, economically sensitive style sell-off than the very tech-heavy drag from last year. Now, tech's not doing great. Silicon Valley Bank is definitely.
There you go, Jim. You did it. Thank you, Ace. Appreciate it.
The
The
first
sick.
thing that stood out here in the response
Better
to Powell was the
come
fact
to
that
chat and
yields
thank
actually
Ace.
came in. Even as the dollar was up on
You
Tuesday,
can't lurk when you're being
the
gifted
market
memberships.
was pricing in a more aggressive
Oh,
path
look at
for the
you.
Fed, but that it might just be the straw that breaks the camel's back of the economy at this point. Now, why do we say that?
The ego on
Chart for
you.
regional banks is really bad.
There you
And
go.
it basically follows along with the yield curve contraction that has been consistent now for over a year. That message
Thanks
has
to
been
Sig.
one of deep concern for the economy, and these past 5 days, it seems like regional banks finally broke. Part of it is crypto-centric. It began with Silvergate voluntarily closing shop, seeing the writing on the wall. But then Silicon Valley Bank is the next step that includes some crypto, but ultimately is just a bank. Not a crypto-specific only lender like Silvergate had become. But as we move beyond the epicenter of crypto, Silicon Valley was the next step, and then regional banks overall. And the problem they have is this, the yield curve contraction. Continuing to see the net interest margin.
Dude, the more
business
egg on his
erode,
shirt.
and the difficulty of
Producers
making
not
money
know,
in
like,
lending
you can't wear
business
stripes
in
like that
which
unless
we've
you edit
had
it.
the fastest hikes in history.
Ace
So,
knows that.
Connecting these points, which may
Thanks,
seem
Trader.
disparate
Appreciate it.
at first, actually gives us a very holistic, clear picture.
Trader didn't get it.
When we have
Trader
this
enable. There's
enormous
probably still more in
speculative
there.
bubble from
Enable
2020
gifting,
to
Trader.
2021 that's now
If not for now,
undermined
for
by way of
later.
interest rate hikes. You have two forces.
Click on the little
One
Ace
is
Ventura
the financial conditions that are tightening as stock
picture,
prices have come
the
down.
gift, and then 5.
Crypto
Click on
has
that.
come down. That
Then
puts
hit enable
pressure
gifting,
on
or click on
those
the 3
specific
dots and enable
sectors,
gifting.
as we saw throughout last year. But then the continued pressure
Ace has
from
been making it
interest
rain.
rates and a hawkish
Memberships.
path from the Fed
Claim your free
forced
one.
to still fight inflation that's much too high and problematic right now means that you basically are in a lose-lose situation for stocks. On Thursday, we saw the weak jobless claims tried to cause a rally in markets as investors tried to do that bad is good thing, but it didn't work this time. So that tells us that the economy here is becoming the main concern. We really saw that come home
Thanks,
this
Tal.
week for the first
Happy
time.
Friday
really
to you, man.
Very obvious, right in front of our face.
Appreciate it.
Bad data and jobless claims. That rally failed because the market is no
Very
longer
generous,
just
thank
thinking,
you.
oh, okay, well, if the economy is weak, then the Fed won't have to hike.
We had a
That's
good-
not really
good
the
week.
issue. Even if the
Have good
economy
plans
does
for the
weaken,
weekend.
the Fed's
Get
still
outside.
gonna have to stay
Sunshine.
on the throat of inflation to keep their foot pressed down. That means that there's
Get
not
off
going to
of
be any relief
devices.
anytime soon in the yield curve for lending businesses.
coming down
and
here.
That's where the banks get slammed on both ends. The business
think I do
of
want
lending
shorts
under
over the
pressure,
weekend.
and then the business in the tech and crypto-centric Silicon Valley
this is too big of
tech
news
trade is
to not have
also under
exposure.
pressure because those assets have lost a tremendous amount
There you
of
go,
value.
Jan, you did it.
In the case of crypto, may still have plenty of value left to go to lose. Bitcoin is pretty
Did it, Jan.
quiet at 20,000. But I don't think that is a reason for us to feel good about the situation.
Well
the only
done.
reason why it's not down more,
I don't
think,
recognize
is
your
because
things.
there's
Maybe it's
just nobody
changed.
really trading it right now. But eventually, as we've seen with Bitcoin and crypto in the past, every whale has their breaking point. And when you hear
I
people
figured it was
like
another
Peter
account.
Thiel saying to flee their local favorite bank and
Your
venture
brand account?
capitalists up in flames throughout California,
Oh, it has
that
to be
is
linked maybe
going
with
to
some-
have major ripple effects that we
Has to be
haven't
linked with
yet
some kind
seen
of
in crypto.
Google.
Still a $920
Let's get nuts.
billion asset class that is. It
has to be linked with, like, maybe a Google account or something.
Zero. That's the size of
Yeah.
a top 10 stock, a
Interesting.
mega cap that
The
could
ego
have
on you.
major ways to go. Therefore, I think that there is plenty of problems
is the way.
still to be discovered, and that you just have to be very wary at this point. Valuations
The
no longer
ego
the biggest
on
Nice,
issue.
Tasty got in on
Underlying
there. Well done,
economy,
sir.
When the Fed is forced to still apply
That was
pressure,
Ace that
even
gave you
when
that
things are weak,
membership.
because inflation is too big of a problem.
BBY
Kevin,
moved up.
Steve
Now it's
Young
hitting
here
that
with me
high
this
from earlier
afternoon.
today.
We need to take us through some of the
12.20.
stuff here throughout the last couple days. It's been a bit
So
of a
now it's
whirlwind.
down
Where do we
1.5%
stand
on the
right
day.
now with some of the major bank stories.
Well, right now, let's talk about SVB Financial. Now,
Okay.
California regulators have shut down the bank, and they've appointed the FDIC to control this as a receiver. And so the FDIC, it's important to remember that they insure up to $250,000 of deposits per customer. And that's no matter how many bank accounts they've that spread into.
There you
But
go.
they say that beginning Monday, customers will be able to withdraw that money if they desire. And so now there's also a word on what's happening with the folks who have deposits in excess of $250,000. It says
Yeah, it sucks.
that SVB Financial may pay a dividend to those people later on, to customers who have those deposits, which is essentially like an
Ouch.
IOU.
So basically, if you have too much, if the amount that you're trying to get is beyond the limit, 250,000, that's not guaranteed at this point.
It's not, exactly, and that's good to, or important to note, rather. And then what do these customers do, right? But there have also been several reports of bank customers unable to actually retrieve.
I think all the
from
banks are going to
this
feel the
bank as
heat.
well during the day. There were reports of the website not working as well.
Hold on, here it is.
And as you said off the top, major VCs telling their clients, their businesses that are in their funding
might grab a short here.
portfolios to pull their money out of these banks. Even Y Combinator President and CEO Gary Tan, he warned his network of startups that, hey, listen, solvency risk is real.
No,
And
sold
he
them.
also implied that they should consider limiting their exposure to the lender. That was earlier today. He might be saying something different now
Normal.
with the rest of the news here. But looking forward, we're looking
Taryn.
to see how these
Jeez.
customers are going to be made whole.
There might be
How
another one
many
in
of
there.
them will actually be made whole as a result of this.
Okay, so
Hearing my
this
blood
is
flow.
now has quite a bit to play out still, and the initial potential of the assets themselves kind of stabilizing.
SVB is
doesn't
crazy.
seem like
Taryn, if
that's
you
the
haven't
case, as
enabled-
they tried to sell
or maybe
shares,
it's gone, I
tried to
don't
come
know.
up with some cash,
God.
didn't work. Now it's a question if somebody's going to buy them. What do you think, Kev? I mean, kind of brings back feelings of 08 in some sense. Not to be too alarmist, but it seems like that's really the only thing to kind of compare it to.
What?
Out 297 billion in cash, 880 billion in cash. So the banks, as we know them, the large
grab another
banks
short of
that
VWAP.
will in ways absorb a lot of the positions from SVB. They've got more
Definitely
than
a
enough
record day.
liquidity. You know, the 10 major banks, they are not
First
at
first
risk
bank
here.
collapse.
So that's why
And Happy
Morgan
money's
Stanley
looking
came
good.
out and said that the
Come on, the bank
pressures
runs.
facing SIVB are highly idiosyncratic and should not be viewed as a read across to other banks. Goldman said this is an opportunity to buy the large banks in this case. So,
Yeah, that's what it sounds like.
Oliver,
Oh, there's a
here's
pop on
what this
BBBY.
does.
Now BBY is green.
This week has been not
Up 0.5%.
record-setting, but it's been significant.
124.
Why? Because a week that we started with the VIX around
This
18,
is looking good.
and everyone
I
talking
like this
that the
close
VIX
of the
felt
week.
cheap.
Green
It's gonna
hammer
finish
candle.
the week in the mid to high 20s,
Bullish MACD.
which
If
almost
we can close
traded
at
29
least this high,
today. And what it
that's a
tells
good
us
sign.
is volatility
I think Ace did it too.
is
I think you're
one
right.
headline away, Oliver. Always one headline away. That's why you always got to be nimble, always got to be ready, and always got to be managing risk in this market.
All right, well, there can't be that much fear
Spread
about
terms
the
in
banks.
5 accounts,
Wells
it's
Fargo's still up on the
1.20.
day.
0.25
The
million
recent
guaranteed.
winner of the last 6 months, JP Morgan, also pretty firm. Overall, the market's pretty stable. To the point about it being an idiosyncratic thing, the market was not thinking that earlier today.
Yeah, put
now,
some
maybe
SI and
it's
CS.
kind of waffling on that subject.
Sorry, the
because
JP
First Republic Bank was down like
I want to listen
45%
to this
at
really
one
quick.
point. Just an everyday regional bank that's in all kinds of states, counties around the nation. But that's come back now. So now that's only down around 10% on the day. Signature, though, down pretty big. That's more of a crypto focus. So there is, it's like the closer you get to crypto, the bigger problems you got, Renita.
It is, and briefly, so First
Green at
Republic
3,
was
that's
one of
what
the
I'm seeing.
banks that
That's
one
true,
of the VCs recommended that their clients go to. So it makes sense that it is rising. However, Signature Bank was the other major crypto bank that came before with it when it comes to holdings. It was ahead of Silvergate
Ace.
Capital.
Okay.
Now we know Silvergate Capital.
Guys,
it
thank
wrapped
you,
up its
Ace.
Operations,
Enable
winded
gifted
down,
subs
I
if
should
you
say,
haven't
their
already.
Operations on Wednesday
Click
voluntarily. Said that they will repay
Ace Ventura
all of the
gift
deposits. And today, this is the other
top of the
major
chat.
crypto bank, and it has way
Click on
more
that, click
assets under
enable.
management. So as of last year,
So you can either click on
well,
the
before that, actually, Silvergate had about
Ace Ventura gifted subs or gifted membership. So either click on this.
or digital
There you go,
assets,
John. Or
which
click up on
dropped
this
last year
and then
as a
hit
result of the
enable
FTX
somewhere if it says it.
situation.
Or if you don't see that, then
ended
click
at
on
about
this and hit
$3.8
enable
billion.
gifting of subs
And
or
then this
gifting
company,
of memberships.
Signature Bank had about 114
The ego
billion.
on you.
So it was larger when it
Jeez,
comes
man.
to the amount of deposits that
crazy.
it had.
You're
And it's
freaking
actually
crazy.
headed for its worst day ever. And so it's
Name is
really
Greg.
a huge
Click that green
fallout.
thing.
It's likely
The
down
ego
on
on
this
you.
market sentiment as well, as just feeling the
Turn over
pain
YouTube dark mode.
specifically when it
Leave
comes
me
to
alone.
crypto as well, since Silvergate did wrap up its operations or announced that it'll wrap up its operations earlier this week.
Okay, maybe this will be one of those weekends where we see if folks are trading
I
crypto.
think
around
we've
the
got
world.
everyone.
It's helpful in that way. We can kind of see where sentiment goes. But
128
time will
fall back
tell.
to 110.
The big highlight next week is going to be inflation.
Maybe.
Kevin, so
I don't know.
to kind of put this all together.
We'll see how today
here
ends, but
with,
it's looking pretty
our
good.
Main boogeyman in the market, which is inflation.
It's like a
It looked
flashbang.
like on Tuesday we were getting ready for 50 bips. Now that's been priced back out with this huge bond rally. To me, it definitely resonates. So this crash as being potentially a reason for Powell to calm down and maybe stick with 25.
There you go.
What
You guys
do
can all
think?
thank Ace
How much
Ventura. He just
depends on
gifted a
what
bunch of
happens with
memberships.
inflation next week.
Pulled you out of your
Listen, I
lurking
think Jerome Powell cannot
coffin.
ignore what the bond and note market
Big Hugs
is doing
made it.
today, Oliver. I mean, if you look at this move in the 10-year yield, it is significant, the move down lower in the 10-year yield. And frankly, Jerome Powell has to pay attention to what it is. You've seen volatility just throughout the day in the chances of a 50 basis point move. That's been
All right,
all
so
over
BBY
the board.
broke
It was as
the little high from
72%
today
yesterday. It got
and
down as low
made
as
a new high.
in the low 20s today at
Yeah,
one
new
point.
high on the day. So we're green.
It's going to definitely cause.
This will be the first green day on
Oliver,
BBY
It's important
in
that your viewers understand how we finish
like
the day.
7 trading
the
days?
speculation over the weekend will lead into Monday morning.
8 trading days?
And then we get to CPI on Tuesday, PPI
Inverted
and
hammer,
retail
bullish
sales on
MACD,
Wednesday.
setting up
The
potential for an
volatility,
RSI divergence.
The roller coaster ride is
We see a pop up to like.
Enjoy your weekend, everyone.
Right. Yeah, for sure.
We see a
Next week
pop
gonna
up
be,
on
pretty
Monday, then
nuts,
we will have
all the
that
inflation
divergence.
Data. All right, Kevin Hanks, Renita Young, thank you very much. Appreciate
go
you
up
guys. All right.
at last this
Let's
week, huh?
continue the conversation with Michelle and Clover joining
It's
us.
still a red
from
week,
Global
but
X ETFs. Michelle, you guys have tons of different products, all kinds of different themes
Good to hear,
and
Ace.
sectors.
I'm happy to hear that,
Where
man.
do you see the flows? Where's the action in your guys' suite of funds this past week?
Oh, you actually are pulling up other
Thanks,
accounts.
Oliver. It's so
Thanks,
good
Jan.
to be here. So obviously Global X is an ETF provider. We've got around 100 ETFs and around 40 billion in assets. A large amount of our assets are in the thematic space as well as equity income. From my perspective as a portfolio strategist, we're currently very focused on areas that can benefit despite the challenges in the economy. Obviously flows, especially in the challenges of last year and then even into this year, have mostly been on a little bit more defensive areas as well as into the income
Yeah, if you guys
side.
aren't a member
There
yet,
is a growing
Ace is gifting a bunch of
interest more into
memberships. There's still some there, I
thematic
think.
areas, as focus shifts to economic
Get ready for the
growth.
flashbang.
What
Click on the green
will
box
be spared
with the gift and the
if
5.
Our yield curve keeps inverting. If that signal tells us anything that it has historically, it means we're in for a doozy of a recession
And you
beyond
can get a free
what we've
membership.
already experienced.
And then
by
jump on our
some
Discord if you're not already, and
definitions.
I'll give you a badge for
How
that
do
as
we know
well.
what's going
Click
to-
this right
to
here,
make it through
and then
there
hit
until we
enable
know the
gifting.
nature of what
Or
causes
click
it?
here and hit enable gifting.
Sure. So recessions can take a
And then you
very
can thank
long
Ace
time
Ventura.
to play out. This slowdown has certainly been one of the most long expected, constantly
Alright,
always
Secret.
just 6 months away. So it's very difficult to know when it will actually happen. Obviously, the
Yeah,
movements
just
of
DM me on
today,
Discord.
do lead to a lot of concern, particularly the movements in the 10-year Treasury yield. But at the same time, when we're looking at the market, we're trying to see what are the areas that can benefit.
Sounds like a party there. Do you hear the Fridays? The Friday at the stock exchange?
Ideas like cybersecurity stand to benefit because companies have to invest in this area.
There you go,
going
Foghorn.
forward. And there's increased
Dude, you
focus
pulling out the
on
lurkers
ensuring
heavy, Ace.
data security. And so that's a key area that's likely to benefit even if the economy is a bit slower.
I certainly see the logic behind it, but then
Got
I
a
look
few
at the
left.
past
More
year,
memberships to be
2022,
gifted if you guys
those
haven't enabled
thematic
it.
growth
Do it, do
ideas
it.
were the biggest
Do it.
problem in the
Do it.
market. Investors repricing those valuations, so it seems like that's only really a bull case if that valuation repricing has been done. Do you guys think that's the case? Was last year the cleaning of the froth in these tech growth themes?
Well, most themes went down altogether. So last year was
Fortune
certainly
gang.
a period where everything goes
Oh,
together.
there's a little flush
but
on
if we
SPY.
look back at prior trends, you
Jeez,
first
so
get the
volatile.
period where everything moves together, and then people can become more selective.
I don't know.
in
Indo
areas to
Energy
focus in.
Group?
And we believe
know anything about this.
cybersecurity is really an area that does have strong tailwinds.
Thinking about how some of the leading
the-
cyber names
play
and
here?
cloud names have traded, it seems like there's some of that separation of wheat from
You can
chaff
chat on
happening.
here when I
look
go
at a
members
stock
only.
like Oracle, for example,
And then
that
on our
crosses
Discord,
over a
I
lot
give
of
you
different cloud
special badge where you
services,
can get
including
access to the
security.
private channels.
The shares are
and-
up 10% over the past year.
Yeah, just kind of get seniority.
Then I look at the
But
cybersecurity
I'll
fund
probably
for
have
your
more,
guys' group,
add more
BUG,
stuff to it
BUG,
when we talk to the members and
down
see
30%.
what they'd like.
So what's up there? I mean, can you build an ETF in a period of separation of wheat from chaff?
There's still
if
there
only
free
2 or
memberships
3
if you guys want them.
companies are
Just
going to
enabled.
be
We
successful
give you
here?
memberships.
Well, there is a wide variety of
free.
performance
Ace has
within
already
an
bought 'em
ETF,
for you.
but obviously the ETF wrapper can help with positioning in a place where it's more difficult to choose which is likely to be the best performing in a space. Obviously there are certain companies that did a lot better. The larger companies had a stronger positioning, and those did a lot better.
BBBY just
Year to date,
break even
cybersecurity
on the day now.
has had a lot more tailwinds with it. With the
Okay,
market
I gotta
being a
do
little
my
bit more
video.
tech-focused, but obviously
Guys, enable the
there's a lot
memberships.
more
I gotta cut it
challenges that we've
off.
seen this
I
last
don't know.
week.
I think this will carry over to
Trade
next stream,
certainly
I'd
has
imagine.
done better in 2023 with some of these
The heck?
comebacks in stocks like Palo Alto and others. The ETF's up 5% to kind of bring it into the
Yeah,
conversation
I've had
from
memberships.
this week.
Ace Ventura
When
gifted a
Powell
bunch, Max
started
Bear.
talking
You just have to
about
accept it.
hiking
Just
more, does that
click
put
on
these
the
types
green
of
box
companies
or
under
click on it.
threat? Do you think they will be
and
under
allow
pressure
gifting.
if
There you go,
inflation sticks
Emperor.
around for too long, too high?
It's an essential service going forward. And so yes, from a company perspective and a funding perspective, those are always areas that you focus on, but it's a business where top line is likely to grow, and as that top line grows, that's where you're going to scale. What's really important to think about within a cybersecurity business is that this is recurring revenue, and that's why it's an area that we believe is really important.
And then click allow or accept
really good from a business standpoint.
gifting.
Got it. Okay.
If you don't see it there,
Michelle.
click the three dots, hit allow, accept gifting.
Michelle
Thank you very much.
Portfolio strategist at Global X ETFs, joining us from the the New York Stock Exchange, rather. All right, so when we come back, let's catch up with Todd Jones, CIO at Greatest Capital. We're going to talk a little bit about what we learned on the macro this week and think about inflation next.
Yeah, you should have to accept the gift or enable. Whoever gets it first can get it. Expire? What the heck? The gift expire? What happens then? You're already a member, Emperor. You've already done it. All these people I didn't know were listening. Lurkers. Zombie viewers waking up. I can give you the badge too on Discord if you join our Discord. You can have access to private channels and yeah. Won't let you. Someone else had to use another account. What they have to do? Maybe VPN. Kind of hassles. Jan, what did you do? Just you have to use a branded account, so account that's connected to like a Google or a Gmail or something. Any account that's connected to a Google account. I think you've got them all A's. No, yeah, I think, let's see, yeah. Because I don't think those people were able to do it. Okay, there you go. My next pair got it. Nice, my next pair. Congratulations, man. You guys can thank Ace. Thank you, Ace, you legend. I was going to name my boat Tom Vigor, but, you know, Ace Ventura is pretty high on the list now. It's getting up there. Work here is done. Yes, it is. Absolutely. I need to cut off. It's Friday. Hope you guys had a good week. It's been exciting. Do a recap video, but it'll come out before market closes. My plan is probably just to short stuff. Basically, I don't think this is over. Like, we could have a bounce on Monday, but we also could have a gap down of a couple %, and I'd like exposure to that. So yeah, that's basically my plan. BBY, this is looking really good. I'm not buying in more at this point, but if I did want to buy more, I would definitely be scaling in some today. So that's my plan, so you can know what I'm doing, I guess, or know what I'm thinking before market closes. But yeah, I'll come out with a recap video, show you the trades and everything. Some TA. BY's getting a little squeezy there, up almost 1.5%. That's dope. Thanks, ZZ. Thank you, Emperor. Thanks, Max Pair. Thanks, Jan. Thanks, Taryn. Thanks, Daisy. Hope you guys have a good weekend. Follow on Discord or on Twitter at HappyMoneyYT. Maybe do a Twitter Spaces. See if President Biden will grace us with his presence. There we are. Yeah. Thanks, guys. We'll see you on the recap. See you on Discord. Thanks again, Ace. Appreciate it, man. Very generous. Look at BY ripping from your generosity. Ask why I just got one. Nice. Have a good weekend, Gene. Thanks, Dennis. Thanks, Gene. Thanks, Ask why. You guys, oh my gosh. Holy crap. 4%. Look at that. Oh boy. Can I end with this? Going like this? I'll tell you, the move up's going to be fast. Just for a bit, and then it'll probably settle down without a news catalyst, I feel like. But that hammer is beautiful, that bullish MACD. And now we're getting this divergence. Yes, yes. All
The
coming
ego
together.
on you.
Okay. All right, thanks, guys. We'll see you on the recap video on the premiere. Peace out.
The ego on you.